my backup recording. All right, and I see your chart.
Mm-hmm.
Okay, and you're ready to start, right?
Sure.
All right, I am. Okay, just
And
start.
at 8:30, I'll just close myself out, right?
Yeah.
Okay. Maybe a minute before or something. Make the switch easy.
Yeah, that'd be good. Or I'll cut you off if I need to.
That's always a bad thing.
Yeah, yeah. But okay. Um, so I'm starting now. All right, hi everyone. Welcome to this episode of Analyze Your Trade. We got a great lineup today, and just a reminder, of course, all of these presentations are for educational purposes only. Trading is not suitable for all people. Please consult a financial advisor and only trade with money you can afford to lose. And and here to open the day for us today is Jim, the option professor of OptionProfessor.com. So I'm going to turn it over to him.
Okay. Good morning, everybody. If you're on the Pacific time, it's a nice earlier part of the day. I'm Jim, the option professor. I've been doing options for decades and decades and decades. So I'm fairly knowledgeable in the area, and I'm going to share that with you here today. At the end of the broadcast, I'll explain how you could continually get my information sent to you on a weekly basis. And right now, today, we're going to go over analyze your trade. So I would like you, if you have stocks you want me to take a look at, to put it in the chat box. But before we get into all that, I'm going to share with you my views. I'm having a fabulous day today. I hope you guys are having a fabulous day as well. I'm going to go over some of the stocks that have been doing well with me and why I thought they would be doing well. And I'll share that with you. But a couple of things going on that I've been talking about on my weekly updates to all the alerts I send out is that inflation is overrated. And why is it overrated? Because we know that the housing prices are being discounted all around the country. So housing inflation has just left the building. Secondly, we know wages are going nowhere. How do we know that? Because we saw the jobs report on Friday. How do we know that the inflation numbers are at least muted, if not supposedly going down? Because we just got CPI and we just got what? The PPI, right? So a lot of talk about rates going higher, a lot of talk about things going to get very bad as far as that's concerned. But right now, the risk seems to be that if these numbers continue to fold, that we might go from concerning about interest rates going up to actually seeing yields go down. Now, who'd like to see yields go down? I guess everybody, but particularly the government. Why is that? Because they just issued an auction on the 10-year and the 30-year Treasury, and the 10-year brought the highest yield since 2007. The 30-year highest yield since 2001. Now, we're talking about a country that has $40 trillion in debt, and the spending level right now is faster by a lot than it was last year. So the debt is huge, the spending is huge, and the interest on the debt is off the charts. And the expenses are going up. Medicare was 174 billion last report. It was 130. Big jump. And then the interest on the debt is at 140 billion, and it's the fastest growing number in the budget. Okay, so do you think Besant and Warsh and Trump would like to get the rates to go down, particularly with the the election coming? Well, it's possible they'd like to have that, and there's possible that things are decelerating because credit card data is showing the consumer spending on their credit card is backing off. So the fear of monetary tightening may go off the table, but slowdown figures could hit in the next 2 months. And that because we're going to be way over our skis at that point because we're making new highs right now, all-time highs, right? So we could be well over our skis by the time we hit September and October. And those are the months where the vulnerability may come into play. I was thinking 7,800 to 8,000 where we are now might be about as far as we get on this run. And then the vulnerability of a pullback, maybe as much as down towards 7,000 is possible. So let's take a look at the numbers. I just wanted to run by a few things there so you could, because again, some of the things that drove us up here, like the big beautiful bill, the depreciation on all the spending, the incentives to spend all this money, tax refunds were up over 20%. They're all in the rearview mirror a bit. So that's why, like I say, the risk of extrapolating how great things are now with earnings might be overdone. And if it becomes overdone, that's how you get a correction. So let's take a look at what I look at on these things. On the S&P, I'm looking at the SPX because that's the cash to me. So again, we're at 7,800. We went as high today so far as 7,816. That's all-time highs. Okay. Now, if you look at this, and as you can see, the moving averages are well underneath. So if we go up to 7,900 or 8,000, again, you're going to be further away from these moving averages. And that, of course, could give you some type of a reversion to the mean in September and October. Not here yet, but you got to at least have an idea what might be happening down the road and why. So again, this is where you'd want to be looking to where you could protect some gains somewhere between here and 8 grand on the S&P. And if you don't know how to use options as a protecting device, meaning selling calls or collars, that's exactly what I know a lot about. And I invite you to contact me and ask if you have any questions on that, because I'm very familiar with how options can be used to protect portfolios. And of course, you know, when you get a stock like Micron Technology, you go from 1,300 bucks down to 700 bucks. There might be a few people who wanted to protect that 1,300 bucks, and if they didn't, that wasn't the greatest thing. So again, this is what I'm talking about, where the future may lie and getting planning for it. Let's talk about the other numbers here, though. If you're looking at the 5-year graph, can you see here where the blue line is? So if we went up towards this 8,000, 7,800 area, and it did roll over, can you see the two logical spots for it to stop would be 7,500, where all these highs are, and then down by the blue line, where all of these highs are. So that's your destination if and when we get any signal of rolling over. And that's the kind of dip that could happen to your portfolio if you don't do anything about it when it's way up. So that's why I'm just trying to bring that to your attention now. I've been very clear that these are the indicators that have had me bullish since May. This is the VIX. And as you can see, the VIX is very low now, which means what? Volatility is very tame. And what does that do? That makes all the big money. Who's the big money? Family offices, institutions. It makes them comfortable applying capital to the market because, again, if the VIX gets above 20, like it was back here, right? You have a buyer's boycott. Why do you have a buyer's boycott? Because who wants to put billions of dollars into something that's this unstable? I'll tell you who, nobody. And that's why the stock market tanks when it happens, right? So we got to keep this thing under about right now on the short run, keep it under 17. Definitely keep it under 18 to 1950. As long as we're in that range, volatility is under control and we're probably fine. Okay. And that's why I've been bullish ever since this thing went up here. Well, basically, since it's failed to be able to hold above 20 at all, since that purple line's been controlling us since April. Because you see, the majority of activity has been under the purple line, which means the majority of the activity has been positive for stocks, which means you should be positive for stocks, right? Right. Okay. So now let's go over to the other thing that I like to watch is the percentage of stocks above the 200-day. Now, this thing has definitely been helping me since May because you see, in May, it bottomed and it's been rising ever since. And I've been telling people that it looks like it might want to go to 66. And I told people if it's going to go to 66, we're going to go up and make new highs, which is exactly what's happening now. So again, the growth, this is called the market broadening out. You heard there, oh, the market's broadening out. That's what they're talking about. Okay. And this is very bullish. You see what happened when in the first quarter, how the stock market went in the tank? Way down, right? And if you want to know what happens when it really tanks, look at what happened in April when Trump was on the front lawn with his 500% tariffs, and we went down to 4,800 on the S&P. So this baby here, when it folds like a lawn chair, you definitely want to protect your portfolio or you want to be out or puts. Okay. But right now you can see it's very constructive looking, and that's why the market may continue to go higher. Okay. Pretty simple. All right. Now, basically, we are looking at the last thing, which is interest rates. And this here is a little bit more dodgy, but like I told you, the yields are coming down. You see it went up to 475, right? Let's put the RSI up here, see if we get anything else. Again, interest expense is killing Besant at the Treasury, and it's hurting Trump. And so the bottom line is that these guys are probably going to try to figure out how to bring these rates down. Now the rates are still in an upward trajectory. That's still an uptrend for yields. Okay. This guy here, that's still an uptrend for yield. So I'm not saying they're out of the woods by any means. This thing is still an uptrend in yields with the possibility of spiking up to 550 for whatever reason. But if we were to get under here where all these averages are converged at around 430, and then if we ever take out 4%, these yields could fall like a stone. And that's what obviously Trump, Warsh, and Besant are hoping for, that we'll break that 430 and then the yields will drop. If that were to occur, that obviously would help the stock market valuations dramatically. And I'm keeping an eye on this thing here. Now, you should get the prospectus and get a full understanding, but this is called extended duration, and it's a zero coupon bonds. And look at that. It used to be 190 back in 2020 when rates were very low. Rates have risen dramatically, right? From zero interest, 1%, 2% mortgages up to 6. So these things get murdered during that. But again, if rates were to ever drop down towards that 3% area, this thing would have a very significant jump up. So you should get the prospectus, read into this thing, but it is an interest rate play that's quite interesting because as you can see, it's right at the lows. And why wouldn't it be? I just told you the yield on the 30-year bond is at a 2001 high. That's 2001's a while ago, right? So again, that's why you're here down in this area. So that's just something I thought I'd throw out there in case you're looking for. Now again, that's a very, very aggressive vehicle. You definitely want to know because look, people who bought it up here, they're getting wiped out. But that's not your problem down here. Your problem down here is, are these yields peaking? And if they're peaking, this thing would be probably near a low point. Okay, so that's a little bit of a tip for you on that. All right. So anyway, let's, if we could, start getting into some of these stocks that have been treating me well. Now, these are very interesting short term here. I'm going to go over some Mag 7s. On Google, you can see it's in an uptrend. Can you see right here? If it can hold the blue line, which comes in at 335, and it is holding pretty good or it's right in the neighborhood of the green line. So if it can hold here and then get above 355 and 360, it'll go back up in my view. So I would keep this on your docket because Google obviously, when it has a correction, sometimes it goes back up. So you see it come down here, great time to buy, make a good run. Come down here, 320, 340, 335. Is it a low? If it breaks above 355, 360, it would be. Keep an eye on Google. Next one is Apple. Apple, again, could still come down to 280. Of course, that high right there would be support possibly, and that high was 280. So 280 is a huge number. But it also has some support, you'll notice, in this area right around here, because the high here was around 302, and guess what? The low here is about 300, right? So if we get back above 315, that would open the door to become more constructive on Apple. So keep an eye on Apple. Meta. My belief on Meta is very simple. I believe that this is the low because this blue line is on a 20-year graph is pretty strong. It peaked through there, but look what it did right after it got back above. And it just tested it again. I don't think it's coincidence that the blue line came in at 564 and the low was 560 essentially. So again, keep an eye on Meta because it used to be an $800 stock. And 550 is obviously a very key area. The next one is Tesla. Now, this one I'm very keen, had been very keen on, and I'll show you why. You see, it came down to my blue line. You got to take in my world. I got to take a shot when it hits these lines. So again, 300 I thought was a good value, and basically you can see that it's been pretty good to be long at 300 so far. I don't know. It looks like it could go up. If you start seeing it go, would it shocked if it went back to 400? Wouldn't shock me at all. So again, but I did think 300 was the place to take a shot, and it has been. Okay, so what about NVIDIA? I was friendly at 190, 195. You see this? Where's the number? Number is 194. You see this? The number is 193, 197. And you see this? The number here, 190. This was your neighborhood to load the wagon. And right now it looks like, it's trying to accelerate to the upside. Again, I like to do things at the right time. And again, this was the right time. And now you get paid if you do things at the right time. Let me show you some other things that have been interesting to me uh, lately. This is on computer, and it came down here. I will show you right there. So you got to take a shot in my world. Another one that came down, Akamai, came down here, 110. You got to take a shot, right? Then you go into SMCI. SMCI at $30, you got to take a shot. Now it could run into some resistance today, right? So if you did buy down here and you want to take some chips off the table, wouldn't argue with you. But if it gets above here, then the floodgates can get open. And this company's one of their problems was their earnings were not very good. I mean, their margins, and they've improved that. Let me hustle through some last ones here for you. I thought Dino looked like a pretty good deal, and let me show you why. Dino went right down to the line. You buy it in the $80 range, and obviously you're doing pretty good. So I try to scan and keep track on what I think looks pretty good. Um, Hood, right down here at $85. Could be running into some resistance here, but between here on short-term call options, you get a pretty good bounce. There's others, but I did want to get to some of your stuff. So again, one other one that I thought looked great that was thrown out for nothing because it's in the industry called cybersecurity. This guy here used to be 340. It comes down here to 120. That's the kind of stuff I like to look for. You're getting a turn. The call options are cheap. And now you go from 140 to 180 and they're not so cheap anymore. So that's the kind of stuff that I'm looking for, stuff that might be turning. And of course, on the software stocks, that's definitely been happening. Another area that I'm looking closely at is crypto. Okay. Anybody want to have a look at chart? Here we go. What do you have here? APPL, I just went over. Any other stocks that you guys want me to look at here? Mister, yeah, okay. This is a good one to talk about. My belief system is pretty clear. Let's start out with Bitcoin here. Hold on one second here. Bitcoin. It helps when you spell it correctly. Bitcoin. Okay. Here's my story on this. Back in 2024, right? We had a halving on April of 2024. This is where Bitcoin was happening. You're supposed to have a rally cyclically for 18 months. Well, between here and 18 months later, which is October of 2025, we're supposed to peak out. Well, it looked like it happened pretty good. Now it's supposed to have a 1 year drop called winter. Winter would end in October, plus or minus, right? And so right now we've come down into this area, and the 200-week moving average is where Bitcoin generally bottoms out, which comes in around 60 grand, 61 grand ballpark figures. Can you see we stopped right around that neighborhood? Now, I don't know if there's another leg because this is not an 80% drop. And historically, it does go down 80%, which would take you down to these highs over here, which is 30 grand. But because of all the difference that's going on, and the 200-week average way up here, maybe it's not going to do that. So if in fact it's ending here, the winter, I mean, you see cut downs by the crypto companies. You see the ETFs outflows have been huge. You can see people have lost their shirt. So obviously this is how a low is made sometimes. So if that's true, Couple of stocks that you could keep an eye on would be one that the gentleman is looking for, MSTR. And MSTR right here might make some sense that it might hit a low. So where's the purple line come in? It comes in at 76. What's the low been? The low has been 80. 80 is not so far from 76. So this is a neighborhood that I would monitor very closely on this stock. If it breaks and we're going to go down to 30,000, there's your gold line, and that comes in at 42. So that's the two numbers I'll be looking at. Can we hold this 75, 80 area? And if it can't, the next line down here. Now, this thing used to be 550, right? So it's certainly been discounted. Why? One of the reasons is that people were shorting the stock because the value of their Bitcoin was way lower than the value of the stock, meaning there was a big premium on the stock. So what they thought was, we'll sell the stock short and then we'll buy Bitcoin and play the spread. And that worked out pretty good. But at some point, they'll all be trying to cover it because they have to come out at some point, right? And when that happens and the market maker is the only seller, then the market maker, as always, will raise the offer to take in all that volume when and if it happens. I don't know if it's going to happen then, but the RSI here was 26, right? And that was when we were at where? 140, right? 150. Now we're down here and the RSI is higher. That tells me that the selling might be drying up. So am I constructive on this thing? As long as it stays above 80 bucks, right? And of course, if it starts picking up steam, all the averages are converging. And when that happens, something big generally happens. So where's all of my averages? They're all at 96, 95. Where's the stock? 96, 95. So if this thing can start breaking out to the upside, that's going to be your get out at 95, right? Because that would be your support. Now, like I say, what's it doing on a 1 month basis? It's trying to turn up, but it's gotta, like I say, it's having a hard time holding gains. It goes up, can't hold its gain. It's going up, can it hold its gain? Well, it's already 99 back to 96. So again, it's getting some closes above 99 and 100 would be very helpful, and getting these lines to really point up. That might happen next week, might not. Keep an eye on this though, because the story might be changing. And then finally in this area, this is Bitmine. And again, this one here looks like it might have bottomed out at 13. This is the one that Tom Lee's the president of, and he creates a pretty strong story for it. This is involved in Ethereum, and Ethereum is what? It's the backbone of some of the blockchain business and also stable coins. Blockchain and stable coins doesn't look like it's going away, and the adoption and usage looks like it might increase dramatically. So if the crypto winter ends and the use of the Bitcoin and excuse me, the use of the Ethereum backing blockchain increases, this generates cash flow through staking, and that could be an increasing cash flow. So what I thought might be a reasonable thing to look at is to look at something for February of next year and look at something in the 20, look at the, 20s or 360. I thought 25s were a pretty good deal. I like to do things in the $200 range. And look, the open interest is pretty good. So this number here, if this thing turns, it could be a fast turn. If the winter ends and the word gets out, there's a lot of volume that could hit in a market that might lack liquidity because all the sellers have been gone. So the bottom line is I thought that might be something to look at. That's a limited risk option for the right to buy it at $25 until February 19th. If winter's not over by then, maybe it's not going to be over. So again, that's your limited risk. And that would be something to take a look at if you wanted to have some established position in the Bitmine company, just to give you an idea. Let's see if anybody else has any other questions here. ASTS, let's go. All right, I always look at 20 years out, and I can see it's down here, very good support area. So if I wanted to be bullish on this, I'd be bullish right now. And I would be concerned if it got under 54 bucks. Whoa, 54 bucks? No. Yeah. Well, hold it. Well, yeah. So you're pretty far away. Again, the time to have hit this thing was down here in the 54 area. Let's see what it looks like up here. Now, like I say, if it gets above the blue line at 80, that would be fabulous because that would indicate we're back on the upswing. You see, you got resistance up here. Remember, I told you if it gets above 80, you'll be in the open field. You might not get through 80 because you got three linebackers waiting for you right here. So you got to be careful up here. The time to hit it was, again, near this 50 number where you had some support. And this is why, if you did that and the options were very cheap down there, that's why you're making some dough on this move. And then here again, what did I tell you about 80? So you know where the resistance is. You know where the linebackers are, where you can't get into the end zone. Here's the end zone way up here. Okay, so that's the story on that one. If that's Lunar and stuff, this is another company that's on sale. And this is called Intuitive. Used to be a $48 stock. This is interesting to me because, again, it's on sale. And it does look like it's trying to make a turn. So it must hold 14. And then if it gets above the gold line at 18, then it opens the door. So those are your two numbers here. You want it to hold 14, you want it to get above 18. And this thing obviously had a history of being a lot more expensive than it is now. Let's see. All right, we're getting to the end here. I only got a couple of minutes, so I would like to, if I could, invite you to go to. David will have a link up there, so you can send me your email and contact information. What I have here is a three-prong available thing for you. When you get our options alerts, you get three things. As soon as you subscribe, you get your receipt and you get a 6-hour course on options that myself and Daniel from Trading Indicators put together. That's normally a $395 value, and you get it for free because it's 6 hours. And again, that comes right with your receipt. So you're ready to learn right away. Second thing is every Sunday night, I send out an alert and I what? I go over some ideas. And then you get an idea how I try to find my ideas, right? So I think some of these ideas obviously have been outstanding. Not all of them, okay? So that's what you get every Sunday night. You get ideas. And you get a rundown of what's going on in the world because I'm following this stuff anyway. Why not share what's going on with the dollar, what's international markets, the bond market, whatever, right? Okay, then the last thing is the key. You get my cell number and you get coaching. Now, if you do the yearly, you get 8 hours of coaching, which is at $200 an hour, a $1,600 value. Again, I've been doing this for decades. I know a lot about options. I can help you with what? Strategies you're working with. I can help you with what? Things you're hearing from other sources. And you might want to send them through me to see what I think as an opinion. But the main thing is you can contact the guy who wrote the letter with any questions you have on the letter or anything else because you get coaching. And again, all you have to do that is you text me and go, "Hi, I'm Jim. I'm Jane. I'd like to have a meeting with you next Tuesday at 11 a.m." I text you back, no problem, and we speak. So it's a very good deal. Education, ideas, and coaching. That's the trifecta in my view. So again, I'm going to turn it over now to David. We have a new person coming up, and I think it might be Jake. So a lot to learn
No,
from Jake. Yep.
actually, it's supposed to be Matt, but he's not here yet.
Oh, Matt Buckley.
Um, no, Matt
Oh,
Timpain.
okay.
Do you have another chart or
Well,
two?
yeah, no, I can continue on other markets I haven't covered. I'm sure people would like me to cover the other markets, so I'll do it. Let's go with gold. Like I say, I've been doing this for decades and decades and decades. I can hop from one subject to another very easily. Okay, so on gold, I thought it was a very good deal down here. So the gold stocks that I thought were very good had a nice big rally, but they're running into some resistance. So I'm on the Alumni Association on that now. Why? Because we're running into resistance, right? Now, if we get above 4,600, that's going to change the landscape. Even getting above 4,550 would change the landscape. And again, I would imagine that the GDX has had a pretty good run and now it's coming off, you see? So if the GDX gets back underneath the purple line here, which is what? Right at 87 bucks, then of course that might lead to a little bit more of retracement. Okay, so be careful because the metals have had a nice run and they might be pulling back. As far as the dollar is concerned, the dollar, let's check it out. There you go. Right on support. Now, again, If the dollar is going to go back up, this is the neighborhood where it would come up. But this thing has been range bound. And I've been telling people this. It's range bound between what? 102, can you see that? And about 90, 99. If it
Hey, Jim.
ever get, oh, he's here.
Matt's here now. Yeah.
Okay, guys, nice talking to you. And Matt, good luck with your meeting here, and we'll talk to you guys soon. Thank you.
All right.
All right. Oh, and Jake, I saw your message. Thank you for the offer. And Matt's yeah, welcome to Matt. You should be able to share your screen now.
All right. 2 seconds here. Let's just get this up.
Thank you to Jim, for option professor, for taking a couple extra minutes of analysis here.
All right.
Oh, and just a reminder too, if you're new to Timing Research, all of the present analysis today is being recorded individually, will be available on Timing Research and the Timing Research YouTube. We are also live streaming to YouTube, so if you have to leave the Zoom room at any time, you can just search for Timing Research and find the live stream there. All right, Matt, I see your chart now. Are you ready to start?
Yeah, I'm ready to go.
All right, everyone, you can enter your symbols for Matt, and I am recording again now.
All right, everyone. Thank you for joining us today. Happy to be back here. And great presentation on the last one there. I only got to catch kind of just the end of it. But it's we're in a little bit of a rally today here in the S&P 500. And it's kind of we're getting a little bit of a morning pullback here. So sorry, I was a little bit late. So let's just kind of take a look and as you get some of these tickers in here. One thing I just want to put in here, this was just a recent trade we did, right? So we actually took this rubric trade here. We bought the 77.5 August calls. So the standard options expiration, so the 21st. And what we kind of saw with this is just kind of underlining to show you kind of what we look at. And I have a few things on here for trend. I mean, mostly I look at price, um, and really kind of where my momentum is, right? Like, are we pulling back into a deviation standpoint? And you can see here, we actually took this trade right around here on what was it, Monday, Tuesday. The 77.5 calls came down. This was year-to-date anchored VWAP of the 2026. We had the 252 days, so the 1 year moving average actually. We look at that, it's a little bit different, and you kind of have that 200-day, right? So you can see we had these early entries here. You can see these early little strategy candles. And then we finally retook that 50-day, right? So it was kind of a fake out below the 50-day that we were expecting. And then we saw some put support, and then we were able to kind of see this trade up. When we got up here, we took profits of roughly, it was a little over 100%, 110%. We didn't want this previous high here to be the resistance level. And then we were able to kind of get a squeeze through it here. And we recently took the rest for a total gain of, it was 212 or 216%. And then I believe the second half was like 314% on the options. So, or 316, somewhere around there. So you can see here, and then we even got a little bit early, right? Like you could have held it even longer towards expiration. And that's just a golden rule. I'll even say to myself of just, you cut off convexity, right? Like, so sometimes that does happen though. All right. So we got plenty of tickers in here now. We got PLTR. This is a name I like longer term. Shorter term, I wasn't as big of a fan of it recently. I do think that you had some good kind of shorting opportunities here in the very near term, but it does appear to now be kind of holding this pivot level. This is a level that I look at, and you can actually see here we have some write-ups on it. So this was where we kind of broke down. You can kind of see there's a vol kind of pivot here. You see the volatility that kind of came into it, came back, we retested it, got a big push off of there, and then we got this move lower, right? So it came all the way down to that 2020 or 2026 anchored VWAP level, and then we got the bounce again right up to the 50-day. Or I mean, this is the 2025 and this is the 2026. So got the bounce right back up towards that 2026 and 50-day moving average, kind of, based a little bit and then came back down. But we got a beautiful move, right? So longer term, I think this is structurally going to start looking pretty well here. You really just want to hold these levels here. So 163 or 170. So if you're looking to get in, it's tougher today. I won't lie there. But you can, define your risk here against this 170 level if you want to get in on the long side. If you give up that 170, I would just kind of get out of the way quickly, see where we kind of base out at. You have this 10-day moving average moving higher. And if you get this basing, you get a move back down into the 160s, that's where I would take my second attempt. If you are looking to get short for some reason here, I also don't hate it for a move back to that 163, but we really need to kind of see these prior highs fail. So 180 actually was put or call resistance here. There is a little bit another level that goes up to 185 when you look at the open interest configuration, but against this 180, and that's why we're seeing it struggle here. We got a lot of calls built up, so you got to understand those levels as well to say, hey, okay. Right now, market makers really don't want to see this above 180. And, we did take a short put opportunity or a put opportunity here. We don't know how it's going to necessarily play out. We were up about 100% on it yesterday at one point, and then we closed around like 60, 70%. And today we're probably sitting around break even on it. So we'll see. Because Monday morning we took this entry actually at the 180 put level. So we were kind of hoping for a little bit more of a pullback. We didn't get it, but as of right now, sitting break even, not the worst. But again, that's a short-term view. It was a 5-day window, not longer term. Longer term, I do think you have definitely a chance to get back to the 200s here, and then once you get through that round psychological 200 level, it can go even much higher than that. Let's take a look at it. Nvidia. This actually also was on a short screen last week, but I didn't take it because I didn't love the open interest configuration. So I kind of, there's times where you see prices extended, but other factors don't line up, and that's one of them. I mean, I think the old rule is, right, what's overbought can become more overbought, and if you're not seeing something that's a unique driver that nobody else is really seeing, there's no real reason to take that trade. So, for Nvidia here, you got this gap up. It has been consolidating nicely. The biggest move I thought you were probably going to get out of it if you did for some reason wanted to take the short, on Monday would have been a move back down to this 210 kind of region. And again, that also didn't just provide a good risk reward. So that's another reason why we kind of just said, oh, all right, let's just move on from this trade. On the long side, it's tougher to get long here. If you get another move back down towards these gap lows, though, I might be inclined to say if it holds this level around 216, 215, now have the 10-day catching up to it. That would be an opportunity to say, hey, maybe we can take this long, get a move up to about 235 and see what happens from there. Longer term, let's just see. Longer term, I mean, it's kind of a nice looking move, right? You're above those 2025 highs again. This is where you kind of got the fake out move from on a weekly standpoint chart. You can see here this 2026 anchored VWAP has been holding. So, I mean, from a longer perspective, those are the lows you want to see hold. So, and that's going to continue to move higher, and you'll see hopefully that kind of eclipses as we go into end of year there. So I don't mind it, especially if you can get like a pullback move here and to get a better entry. You might have already kind of got it though this week. So we'll see. For now, otherwise you're really seeing if you're in it, 230, 235 is your upside on it. Otherwise you might get better entries, like I said, around 215 to even this, 210 level. But it's breaking out above those 2025 highs. Maybe this time it's not that fake out move. Just got to watch that fake out high. All right, QMCO. All right, QMCO, not a name I'm as familiar with. I did see it actually come up on a flow screen recently. That thing is moving. You are in a day 3 of a huge move higher. That doesn't mean this can't continue to squeeze higher. You can continue to squeeze for at least another 2 days, um, even more, but usually the rule of thumb in these big kind of squeeze moves is day one, you got the pros coming in. Day two, you got more pros kind of tacking onto positions, rolling positions higher if you're looking at it from like an options perspective. And those people that are fairly advanced in the market, they caught it, they got some kind of signal that triggered it that said, hey, you know what? Let's get into this. It's got momentum, it's going. And then day three, and I always hate saying it, is day three, they say that's when the Johnny come latelys come, right? So the people that are a little bit later to the party, that get the news a little bit later, that aren't watching the markets as focused, and that's, usually when the risk starts rising. Again, doesn't mean you can't see a day four, day five follow through here, but your risk level is definitely rising on this name. Now, where could it pull back to? I mean, honestly, from a swing trading perspective, you literally could see this pull back towards 16 and a half. I think that would be particularly be a great entry if for some reason you get a flush out off of the Johnny come latelys, get a move back towards that 1650, see how it shapes up, see how that 10-day and that 20-day that will be coming up, react to that price level. I think 1650 probably would be good. I don't, from the knowledge of my head and options, don't have it here just because it's not a name that I typically trade. Let's pull it out to the weekly because it is, having a huge volume move here. So let's just see the other previous volume okay move. So QMCO, huge volume move last time, and I do trade quantum stocks and just don't trade QMCO that often. The ones I've mostly traded are QBTS, RGTI, and IO and Q, and then even a little bit of QUBT, just not as much recently because option volume dried up in it. But those are the reasons why I stick more towards those names is because there's a lot more liquidity in them. Not to say that you can't trade it or trade stock, right? Like you don't need to necessarily trade options, even though that's what we do with our services. You can trade stock too, and I trade stock still all the time. Nothing wrong with it. So it is kind of a big move out of here, and it is on volume. So I mean, I would still want to see some type of consolidation. Even if you're gonna, want to step into this a little bit earlier, at least look for maybe, some type of move back to $18, to at least kind of kill some of that risk off. If you do want to stay long and short term, just do it with defined risk and very, open-minded about cutting risk early because when this reverses, it will reverse hard. So there's nothing wrong with staying in the trade or day trading it. But that's kind of how I would look at it. I mean, let's just pull up a 10-minute here, right? So 10-minute, you kind of got this beautiful open above, kind of these moving averages here. And you can see this trend day up. Now you're kind of getting a flag, right? So if you got a flag and you got a break above 2361, you could arguably say, hey, let's get long into the close for a day trade type of situation. All right, next one, GCO. Pull this back out. All right, again, Genes Co. basically, right? So it's I'm gonna guess a gene therapy name. Let's just pull this up. No, retail. Huh. All right. Look at that. So not a name. Again, I don't typically trade because we do focus on options and more liquid names. Um, but retail, I mean, if you look, retail just kind of tapped its prior highs, pulled back, even kind of broke out a little bit, right? Gave it a little bit of a fake out. So we'll see, right? If retail can kind of get going. I do kind of feel like if there's one thing like early August, late July, you kind of got these trades in these retail names. And even, look, it started back in June for this one or for the XRT, but you get this little bit of a back to school trade, right? There's seasonal data that backs this up that says, hey, you kind of get this little bit of a push into back to school sales. And usually that trade is done by September, right? Everybody's back in school. Nobody's really buying as much clothes. But, I mean, we are mid-August now, so you can kind of see that it's kind of cooling a little bit here as well. So let's just go back to the name, GCO. It's kind of choppy, price action. Not something I particularly love when I see, I want to see a trend or I want to see like kind of a reversion spots here. But it is, it is trending lower at the moment. Um, where I would probably look to start kind of, I I feel like you kind of gave up the support level that needed to hold at 36 and a half there. So either you want to see a retake of that level, or, you're going to want to kind of come back down here and see these prior lows around $33. Let's just look at it at a weekly perspective for you. Yeah, I mean, somewhere down again, you're in this big choppy range. So you just came off that high. Um, Again, really kind of need to kind of get through that 36 and a half level. Yeah, otherwise, 32 is probably a spot you could take a shot at it. It lines up both on the weekly and the daily here. That 32 could be a spot where you see a low. Otherwise, there's a chance you go back towards 30 or even lower 28. So kind of get back to this range if you're looking at it from like a weekly perspective. All right. CTSH. Name I have traded. Not a lot recently, but definitely traded in the past. All right, so you got, kind of, I wouldn't call it quite a cup, but you kind of got a cup, right? Like, kind of got a cup pattern here. Basing it is above that prior high now. You can just put that in there if you wanted. But you also kind of have these lows, right? Where you saw this breakdown level. So I wouldn't necessarily take too much into this kind of 57 level. I think the bigger level obviously is going to be these prior lows where you saw this gap down. You could push it a little bit lower to a wick or something if you wanted to make it look good. I like to look at it as zones. So even like if I draw a line, I'm really trying to look and give this room. Most of the time I try to draw them with boxes. The reason why is price, like a level is not ever static, right? Like they're always going to be pushing around in that zone, trying to shake people out, push it a little higher, push it a little lower, depending if it's support resistance. Open interest level doesn't really matter what it is, because there's a jockeying for position at those levels. All right, so um, you are pushing up into that resistance level. It is a little extended here. Honestly, if you want to go long, right now you kind of got to wait for this level to break. Then your next spots are going to be the 200-day and the 252, so the 1 year, which is also in line with an anchored VWAP up there from 2025. And then you have the 2026 VWAP. You've already taken that back. So, you know, the better opportunity is probably take a short here, see if you can kind of get that 50% retrace back down here to like some of these volumes, or just wait for like the price action to kind of pull in to take that long, and then see if you can kind of get that move out and up. Netflix. All right. Netflix. It's actually a name that one of our traders traded recently. I think he took it. Uh, yeah. So it was Friday when he had the idea, and then he took the recommendation on Monday. So he had to pay up a little bit on the premiums, if I remember. Um, but he took it. We took back this pivot here. So you can see this is kind of like a pivot low. You did have the gap still, so there was some risk in this trade. When I saw it, I particularly didn't love the trade, but the momentum was on his side, so I'm like, okay, it is what it is. Um, but you are now you're kind of getting back into a resistance level up here, right? So you really need to see this level taken out here around 78, and there's a few reasons why. I traded it back here somewhere. We got a decent move out of it. It took some time though. So you could also say like, hey, these prior lows are taken out, but you still got this high to contend with, right? So um, if you get a move back below, I would expect some chop back towards 72 here. So, you really kind of want to see this hold and move. But really for your signal, I mean, if you want, you could use this 76 level right now if you wanted to get in today and just say kill it below it because you're probably going to go back to 71, 72 area. Um, but otherwise, wait for it to kind of break out if you want to try to play the momentum higher. That would be kind of my suggestion. And you can see that gap is kind of aligned with that level too. So that prior gap over here. But that's how I would look at Netflix. Let's take a look at it on a weekly scale just because, and you can see this is old stuff from one of our trades. So, oh, we didn't want to lock that. Unlock it. And that's how some of our recs come out, right? They'll say buy this. They'll give you the target profits, uh, optimal entry zone, and then we give our sentiment observations and we give our technical observations. So you can see here for me, the momentum has shifted here to the green on the weekly basis. You are starting to take back, like I said, those prior lows. You just really need to get through this prior high, and then honestly, it'll look pretty decent, right? Like, I mean, I guess your next level then after that's going to be about 82 and a half. When you are buying things in a, that would been in a downtrend, you're going to have a lot of resistant levels. So you don't necessarily know where it's going to go to, but you have defined levels that you can trade up to and trade against. And then if we get through 83 there, obviously, the next level is going to be the round 100. You do have a declining 50-day or 50-week moving average as well. So, you know, not something I would be too worried about. I like levels a little bit more, which that's the 2025 pivot level actually. So, we'll see how that, if you can kind of get up to there. Round 100 likely would be overextended at that point in time, but it's a great target if you're looking at it from a longer term perspective. And if you're already in because you tried to play this undercut or something, good for you. You have a lot of room then to play this for a longer term trade. If you are just getting in, again, you can look for 78 probably as that trigger. Otherwise, feel free to position, but just know that, I would look around 72. You could kind of get a flush out lower. Obviously you can still take out those prior lows. Otherwise, if you don't hold 72, you're probably going to at least test those. All right, now. ServiceNow is a name we've been trading. In services, I've been trading it personally. It's a name that kind of got demolished with the AI fade, right? So it's, I think, underestimated in the AI trade, because these are kind of there's certain things that aren't really going to go away. AI isn't going to necessarily disrupt every single software company, and a lot of these are sticky to moat, even if you can build like Salesforce, right? If you can build a CRM, yeah, maybe a lot of new customers aren't going to be onboarding, but a lot of those existing customers are still sticky. So if they can apply an AI component, and ServiceNow is definitely one of those types of packaged software companies that definitely can utilize AI, much like Snowflake, Datadog as well. I think they will still be able to survive the SaaS apocalypse, as they call it. All right, so you did re-break over above the 200-day moving average. You do have a little bit of a momentum shift here right now. So you are seeing a little bit of bearish price action. Doesn't mean we can't kind of round out. We are starting to get converging 210-day moving averages. Not the end all be all, but it's a point of confluence, right? And you have a point of confluence from this gap level as well. So you got these prior highs. So could it get a little sloppy here in the 120s? Yes. Could it kind of just slowly kind of round out here? 100%. So not against looking at taking a position here if you are so inclined. Not exactly my style of setup, but you could do that. Use kind of this 120 level as your stop, and then say, okay, if it goes through 120, we're going to retry again around 112, right? 112.50, somewhere in this area. So we'll just kind of throw something there. So, and I wouldn't say there. I would kind of say this is where you start getting an idea again, right? You got these wicks that come up to it. You kind of see you got this price action here where it was really kind of fighting for position. Then you got the support, and then you got the gap and go. All right, so that's how I would look at it. Where I'd be looking for spots to enter, and try on this. Again, you give up 112, you're probably going to come back down. Your next kind of spot, for potential then would be in the lower 100s. All right. Let's look at it on the weekly quick, and then we have 5 minutes and we got a quick question here. All right. So pull the weekly back up. You can see it is a basing pattern, right? It's choppy longer term here. And then you can kind of see, right? You got these lows that were kind of blown out, these wick lows here back in 2024. And then it lines up really nicely with that 2025 low. And kind of see here the old 2023 highs were taken out as well. Well, the mid-year 2023 highs. So, um, yeah, I mean, your move, longer term, if you can get into a position here, your next level that, where you'd want to see maybe profit taking is about 137, 135, start taking some off, peel it off. How do you day trade options? So day trading options is tough. I'm not a big fan. So we do a lot of long premium, but for the most part, our long premium type of trades that we do are, 5 days, 21 days, 90 days out, right? So we don't really day trade options too much. If I do, I mean, we do have a service that does it, and we do take some long trades, and it's actually done really well. But we give you the option as well to either a sell premium situation in that, or you can take the long premium for the convexity. And they both perform well. We both have high win rates in it. But I do typically personally lean like if I'm day trading with options, I am selling premium because I want that theta decay in it. So somebody that's new, I wouldn't sell naked options. I would sell spreads. That's how you would do it. You define risk. You take, say, like the SPX, you take like 78.05 and the 78.10 put option. You buy the one and then you sell the other so that you are risking at max $500, right? So like say you can capture a credit of 180 bucks or $180, which will be $1.80 on that. Then you can take half off at 50% is how I would look at it. But if it just chops sideways, you're going to get that theta decay on that zero DTE option, and you're able to capture that premium as well. So it doesn't necessarily need to break down, but then you at least have defined risk as being somebody that's newer, right? Again, you know, you can trade options, day trading. You just got to be very careful. Shares are easier if you're learning. That way you can kind of just place a few shares out there if you don't have a big account, and then just trade it against trends, right? Do you ever look at shorter time frames? Yes, I do. If I am doing something, especially on like day trading, right? So like something like Service Now, right? I'd be looking right here, and then I would pull up my options tool as well, where it's going to tell me like where is put support. So like right now, actually, if we look at SPX here, we got a 10-minute chart. We're seeing it's kind of pulling in here. Right now, your put wall is 77.80 on this SPX, so we're 2 points below it. But this is where you're going to often kind of see a little bit of an overshoot, and you might be able to take something like against here, this overshoot. And if they don't roll the wall down, you'll probably get the rebound. So if you get a few points overshooting here, this is how I kind of do it. I'll be like, okay, I'll sell premium. I get down to 77, say and a half. I might be able to sell the 77, the 70s there, versus the 65s, or maybe even be able to sell the 65s versus the 60s on the SPX here. And then we look for a reversion bounce, right? And then we could pull half off. So yeah, 100% look at shorter time frames. My preference, obviously, if I'm day trading right at the open, I'm going to be looking at the 1 minute, but I do typically use things from 10-minute time frames to gauge for trend, even on that 1 minute. Otherwise, if I look at a lower time frame, one of them that I love using is you can use the 1 hour, but I like the 65 just because it's mathematically more correct for the way the day breaks up, um, for your trading day. But yeah, so. I like it like that. Looking at 65-minute or 60-minute ranges are great for swing trades too, and a lot of people overlook them, right? So like why would you, take this trade if you're sitting right here in this range, right here that day, right? Like, it's just kind of how I look at it. I don't know. Let's just look at something, right? You kind of had this, I don't know if that's a perfect one. All right, I'll do one. Coin, you kind of got these levels here. It's a very
Um,
choppy range. Why would you take it? You'd
hey, Matt.
want to wait for one of these
Sorry,
levels.
I gotta cut you
Yep.
off.
Perfect. All right. Thank you, everyone.
Um, all right. Thanks, Matt. Thank you for being here for our second analyst for today. And up next is Jake Bernstein. Jake, are you there? Jake, if you can hear me, you're You're muted.
I'm
Oh,
right here, right here, David.
oh, okay. Sounds good. How are you?
I'm good. How about you?
Good. Good. You should be able to share your screen and get set up now.
Okay, give me a moment.
And while Jake's getting set up, in case anyone did not hear this earlier, I am recording each of these sessions individually, and those will be posted later after the event is over. But I'm also live streaming to YouTube, so the entire event continuously is being archived instantly to YouTube. And if you just go to YouTube, you can search for Timing Research and find it there. I can.
Give me a moment, David. I'm getting there.
Okay, yeah, no problem. So we give these links. So yeah, Timing Research. Oh, wait, that's probably down. My web host is having a major equipment disruption today, so that link probably is not working at the moment. But um, yeah, everyone, if you just go to YouTube and search for Timing Research, um, you can find the account and subscribe. And also,
Let's see. Okay, go ahead and introduce me, David.
I'm not seeing your screen yet.
You will momentarily.
Okay. Jake, are you having trouble with the share?
Yeah, I won't share. Try it again. Okay, here we go.
You do have to hit that bottom. Oh, okay, now it's loading.
Okay, I'm ready, David.
Oh, okay. Looks good. All right. All right, I'm recording again now. And welcome to Jake Bernstein. Please enter your symbols for Jake now.
You, David, appreciate that. Am I ready to go?
Yeah, you're
Okay, thank you everyone for being here. Appreciate the opportunity. Please pardon the voice. You're listening to the voice of an old man who started trading 67 years ago, 57 years ago. So, of course, it's been a long time since then. I'm a quantitative trader. Everything I do is by the numbers. I want to share those numbers with you today. I have no room for interpretation, no room for anything except the facts. So I'm going to show you the facts. Let's begin this way. This is a composite chart of the S&P 100. In other words, it shows every year from 1984 to 2025. Why do I do that? I take each year, analyze the year, and change the high and the low so that the highest price of the year is 100 and the lowest price of the year is 0. I end up with a normalized chart. So this does not show any one year, but shows all of the years since 1984. What does it mean? Let's look at the chart. This is where we are right now in August, right here. You'll notice that the chart has arrows up and arrows down. Arrows up show high probability moves to the upside. Arrows down show high probability moves to the downside. So let's take a look. Let me go back to the weekly chart. Just one moment. And by the way, there is a risk of loss in trading. In case you're unaware of that, that's our disclaimer. It shows that the first 3 weeks of July historically have been bullish weeks all the way back to 1984 and it shows you the percentage of time. So we know our odds of success. The odds of success are very important because I will not trade unless my odds are 70% or more. So let's see what's coming. I showed you what's happened. I want to show you what's going to happen. And then I'm going to show you how we find our trades, not just approximately, but specifically. My methodology, which I'm going to teach you today. And by the way, the good news, I have nothing to sell you today. I have nothing to promote to you today except these ideas, which I think if you embrace these ideas, they will change your life and make you a much better trader. But that depends on you. The ideas are solid, they're proven, they're mathematically correct, they're high probability. All you have to do is use them, and that is the most difficult part. So let's take a look. According to what my chart shows, one moment please. Chart is doing something strange here. Okay, so one moment please. Some strange stuff going on here. Let me fix that. Just one moment. Okay, so looking at the chart, it says specifically the last 2 weeks of August are likely to be up weeks, the tune of 69% and 62%. And that's what the chart shows. So now I know ahead of time what I'm going to be doing. I know exactly what I have to do. I do know this. Even though I may not be a buyer in late August, I do not want to be short, because being short would be the wrong side of the history. And being on the wrong side of history will not serve you well. So let's take a look and see how we did. In other words, I'm going to show you, one moment please. I'm going to show you what we did, why we did it, and I'm going to show it to you exactly to the day. I want to know, buy or sell, exact time of day, exact price, and most of all, I want to know what have been the results, not just for the last year or 2 years or 10 years, but for the last 20 or 30 or 40 years if I can get that. That's the way to make money in this market. Most traders, as you know, by the time 1 year passes, they will have lost most of their money in their account. We don't want to do that. We want to make money, and we want to know in advance what we're going to do. So I'm going to zero in on this. And by the way, everything I do is public. So if you're looking to verify what I'm telling you, you'll find it all over the internet. You'll see exactly what I said would happen, and exactly when it would happen, and how it happened. I'm going to show that to you today. So let's take a look. This period of time, the first 3 weeks of July, historically have been bullish. The last 2 weeks of August have been bullish, and I can give you the odds of success. So as I get in closer to this period of time, the last 2 weeks of August, I want to start looking for a place to buy. But I want to do more than that. I want to know, as I said before, exactly when to buy. I want to know the name of the stock, the name of the futures contract. I want to know the name, the price, the time, the stop, the complete history, and I'm going to show you that. I'm going to do that in a different way. So just bear with me. And I may not take questions from the chat until later. So just bear with me for a moment. Just have to get to the right place. And by the way, you may hear this what sounds like a dying man. Really not. I feel much better than I sound. So pay attention to the quality of the information and not the quality of the voice. Okay, here we go. I'm going to go to the computer and I'm going to ask a question, a very specific question. And remember, the questions you ask a computer will be specifically a function of the information you get. If you ask a stupid question, you're going to get a stupid answer. So I'm going to go to this location right over here, seasonal trades. I'm going to go to seasonal trades and stocks, like so. I'm going to ask a question. The stock we're looking at is S&P. I'm going to go to the S&P, like so. I'm gonna do a search. Now remember, what I'm doing is I'm searching history. I'm searching many years of history. So let's go to S&P, like so. So appreciate what I'm doing. I'm predicting what's going to happen based on what has happened. When you see it, you probably won't believe it, but I'm going to show it to you for real. S&P 500, right over here. And ask the question, historically, is there anything I could do in the month of July in S&P that has been right at least 70% of the time? So I'm using computer power. And by the way, this is not artificial intelligence. There's nothing artificial about this. This is all real. That's another question. Show me what's been right 75% of the time or more. And I never want to risk more than, one moment, please. Computer is not happy. Come on, computer, please cooperate with me. This is important. Just one moment, please. Let's try it again. 75% of the time odds. Okay, and I want to risk, I never want to risk more than 5%. I'm going to put in my risk. I'm going to say to the computer, I want short-term trades. And by the way, I am not a day trader. I wrote the 5 best-selling books on day trading from McGraw-Hill, Wiley and Sons, HarperCollins, and so forth. But I do not day trade because there's not enough time. I want to enjoy my life. I want to work smart, not hard. So show me trades that have been right 75% of the time with 5% risk. So here's the risk. Let me put it in there, just one moment. Okay, and I want short-term trades. So one moment, please. For some reason, the computer is not happy, but we'll make it happy. Here we go. Nothing worse than an unhappy computer. Okay, just bear with me. I want short-term trades, 10 days or less. I'm going to put 10 over here. So what is it I'm asking the computer to do? I'm saying to the computer, find me trades with 75% odds of success that has had a duration of 10 days or less. Just one moment, please. I'm not sure what's going on here. Let's try it again. Sorry about that, folks. Let's go to seasonal trades, U.S. stock trades, like so. And go back to S&P. Sorry, folks. Sometimes computers just won't do what you want them to do when you need them to do it. Just bear with me, folks. Let's go back to the S&P. As you can see, we've got many stocks here. So in other words, I'm looking at a very vast amount of history. The more history you can have, the better off you'll be. Let's try it again. Sorry, folks. We will get there. Don't worry, we'll get there. So what am I doing here? I'm doing a search, asking the computer to go in its database, which is vast, and find me trades that meet my criteria. So here we go. Let's try it again. S&P for the month of July. I want to show you what we said would happen And what did happen? Okay, let's go back here and look at 70% wins. And let's go. Okay, folks, let me do one thing. I'm going to reboot this program. So just bear with me, folks. Just hang on, please. Let's try it one more time. Seasonal trades. Stock trades. Okay. Thanks. Thanks for your patience, folks. I'm sure it will be worth the wait. Okay, let's go to the S&P 500. And you can see this is not all about just the stock indices. It's about many different trades. We do stocks and futures. Okay, let's try it again. I'm looking for trades that have been right 75% of the time or more. For some reason, it won't show. Just bear with me. Okay, let's try this. 5% risk. You'll be amazed by what you see, so just bear with. I want short-term trades, by which I mean 10 days or less. So here we go. Everything's in place. Now, I'm going to go back to the computer. Bear with me. Like so. And just hang in there. Let's try it one more time. Let's go to August to July and do the search. So just to be clear, I'm asking the computer to go in its history and find me trades in the month of July that historically have been right 75% of the time or more. So let's go ahead and do that. For some reason, it's not working. Let's try it one more time. No. Let's try it one more time. Sorry about that, folks. In fact, we'll try it one more time, and if I can't get it done, I'll take questions and we'll do things a different way. In fact, let me do something different. Let's go to futures. Seasonal trades. US futures. Let's try it that way. So let's go to S&P. Again. Let's go to the month of July. Like so. Ask the question. Have there been any trades in July in S&P futures? The risk of 5%. So you're going to understand what I'm doing here. I'm doing a search of the database. It's way above and beyond artificial intelligence. Okay. Now let's do it. There we go. So we got our trade. So please bear in mind, what we're looking at right here. I'm sorry to waste your time, but I think you're going to find something really fascinating. Computer said that buying S&P 100 futures, end of day, July 2nd, getting out July 15th, was correct 75% of the time, with an average profit of 42 points, average loss of 29 points, and so forth. And it gave us the entire history. What do I mean by that? Let me show you. So again, I ask you the question, would you rather know what you're doing or not know what you're doing? Would you rather take it on someone's faith or would you rather do it for a fact? So here's the history right over here showing every year, every trade according to this rule. So we're looking at 38 years, 28 years of history showing every trade hypothetically, and it shows the results every year. And it shows the cumulative results, which I think is quite impressive. So the question we want to ask is, what's coming up in the month of August? Because I always want to know what to do now. So let me show you how I do that. And again, I want to stress, this is quantitative trading. It's by the numbers. I never have to interpret anything. I never have to ask, will it happen this year? I never have to do any of that. I just have to do the numbers. That's all I need to do. So let me go back here. One moment, please. Okay, so let's repeat this. Let's do this for the month of August and see what we come up with. In other words, something that hasn't happened yet. So let's do that. August, and do a search. We're doing a search of this criteria. 75% wins, and I never want to risk more than 5%, because what I'm about to show you is truly phenomenal. Whether you appreciate it or not, you may appreciate it later. Here's the S&P, and stop, and I want a short-term position. So I'm going to choose 10 days. In other words, everything I'm doing here is based on history. If you don't have the history, you won't succeed. If you believe opinions rather than facts, you won't succeed. So let's do a search. Here's a search. And the search said, computer is back to its old tricks. One moment, please. Let's try it a different way. One moment, please. Just bear with me. Here we go. Just hang in there, please. Okay. And let's do the search one more time. Let me make sure the S&P is selected. Excuse me. Oh, we're back on stocks. That's what it is. Hold on, please. Let's go back to futures. I assure you that if you do this, it will be most productive for you. Not perfect, but very productive. So let's go back to futures. Let's try this one more time. And then if I can't do it, you'll be rid of me. Just hang in there. I see Sonny Harris has just checked in. Hello, Sonny. Okay, let's go.
Hi, Jake.
Just hang in there. S&P 500, we're going to do this again. Be patient with me. It will pay off. And if you embrace what I'm about to show you, it will change your life as a trader for the better. So again, I'm asking for the S&P 500 for the month of August. Is there anything that's been right? 75% of the time or more, like so. And has there been a duration of 10 days? I'm looking for short-term trades, which makes a lot of people happy. Let's do the search now and see if we can get anywhere this time with this most uncooperative computer. Here we go. Computer says nothing. So I'm not very happy about that. Let me try one more time. Just bear with me, please. Seasonal trades, short-term trades. Try it one more time and then I'll go on to something else if I'm not successful with this. Sorry to have to depend on a computer that's most uncooperative. I've never seen it do this in many years. S&P. And by the way, yes.
Jake, I just thought of something. My website is down because the data center that my host is using is having technical issues. Maybe something on your
Yeah, because this
site
is,
is at the same data center.
yeah, that could very well be. Let me try one more time, David.
Okay.
I apologize to everyone. Send David your email address. I will send you a free video explaining this in greater detail. It's a 1 hour video. Let's try this one more time. And let's see what we get. There we go. Okay, here's what it says. Pay attention. It has looked at many different possibilities, and here's what it said to do. And mind you, this is very accurate. I'm going to go to the beginning of the month, like so. And the computer put the best rate in the first position. It said, if you bought S&P futures end of day, August 11th, like here, and got out end of day, August the 13th, you would have been right 75% of the time or more. Right over here. One moment, please. This whole thing's acting kind of funky. And you would have needed to stop at 1%. And here's the history of it. Now check this out. Who in this business can not only give you the trade, tell you exactly when to get in and exactly when to get out, but also show you the. I'll be done in 2 minutes, David. Don't worry. So here's the result. Notice 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 years in a row has been profitable. There was every excuse that it should not happen this year, right? There's a war going on in the Middle East. There's a war going on in Russia and Ukraine. There's bad news all over the place. We have an unpredictable president. So what happened? Take a look and see. Not only did this trade work, but the profit per trade was expected to be 28 S&P points, and it achieved far more than that and hit its target yesterday. So not only was the record of accuracy achieved, but it was in fact surpassed. So let me do this, David, so I don't throw you off schedule. I will offer everyone that free video. Send me their email address, or I'll send you the video, David. You can keep your list to yourself. I'll send you the video. You can send it out for me. Everyone will get what they paid for, plus a lot more, and I would be saved from further embarrassment.
Okay.
So I am
All right.
effectively done.
All right. All right. Thank you, Jake.
Sorry to disappoint.
Yeah, it happens. Like I said, I'm having my own technical issues here too today, so I understand. But yeah, if anyone out there is new to Jake's work, he has a lot of interesting stuff to teach. So uh,
Thank
yeah,
you,
send me
everyone.
that video and I'll get it out to people.
Thank you very much,
So,
people. I'm sorry. I apologize to you all.
all right, no problem. All right, thanks, Jake. Thank you for being here.
Thank you, David.
Um, all right, all right, next up is Sunny Harris. Sunny, are you there? Uh,
Yes, I am.
okay, great. Um, you should be able to share your screen and get set up now.
How about that?
It is loading, and yes, looks good.
All right,
And
fantastic.
I'm going to start recording again, and then you can start your analysis. So everyone enter some symbols for Sunny, And I am recording again now.
Thank you, David. Jake, that was a great presentation. I'm really impressed with that product. That's fantastic. So today we're going to talk about sunny bands as related to any symbol you want to show me. Sunny bands works on any time frame and any symbol. So whatever you want to give me, we'll take a look at it. Let's see. We've got oil at CL, crude light. So this is just jumping around like crazy, which is to be expected. Up and down, up and down, up and down. So there's really no trend to it, except that the trend is it does whatever the news says. So let's see. Sunny bands is the green. You see the green channel on the outside of price, and then there's a blue channel that's just above that. That's the inner band. This is the outer band. So lower inner, lower outer. And then the green one on top is the upper outer, and the blue one is the upper inner. So upper inner, upper outer, lower inner, lower outer. And price goes back and forth from these bands over and over and over again. And that's how I trade it. There's also in the middle, which is this is the what constitutes the math for it is the DMA, dynamic moving average. So this is the gold. There's a gold line and a purple line in here. You can see it better right here. When gold is on top, I'm typically long. When purple is on top, I'm typically short. So I go short a little sooner than that because I use the Sunny Bands rules. And the Sunny Bands rules are on my website under downloads. It's a 4-page plus 5 pages of disclaimer and phone numbers and stuff. So 4 pages are rules, which are in a PowerPoint format. So it's really very simple. 3 rules, but level 3 has two A and B to it. So it really says when we come over here, when we come down to the bottom band on red candles and turn blue, 2 blue candles. I use blue because if I use green, it kind of overlaps the green sunny bands. So when we have 2 blue bars that close above the lower band, then we go long. And you see we would be long all the way through here. And then we need 2 red candles beneath the sunny bands, upper outer bands, and that would be a short signal. Now this is not a very good short signal because we've got all this chop going on with the news. Give me another symbol that's not so. Let's do Palantir. PLTR, somebody said. So this is again the daily chart, and you can see here that it went 2 blues above the lower outer band. That's level 1 rules. Level 2 rules is if the DMA, which is dynamic moving average, in the center, if that is flat, then we just stay with the current position. So we just stay long, and then it goes on up again, up, up, up. So now we have 1 red bar. So we need 2 red candles to go short. So we're not short yet. Palantir, let me draw an attractor. I call horizontal lines, which most people call support and resistance. I call them attractors because they attract price to them. And you'll see right here, we've got a preponderance of price. It hits it, hits it, hits it. Preponderance of price activity. So that's where we are right now on Palantir. So it's going to take some good news or something to get it through. There's a lot of buying to get it through that level because that's a heavy resistance. And then it could go all the way up to 193, from 176 to 193. TREE, what is that? Christmas tree? And we've got a gap down on this. Let's look at the attractors on the, we've got price preponderance right through here, and it drops through there, and now it's going to have to come back to it and go above it to keep going up. I don't short stocks. I buy stocks, and then when I get a short signal, I sell them, but I don't short stocks. Lending tree, I see. All right, so this has come up and hit that, up and hit that, and then it didn't make it up again on this one. So it rolled over and went down precipitously. And now we've got to get above this level in order to go back up again. The histogram is showing green, which is a positive thing, and it's moving up a little bit. So that's positive. But I would not be a buyer of this just yet. Let's see. PLTR and tree. Is that all you got for me? Anybody else have a symbol? How about Chris? How about Dennis? How about Douglas? You got a symbol for me? EZPW. EZPW. I don't know what that is. Easy Corp A. And it looks like that one's going down too. We're below the purple. This is level 3 rules. As long as we're below the purple and trending, stay with the trend. So we have no reason to get out of our short at this point. We have one blue candle. We need a second one closing. So that's the second one. So we could go long, but we only have this much room to go long to the flat DMA. So I don't do that until it gets out above the DMA. So I'm waiting for better news to go long on this one. And then it could go to 32, which is where the next attractor lies. 32. Apple. Apple. Well, we've got level 3 rules. Purple's on top and we're trending down. So this could continue on down. I think we're looking at a move down into the right about here, 288 level. Well, mark my word and let me know. So we've got, I'm going to draw that in because that's got lots of preponderance of prices there. So it hits it here, stumbles here, hits it here twice, hits it here and breaks it. So I think that's where we're going next, is 288. And then we'll talk about whether we're going to go long or not after that happens. How about some more symbols? This is kind of weird. I can't see the chat. There we go. PLEN. Where do you come up with these stock symbols? What are you looking at? I don't see PTEN. PTEN. All right, that one's looking pretty good. Drawing horizontal line. There's an attractor. There's an attractor right there. And we've got one right here where we currently are, where we've stumbled. It hits it here, it hits it here, hits it here and here. And here, tries to get above it and can't. Tries to get above it and can't. So we'll see now if we get above it. If we get above it, then that's a good reason to buy. But it has to close above it on blue candles for me to want to buy this one. Even though it's cheap, you know, you could lose money on it if you're not careful. And then we've also got a trend line on here, from here to here. So we've got an upside down pennant, an ascending triangle, which is potentially bullish, but I can't tell. I would, as soon as this one breaks through this 11 line, I would buy it and take it on up to 11 and 75. So there's 75 cents there if it breaks this line. If it breaks it, it'll also break the upper outer band, which is very positive. And the histogram is gold and moving up, so that's very positive. What else you got for me? Monty, Ralph, Scott, Tim? I'm going to wait. Okay, MSTR. Did we already do that one? MSTR Strategy Inc. This is just flat. We've got a flat DMA and flat price and flat histogram. So until it moves, there's no reason to buy it. I don't buy stocks until they move up, and I don't sell stocks till they move down. So we've got this attractor over here, hits it again over here, and now it's just stuck beneath it. So it would have to break 110 for me to be interested in this stock. Let's see, 5. FIVE 5. That looks pretty good. Let's see. Well, come on. Horizontal line. We've got a horizontal line right there. You see where price hits that? And we've got a preponderance of price there, and then again over here. So we went down to that level 2 days ago, 3 days ago, and now we're back up here at 250. In order to buy this, it has to break above 250. But if you look at the histogram, you'll see we were gold, gold, gold. So that's going up, up, up. And then we've got red bars and they're coming down. So that's not good. That's a negative sign. That's a negative sign. Amazon. Very similar answer to Amazon. We've got, it's below the upper outer band, it's below the upper inner band and heading for the DMA. So right there's where we're going at 260. So we're looking at Amazon dropping to 260 before there's a potential bounce. And it hits it back over here, hits it here, gaps across it here. So that's a good solid price, 260. NEM. NEM. We're above the upper outer band. Gold is on top and moving sharply up, so we're on level 2 rules. As long as we have a trend, stay with it. This is against the trend. We've got a candle that dropped to the upper inner band at 114. So that's a negative. It could come down and close this gap right here. So if it does that, it'll hit the DMA, which will probably settle the down move, and it'll bounce back up. So we're looking at 107 for it to bounce. And we've got a red bar on the histogram, so you can see it echoing that down move. Let's draw in some horizontal lines. So we've got back here, we've got this one, which it hit that on its move up. And then we've got, what else do we have? Down here, we've got this one. So that goes down to the 110. That's a highway in Los Angeles. All right, so that's about it. We've got some right here. which is where we are right now. So we're looking at this possibly being support at the 113 level. And then it could bounce, or it could break on through, and then it'll go on down to the DMA. That's NEM. What else have you got for me? Judith, Joseph, Jose, Isaac, you got anything for me? Douglas? Anybody with some symbols? Let's look at some of my symbols then. I'm interested in GE. And that's because we're going to have some munitions contracts awarded to somebody. So I've got GE on my list, but it doesn't look like it's going up just yet. It's coming down, in fact. And I also have Lockheed Marietta on my list, and it's going up. So they must have gotten awarded some contracts. And we've got a upper outer band there, got a flat DMA here, and prices hit it there. We've got prices at this level being supported. And you can see here, we just came down through it today. But I do think that Lockheed's going to get some munitions contracts. And what else do I have? I have Dell. Which has been going up. President back in here said he loved Dell, and look what happened to it overnight. It went up to that level, and now it's coming back down again. It could easily hit that level, which is 462. So let's say 460. It could easily come down to 460 and then either crash or bounce. With that much support there, it's probably going to bounce. Okay, GL. Globe Life. That's looking pretty good, except that we've penetrated the DMA, dynamic moving average has been broken. Purple's on top still, but it hasn't gotten back above the DMA. In order for this to continue a long position, you'll have to go up to 182 and get close above 182 and get above that DMA line. Let's see if we can get some. We've got resistance and support at that level, so there's an attractor. And up here is another attractor at, what's this, at 86. 186, sorry. So, we're looking at moving from 181 to 186. If you've got enough shares on, then that'll be a decent move. But that depends on how many shares you've got, I guess. GNW. Well, we've got an attractor there. It came up and hit the upper outer band and fell back and hit the DMA on a wick, came back up to the upper inner band and came back down to the DMA, and then fell below, touched the lower inner band, came back, went through the DMA, and has gone back up. Now, because that's been going back and forth like that, I think its tendency is to go back again. So it'll probably come back to 981. That's a pretty volatile stock right there. So if it goes to 981 and then it bounces on the DMA, then you're looking at a price of 10. So it'll go from 9 to 10. ECO. That's a nice looking one. Okay, we're at the upper outer band and moving upward. Tendency is when that happens to go on up. So we're looking at going on up to where? Let's throw some Fibonacci on that and see what happens. Let's go from, well, I'm trying to find the spreader bars. So let's go from there. So from back here to this level right here. Hits it and falls, hits it and falls, hits it and breaks through and goes to the 23.6 extension line. All right, so that gives us some information. Chances are it will come to this level, which it has, and then retreat somewhat, and then go on up. And the 38.2 is up here at 70. So we're at 65. We could come back down into the 62 range and then go on up to the 38.2, which would be 70.75. Or it could just get some thrust and go on straight up there, but we're looking at a price of 70 eventually. And that's the last symbol I have available. I've got 8 minutes left. I need 8 more symbols. Do we have any more symbols, anybody? EDRY, did I do that one? Missed it, I think. Oh, come on. Euro dry. Well, that's a nice move up. That's the kind of thing I like to see. Let's draw some Fibonacci's on that. We'll go from back here to here. And you can see we're almost up to the 100% level. So it went up there to 100% extension. That means now it has to come back down to the 76, which it has on a wick, when it could probably come down to the 61. So 61.8 right there is at 34. So it could come to 34 and then go on back up to 40. And then let's see if we can, I have to get the drawing tool arrow pointer. And then we could come on up to, well, I don't see the next one. It's not in there yet. Settings. So minus 100. So let's go to minus 1, 23.6. So we're looking at a 44 potential. Price of 44, and we're currently at 38. So that's 6 points for somebody. That's pretty good. 2 new ones. Okay, good. NAT. Nordic American. Shipping. Well, shipping's a dangerous one right now, isn't it? Who knows if you can ship or not ship? So there's the attractor. We hit this level, hit it and broke it, hit it again, got above it a little bit here and broke it again, and then broke it again to the upside. Thing is, gold is staying consistently on top. So this is a level 3 stay with the trend. We've got a tiny little price of 6.63. So not a whole lot of risk with that. All you can lose is $6. But I think, let's see. Let's draw a Fibonacci on that one. Let's go from back here, right here. I think we're looking at 732. So that's a 23% retracement, 7 going from 6.63 7.80 to 7.3. And I don't know if they do any shipping worldwide and go over there in the Straits of Hormuz or not, but it's pretty dangerous endeavor nowadays. IWM. That's the Russell ETF, and it's just going along with the Dow and the ES and going up. They had let's see, the Dow today so far has had a minus 43, and the Russell is similar, plus 0.45. So I think we're looking at a bit of a down day. I have a program called Vantage Point that I use, and Vantage Point is predictive AI, and it says that the market's going to go a little bit up and a little bit down today, and it's gone a little bit up. So we're still anticipating the little bit down. MPC. Marathon Petroleum. Well, let's see. Petroleum, what did that do today? Where's CL? So petroleum is all over the map today, and MPC is up in anticipation of fewer war games, I guess. But we've got the potential of going down to 329, 330, right in there. But it is nicely up today, so if I were a betting person, I would probably bet on this to the upside. It's above the upper outer sunny band. The DMA, you see the DMA has been gold since this point right here, gold on top, solidly gold on top, gold on top, gold on top. So that says, as long as you have a trend, stick with it. And we do have a trend there. SCZM. SCZM. I have 3 minutes left. And this is kind of sideways. I don't think I would bet on this one. And we're above the upper outer band, which is a good thing. We just today are down inside of it, but we're on a blue candle. So I think this one could come down and touch the DMA and then bounce. So the DMA is at $8. We're at 882 today. We have the potential of 922, which is right there. So there's not a whole lot of potential with this one. But you can see it has a downside of 8. This is interesting. Yeah, I think it's going to come down and touch the DMA and this horizontal line and then bounce. So I'd be a buyer when it gets down to that level. We'll do one more. ET is up also. ETSC, and we got that. ET, is that estimated time or is that a energy? Well, we've got the same thing as the shipping line. We've got gold on top. We've got a trend line going. Nice uptrend with the gold staying on top. It's only $20, $21 right here. I think I'd be a buyer of this up to about, let's see where. Come on. Oh, come on.
Okay, Sunny, sorry I have to cut you off there.
That's my time. Okay. I'd be a buyer to 21.60, 50. Thank you, David.
All right. Thank you, Sunny.
And thank you, everybody, for your symbols.
Yeah. All right. yeah, check out moneymentor.com, sunny site. And next up is Wally Alopade. Wally, are you there?
Yes, I am. How you guys doing this morning or this afternoon, I should say? Let me go ahead and
Good.
see if I can share my
Oh,
screen.
yeah, hold on. Yeah, you should be able to now.
All right. And then let me know if you see my screen.
Yes, looks good.
All right. Very good. Okay, good morning or good afternoon, I should say. I still think in the morning time, but we're in the afternoon now. So good afternoon, everybody. Let's see here. Let me see where the chat box is. There you go. That's the chat box right there. All right. So if you have any stocks that you want me to help you analyze, I will be using our software called the Right Side Trading.io software. Something that we use to help us see what stocks to buy, what stocks not to buy. So go ahead and type in the stocks that you want, and I'll start taking a look at it. I was listening to Sunny, a good friend of mine, and some of the stocks that you guys mentioned there. I can bring that up too if you want me to. That's not a problem. We can look into that. Very quickly on our software, we do have a community feed where you can go and you see what other people are talking about as well. So this is pretty cool. You'll see down here where it says SMCI, that is breaking out post earnings. As we mentioned, we have a Monday night weekly review and what stocks to pay attention to. So we talked about SMCI, so that's what they're putting up there. We also talked about SpaceX as well and how this is getting ready to go. This person mentioned that we think it might be at the bottom, and right here it says based on the strategy that we follow, the bottom has already been formed. And so you'll notice that SpaceX has been going higher since then. That was 7 days ago. And then down here, gold is another one. Gold related stocks are showing signs of bottoming, and I'll show you exactly how we see that. I want to keep an eye on these because they're doing well. So gold is doing well, SpaceX is doing well, SMCI is doing well. These are just some that are recent that has been posted on our community feed. So you're able to see, and on all of the people that post on here are people who understands our strategy and looking at stocks that are getting ready to go up. But for now, let's take a look at some of these stocks that you guys are talking about and show you how this software helps us with our analysis. So the first one we're going to put up here is Five. I think it's Fiverr. That's how you pronounce it. But anyway, so first things first is we always look to see what the gauge is telling us over here. And right now it's showing that it is risky on this daily time frame. Right now we're looking at the daily time frame. The sentiment is bullish, however, but the directive for today, which is really last night's directive, is to wait and hold. So what that means is like if you're already in, you stay in. If you're not in, don't get in. So you'll see we had a buy signal on August 4th. August 4th is when we got our buy signal. And then here we are today. And it's like, look, just hold on to your positions. Don't jump into it. For those who already own it, let it keep on riding. It will let you know when you should get out. For those who did not, you missed out on this. So whoever, Isaac, you mentioned this, if you're already in, the idea is to like hold on to your positions. One of the things I do say though is even though it's telling us to hold on to our positions, when the gauge tells us that we're at the top or risky, this is a good time for you to start looking into saying, hey, maybe should we go in and start taking some profits, okay? The only other way you would ignore this sign, because now it's in risky territory, so to speak, meaning that at any point a drop could happen, would be to switch to a bigger time frame. So if we saw this on a daily, we'll switch to a bigger time frame. And then if you look over here on the bigger time frame here now, what this is showing us is that we still got room to go. We're not at the top yet. So it's still saying buy, right? And then notice that today's directive on that weekly time frame is that we should be buying. So the way you look at this now, Isaac, is wait a second. All right. So it might be risky, might be a little bit choppy, but net, what this stock is showing us is that it's going to continue going higher. Does that make sense? So um, again, like I mentioned, hold is what it's telling you to do. So hold on to your positions. For those who are willing to jump in now, then you got to be willing to hold this for like, a couple of weeks. If you're not willing to hold this for a couple of weeks, do not get into this. Does that make sense? What software are we using? We're using a software called the Right Side Trading, rightsideTrading.io. The rightsideTrading.io, everything it's trying to do is analyze the chart and try to help you get a good idea for what to expect on the right side of the chart, meaning that, we look to see what's going to happen going forward. All right. So going forward over here. And right now, the way we look at this is first we look at the gauge. It's letting us know whether we should be buying, selling, or if it's too risky. Then we also look at the sentiment of that stock. We want to make sure that it's in the right direction. If it's bullish, it's telling us it's bullish. And then on this daily directive, it lets us know what we should do each and every day, whether we should buy, whether we should hold, whether should we sell, whether we should place stops, whether we should get insurance. It gives you an idea of what it does. All right. But again, this site right here, rightside.trading.io. All right, so for Fiverr, I would say you're good, Isaac. If you are thinking about buying, you could because of this weekly, and then the other thing too, it gives you an idea of where you can expect it to go. So let me see if I can make this a little bit bigger because there's a little fonts right here. Let's see if we can make this bigger. And actually, let me do this. We'll go here. We're going to make it extra large fonts so we can see this clearly. All right, so hopefully you guys can see this a little bit better. So now over here, down here, you'll see the upper band right here lets us know that this is where we can expect it to go. So this is about another 10% move on this stock approximately. And then for those of you guys who like candlesticks, this is another thing that it lets you know what the story is telling you based on candlesticks. It says Fiverr is, I'm going to call it Fiverr. Fiverr is making a U-turn from the downtrend and gearing up for a bullish rally. Earlier, it showed aggressive bullish sentiment and a strong rally that can surpass the previous swing high. That's good information to know. So we had been in a downtrend. Now it's saying the previous swing high. So this tells me that, we can expect this to get to, this previous swing high up here, which is 433. And notice how it's saying here, 466 is what we're looking. So new all-time highs is in the works for this stock right here. Okay, and then it says the purpose. And before that, it saw its downtrend come to an end and a reversal to the upside was expected, or another bullish signal should appear within the next 5 candles. Taken all together, a U-turn from the downtrend is underway and a bullish rally is to be expected. So very good stock to be in, Isaac. Thank you for that. I hope that helps you a little bit. So let's go to the next one. What do we have here? Apple. Let's go to Apple here. And that's a lot of stocks, so I don't know if I'll have enough time to analyze all of those, but we can see. All right, so let's start here on the daily. I always like to start on the daily. If we look at here on the daily, notice what we're seeing here. Apple is risky, right? Sentiment is bearish, okay? Wait and hold. Don't do anything. So if you are trying to buy Apple, don't do anything. If you already shorted Apple, because you'll see right here, it was telling us on July 31st, is like, hey, go ahead and short. Notice what it said right here. It's like, hey, on July 30th, it was telling us, hey, stop, place your stops. Now, unfortunately, earnings came out, you wouldn't have been able to do anything. But that was one of the cues, was like, hey, with something is not adding up. But then over here is like, it's time to sell short. And right now it's just like, look, don't try to go long on this at all. Nothing on Apple right now is telling us that we should go long. Okay, nothing. Now, if you want to short, that's a different story, but going long, no, it's too risky. Now, the cool thing is Apple is close to the bottom. So this right here lets us know that we're at the bottom. So Apple has dropped enough where it could be at the bottom and getting ready to rally. If it is, this would change to buy. This would change to a bullish sentiment. And then the directive will tell us it's time to go ahead and start buying. But for right now, that's not what we're supposed to be doing on Apple. Fair enough. So whoever asked that question, hopefully that helps you out a little bit. Now we could try to like project long term. So if I go here to the weekly time frame, again, Apple is not necessarily doing well. Notice what it says, get insured or get out of Apple. So there's a reason why it's telling us that you need to be selling. The sentiment on Apple is just not looking good. So please be aware of that. All right. If you're holding on to Apple, then this is where, hey, find some insurance, meaning that either place a stop, go buy some protective puts, do whatever you got to do to protect yourself on Apple, because we don't know how bad this can go. All right, so the next one on here is MSTR. Let's take a look at MSTR. I can tell you right now, just by looking at this stock, not necessarily a stock that is doing anything. You can see that it's just literally going sideways for now. And the sentiment is, again, to sell, this bearish short. So I don't know if you're thinking about buying, but this is not. So what this is actually suggesting is this is a stock that could actually be sloping down. The slope is down, meaning that the sentiment is expected to go down. And the lower band right here is what we're like. So there's a potential that it could drop another 23%. Is it guaranteed? No, it's not guaranteed, but it's giving us an idea. So unless something changes, this is not a stock that I will want to buy. Okay. Again, it told you get in short or get out, and then now exit all your long position. It's literally telling us get out, get out, get out. Now it's telling us to sell short. So I'm not sure what it's doing today because this is as of last night. Everything is based on end of day data. But again, I wouldn't expect things to go higher. And even if it changes, then the sentiment would also change. The directive would change. But when I see the gauge is telling us to sell, the sentiment is saying this bearish, the directive is telling us to sell. Um, you don't want to necessarily be buying, even if it has one good day. I mean, we've seen it where it had one good day, maybe two good days, and then it gives it all back again. So you don't want to fall into that trap. Does that make sense? All right, let's take a look at the next one. And if you have any questions on those, just let me know. Let's go to NVIDIA. Let's see what NVIDIA is showing us here. All right, so with NVIDIA, a little bit different than the others. So right now, as of yesterday, NVIDIA is telling us to wait and hold. The sentiment is bullish. That's a good thing. The only thing is you missed the rally on this one, right? You see, right here, this is why it's good to have this software to kind of help you. On August 3rd was when you were supposed to buy this. This was literally last week. August 3rd, you also had August 1st to buy it. And then after this, it's like, look, if you try to jump in, you're going to be chasing the stock. So you had 2 days to jump into this. And then now it's like, don't chase it, just let it be. And that's right now, it's just saying hold. So there's no signs that says it's bad to go down. There's no signs saying it's ready to go up. It's just that the sentiment is still bullish. That's good. The reason why this is risky is because, again, at any point now that it's reached this top, this is not the time to be jumping in. So it's too risky to try to jump in. More so than you should be managing your trades than anything else. But the sentiment is still bullish. But again, just like we did on Fiverr, we can look here and say, okay, what does the bigger time frame show us? So we go over here to the bigger time frame here, and lo and behold, we get a little bit more clarity as to what to expect going forward. And look at what it's given us here. So very similar to Fiverr, is letting us know, look, it's okay to buy if you're willing to wait in this for weeks to come. And when I say willing to buy and wait for weeks to come, because again, it could go 2-3 weeks of not going higher, just going sideways before it finally takes off. Does that make sense? So this is why it's important. If you're on that weekly time frame, you have to plan to be in this for 3, 4, 5, 6 weeks. Otherwise, if you're jumping in now thinking that, okay, I'm going to get my money by tomorrow, you might be disappointed. Now, if it works out that way, that's even better. But the plan is you got to wait 3, 4, 5, 6 weeks if you're going to jump into something like this on the weekly. So in this case, anybody who had got into NVIDIA on August 3rd or August 4th, okay, you'll enjoy some of the spoils of your investment. But at the same time, the expectation is that it's going to continue going higher. Does that make sense? The expectation is going to go higher, but right now we don't know how long it's going to stay here. And that's why I say just wait and hold. Let's see what it's going to bring. So this weekly gives us an idea of like, oh, the expectation is it's going to continue going higher. So you can still buy, but just, have the right expectation. And again, right here, the idea here is like, about 3.5% move is what we can safely get out of this before it becomes questionable again. So is it worth it for just 3.5%? That's up to you to decide, but it kind of gives us an idea of what to expect. Fair enough? All right. There's another one on here, Poet. I think that's what it's called. All right. So here's Poet on the daily time frame. Okay, so on this daily time frame right now, it's telling us to wait and hold. Again, we had our signal to buy on the 4th. Wait and hold, wait and hold, wait and hold, wait and hold, wait and hold. So it's really not necessarily going anywhere. Right now, it's kind of like topping out. So this kind of lets us know, hey, this stock is struggling. It did have that big move right there, and maybe he took out too much of the move, and then now it's just going sideways from there. So like, look, this is not showing good signs just yet, but the sentiment is still bullish, right? And the directive is, look, just wait or hold. So if you haven't gotten into it, wait. If you have it, hold it. So now the question is, again, let's go to the weekly time frame to see if there's anything that it can tell us as to what we can expect. Now, we go over here to the weekly, the sentiment is still bearish. So unlike NVIDIA and Fiverr, this one is not giving us all the signs that it's ready to take off yet. So you have to be careful on this one. Does that make sense? Who give me this one right here? This is no, not Bruno. Who was this? Ali. So Ali, you got to be careful on this one, okay? You got to be careful. Give it time. Let's let it prove itself. So right now we have it. And if you worry about, oh, but I don't want it to run away from me, don't worry about that. I mean, unless it's earnings that gaps up or they got bought out, we'll have a good chance to get in before it runs away from us. The good news on this is that even though it's still risky, the idea here is the needle here on the gauge is pointing to the bottom. So this tells me that we're at the bottom of this on a weekly time frame. And like Warren Buffett would always say, when stocks are at the bottom, it's a good time to buy. All right. The only thing is, let's wait until we get that trigger that says now is the time to buy, or else we might end up, it could stay at this bottom for quite some time. Does that make sense? And so right now, just saying, look, stay out of it or get insured. But at the end of the day, not time to jump in just yet. Definitely one I'll keep on my watch list to watch this literally every single day. If there's any news that you're anticipating that could potentially rock this stock higher, maybe you want to pay attention to those news. Does that make sense? But the good news is once it's ready to go, there's lots of room for it to go to make it to the top because we are literally at the bottom of this. So that's a good thing to know that you have a stock on your watch list that's at the bottom. So now the only thing would be timing your entry. And this can help you with that. Literally every day it'll let you know what to do. Fair enough? Okay. We have another one, TER. Let's go to TER. Okay, so did I hit enter yet? All right, so here is TER. On the daily time frame, it is telling us it's time to buy. So hoorah, we got one now that is telling us time to buy. All right. And we actually had buy signals as early as July 30th. We had one on August 3rd. And then they waited where they pulled back a little bit. And then now it's telling us, oh, it's time to buy again. And so I would say this one looks okay as far as a stock to buy. If you understand anything about technical analysis, you'll see that this is a double bottom right here. So after this double bottom, it made its first higher high, higher low. Well, guess where we're expecting it to go now? A new higher high. Does that make sense? A new higher high. So be ready for that to start taking off. I'm not sure what it's doing today. Let me see what it's doing on this weekly time frame. Oh, look at this, man. We got plenty of room for this to go up. Who came up with this one? Let me see. Bruno. Good job, Bruno. Thank you for this one. This is looking good. I don't know how you found this, but this is a good one to pay attention to. The potentials are there. Does that make sense? Potential is there. Again, let me see what the candlesticks is actually communicating here. It's making a U-turn from the previous downtrend to uptrend. A big rally or strong uptrend is on the horizon. Earlier showed aggressive sentiment. It suggests that it should surpass the previous swing high, and altogether is ready to go higher. So my goodness. So let's see how far this 496 is what this is projecting. A 23% move, 496. That's new. That's new higher high. Okay. Now, because this is on the weekly, you have to be willing to wait weeks for this to happen. But here is a stock. Now, that means that intra-week and intra-month, we're going to have ups and downs, ups and downs, ups and downs. But where this stock is trying to head to is new higher high. So most people that know me know that one of my fortes is buying stocks at the bottom and riding them to new higher highs. Okay. And this is one of the ways we do this. All right. And so if you look at this, one of the cool things about this software too is we all know market goes higher highs, higher lows, higher highs, higher lows, higher highs, right? What most people don't know is when the higher low is being formed, okay, and when the new higher high starts taking place, right? Right now, this is what we're doing. So anything in the green is part of the higher, the uptrend, and then anything in red is the pullback. Does that make sense? So if we look at this, this would be considered the rally. We've pulled back, and guess what we're about to start doing now? All right. And this just tells me we're in the beginning phases of a new bullish trend on this stock. Bruno, thank you for this one because this is ready to go. Okay. Any questions on this one? I mean, this is what we want to see. This is what we want to see. All right, next one. FTI is another one. Let's take a look at that. Let's go back here to our daily time frame. Excellent. So look at this on the daily time frame. We got a buy signal 2 days ago. And guys, catching these when they happen is super important. And hopefully, we have scans on here that can help you catch them where they're ready to go. So if I go over here to the strategy tab right here, this right here, trend reversal buy. this right here, when I run this scan right here, all the stocks that pops up on here are stocks that are literally getting ready to start rally, just like how we see on FTI. So if you had ran this scan earlier this week, 2, 3 days ago, it would have given you this right here and say, hey, it's time to jump into a stock like this, right? And that's before it reaches the top. Like right now, it's showing that we're at the top. So this is where, again, I say be careful. Even though it's giving us a buy signal, that just means that there's still room for it to go higher. We come down here and say, hey, how high can we expect it to go? Another 5% from where it was, which will bring us to about $79. So new swing high, not all-time high, but new swing high is something that we can possibly expect. And then we go here to the weekly time frame to see what's happening here. And right now it's like it's forming because we had this bearish drop that it took place, and then now it's like, oh, it's trying to go back up again. So um I would look at this and say, okay, let's go for this one and see how high it can go. I would love to see this sell on the weekly turn into bullish, but yeah, this is something that we should be getting ready to go with. All right. The next one, I don't think we have this one on our software, SCZM. Yeah, we don't have that one. Is this a new stock? Do you know if this is a new stock? Let me see something here. Let's see. SC, it's a small minor stock. Okay, so it's not new. Okay, I got to figure out why we don't have this one on our stock. Okay, so I'm glad that you said that. We'll get this on there, but I'm glad that you actually brought up that because silver miner. Let's talk about silver. I want you guys to see this. We were talking about this in our group on Monday night, and I'm telling everybody, look, now is the time to start looking into silver because look at what we see here on silver, right? Now, I know it's saying get in short or get out, but the important thing is the sentiment is beginning to change. So I told him, I said, let's wait till we get that buy signal because we already have the gauge telling us it's time to buy. The sentiment is changing. We just need to be ready for the sentiment. So you could tell like silver was down a little bit right now. So that's why it's like, hey, get in short or get out. But watch this. Watch the same thing with gold too, ladies and gentlemen. Gold, silver, and any gold and silver related type of stock, they are getting ready to start doing something. Look at this right too, right? It's telling us buy, the sentiment is bullish. We're just beginning to have a brand new sentiment. We're literally coming from the bottom of these stocks. We just haven't got a quote unquote buy signal yet, but things are beginning to change. Does that make sense? So don't be surprised 2 weeks from now, 3 weeks from now, a month from now, 2 months from now, everybody's talking about gold. Oh man, I wish I had bought gold. But this is what it's showing you right now that is getting ready to do something. Does that make sense? So I would treat SCZM very similar to gold and silver stocks. Does that make sense, Arif? Treat them exactly like that. So that's just telling me that they are gearing up to go higher. They're gearing up to go higher. I don't know what's going on, what the storyline is or the news is, but they are getting ready to go higher. Oh, look at this one. Oh my goodness. This is a beauty. Who is this again? Oh man, Bruno, me and you need to be friends, Bruno. Okay? You have a way of finding the good ones out here. And the reason why I'm excited about this is what the beginning of a new rally looks like. See how we literally just went from a bearish sentiment, which is red, to a bullish sentiment, like literally this week. I don't care whether it gapped up on earnings or whatever it might be, but the fact of the matter is this is a stock that literally changing its sentiment from bearish to bullish. People try to figure out how do I catch the early bird. How do I catch the stocks that are literally just getting ready to move? This could be it right here. All right. So you having buy signals that take place and stuff like that. This is the time to buy if you're going to run into problems. So notice how we had this right here when it says it's time to buy, but the very next candle it said, place your stops. So you know something is wrong. Does that make sense? So same thing right here. It says time to buy, and it said, place your stops, right? But then if it's going to continue going higher, it would tell you, well, time to jump back in again. So even if you got stopped out over here because it told you to place your stop, but then this happened, then after that, it's just hold on and see this thing really take off. So every time I see this, the confidence I have, the confidence I tell people to have is like, look, don't worry about what it's going to do because now that it's telling you there's something that's changing that's making it do that, and it will let you know when you should place your stop, when you should get out. And even if it tells you to get out, the cool thing is the sentiment is changing. So pay attention to it, see when it can tell you to jump back in again. And then that way you don't miss out. And then let's try one more right here, LRCX. All right, so on the daily time frame of LRCX, we are beginning to see some things change. But notice how right now it's telling us to wait. We had a long stop, exit short, not necessarily buy, not necessarily buy. So even though the sentiment is changing, it's not strong enough yet. Does that make sense? Not strong enough yet. And what's happening here now is that it is not ready to go up yet. And then now it's getting to the point where it's risky. So just be patient on this one, Bruno. Be patient on this one. It definitely has potential. I say that because when I see this on the weekly, I'm like, oh, wow. Even the weekly is getting ready. But just be patient so you don't jump in too early, right? You don't want to jump in front of a moving train. Let's make sure that it's really ready to start heading higher, then we can jump on that. Make sense? But definitely put it on your watches. And here's a cool thing about this. So something like this, even on this software, when you know a stock like LRC right now, what we can then do, like I said, put this on your watch list so that you don't have to, be doing all the thing. You can click on this show list right here. And where's my list? It's supposed to be showing me my list. Okay. Supposed to show a list right here. I'm not sure what. Let me refresh this, see what's going on here. It's supposed to show me a list, and then you can actually put that on your watch list. All right, so let me try this again. And show list. Huh, that's weird. All right, I got to see what's going on, why the list is not showing up here. That's interesting. Okay, I got to figure out what's going on. But yeah, there's a list that's supposed to show up here where you can actually put this on the list. And then that way, every day it will let you know what that stock is ready to do. I got to figure out what it's got. I got to talk to my developer and see why is this not showing. So this box right here is to show you what the list is. And then it also shows you your portfolio. Oh, you know what? I think I know why. I know why. I know why. Hold on a second. I think I took it off. There you go. So show default list by watch list right here. Okay, so there you go. That's what I did wrong. Sorry. So now it's here. So that was operator error. So here you go right here. So now we can go in here and I can type in LRCX and put this on my watch list. Oh, it tells me that I have to select the strategy. So in this case, we pick one of the different strategies right here. This is a buy cover strategy, and we want it to be bullish. This is what we're looking at. And now we can add it to the list. And bada boom, bada bang, it adds it to the list. And so now LRCX will come down here, right here. Okay. And notice how the direction is weight. And so in this case, our plan then would be just watch this. We can even sort this by scroll up here. We can sort this by signal. And then now all the ones that we have on our watch list is letting us know which ones to start buying. So Micron, CIV, that all these that we have on our watch list are all ready to buy. All these are not ready to buy yet, but when they are ready to buy, guess what? They will show up on a buy list, and then now you don't have to miss out on these. Does that make sense? And so, and then once you buy, you can come into your portfolio, add it to your portfolio, and then you can monitor it, and it'll let you know when you should exit, when you should place your stop. So right here it says Amazon place stop, et cetera, et cetera, et cetera. Okay. Anyways, I know I'm running out of time. I only got 2 more minutes. So I would like to invite you, if you want to use this software, test it out and try it, go to rightsidetrading.com. I think we do have a special going on right now where you can get it. It's this, oh, not specials with an S, but this right here. Sorry about that. So if you go over here, you get a premium access to the software. And what this would do is we'll also give you a bonus, which is the day trading version of this. So anybody who's interested in day trading, we have a few stocks that are on there where it can literally tell you what to expect. So this is on the 5-minute chart. You'll notice here at 9:35, it was telling you, yep, it's time to go long, right? And so if you had done this morning at 9:35, you would have seen this, boom. No thinking, it'll tell you, brum, 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 you go long. Somewhere around here, it was telling us, hey, it's time to short. Okay, so at 10:45, it would have told you short, and you would have enjoyed all these drop to the bottom right here. Okay, and then again over here at 12:25, it tells you it's time to go long again, and here we are, and the market did long. So if you're the type of person that doesn't mind going in and out of the market, day trading, and then we can have multiple stocks. We have Amazon, we have the Mag 7, gold, silver, Bitcoin, crypto, all that stuff, Micron, all these AI again, and we add in more and more to it so that way it lets you know without having to think. That's it. My time. I'm sorry about that. My time is up. Again, rightsidetraining.com / rightsidetraining.io / special.
All right. Thanks, Wally.
You're welcome.
Yeah, and I put your link in there for everyone in the chat so they can check that out. And
Thank you. Appreciate that.
all right, and I'll put your name and site in there again. All right, thanks, Wally. All right, and Anka, are you there?
Hi, can you hear me?
Yeah, sounds good.
All right.
All right.
Okay.
Oh, hold on. Okay.
There's a little bit of echo. I don't know why.
Sorry, what was that?
Okay, there's a little bit of an echo. I don't know why.
Uh,
And
let's see.
all right.
Yeah,
Just give me 1 second.
okay. Oh, maybe your other computer it has the sound on slightly or something. I'm not hearing it.
All right, sound check.
Okay. Yeah, yeah, you sound good.
All right, for some reason, I have to shut off this other recording here. So I'm ready to start. Just give me the green light.
Oh, yeah, now I'm hearing an echo from you.
Yeah, I have to shut off because
Um,
I'm in the same room with the other computer.
well, can you just turn the sound off on the computer?
Yes, I will turn it off when I start.
Okay. Okay. All right, I am recording again now.
Good afternoon, everyone. I'm waiting for your picks. My name is Anka Metcalf from Trade Out Loud. And I hope the sound is good right now. Just let me know. Just type a 1 in the chat box if you can hear me okay without any kind of echo. Okay, perfect. All right, so give me your ticks, guys. All right, so until you start typing some stuff in here, until I see like 2 to 3 ticks coming up, I'm just going to tell you a little bit about the market. Okay, all right, Isaac, DAC and DIOD. Okay, let's start with that. All right. Let's start. Okay. Thanks, guys. All right. Deck doesn't look too good. I think it's going to start pulling back. We have some massive support at $92.50. We just dove a little bit lower to $91 this month. And we could potentially start moving lower. This is a huge minor support zone that we have going on here. And this may be the reaction area. This is a very, very weak context. So if you're short, stay short. If you're long, I don't know what to tell you because the next support level is into the minor support area around $79 to $75. So $75 to $79. So this is the new area of support. So it looks lower. And if you're short, the profit target is around $79 and $75. It is heavily downtrending. And as you could see, like multi-year. So I would say there is even a danger zone. If it trades below 78, it's crashing big time. So it should go to around $39 to $40. So it doesn't look promising to the long side, but to the short side looks actually really good. From the quarterly perspective, you could see here, so this is a quarterly chart. Every single candle in here represents about 3 months of trading. And right now we're just breaking down this level right here of $90. So this is very, very weak. From the monthly standpoint, like I said, you know, there's some room over here all the way down to 79. If you're looking for the upside, or if this is an investment gone wrong or something like that, the next level that you need to be watching for is going to be around 120 bucks. So this is the area that would confirm that the price action is ready to continue higher. And until then, it should continue lower and lower and lower, because there's a reason why it has been lower. And look at the volume. The volume is actually, descending. So that's not a very good sign. So from the daily standpoint, very choppy, very choppy chart. I would just stay away from the daily and move on to the higher time frames for more clarity. So this is DEC. All right. DIOD, okay, is the next one. Let's go far out to the monthly here. So this month we've seen a little bit of improvement, a lot of sideways chop that has been going on from 2022 actually till like this little pop here 2026. We had some significant movement and some significant momentum in 2026. And I would say that if the price action is going to manage to get over 109 and 110, basically this is the area that needs to break, and it pulled back to the 10 EMA. So that means that it's trying to establish a new power trend. And if the price is going to manage to get over this resistance high, then it's going to get ready for higher. By the way, the month of August, not too bad, but it really needs to get over this 112 level. And as you can see here, the price action came in. This is a really nice technical pullback into a confluence area. This is the golden cross right here, along with the minor support, which sustains more of the upside. This week is a little bit heavier, but this week is kind of like choppy, and we're expecting next week to be pretty much the same because we have option expiration next week, next Friday. So things are going to get a little bit more choppier. They're going to start losing volume. And from the daily standpoint, I would say just wait until you have a signal into the highs, into the resistance highs before taking any decision. And if you want like if you're already in at a certain price, you can let me know so I could give you my take on that. Michael wants to know about PAR, PARR. Okay, so PAR is so much better than the other two charts. So this is very promising. It actually pulled back. See these minor support levels that I talk on and on and on and on. These are the critical rotational points in an ongoing trend. This is what you want to see. You want to see a stock pull back, or you want to see an ETF pull back to a critical zone like this one. And these, in an ongoing very strong trend, these really hold, because you can see here we had earnings, and post earnings we went down, and then all of a sudden everything is great. So earnings were not great, I assume, or estimates or something along those lines, but it pulled back, and it rotated. So the stock is back to the pre earnings price. So that is very constructive. It had actually 4 consecutive massive days. And look at this sandwich development here. So this is a lot clearer. This is the minor support zone that we have been talking. And the blast off level is going to be over 86.72. This is going to be skyrocket higher. Watch out above, because this is going to be super high. This is a yearly high right here, so it does have a lot of chances of continuation higher. I really love the post earnings reaction, which is speaking volumes. So that's very good. Arif, NAT. Okay, so this is the daily chart, and let's go far out to the monthly. Oh, this could be a good squeeze to $8.20. From the weekly, we just broke out at 640. $8.40 is the target on this one. Yep, that's what it is. It's going higher. So this is really good. You have the support at $6, and on the daily chart, you have the rising 50 SMA. So everything is good with this one. PTIRA. I haven't even heard about this one. Oh, okay, PTIR. Okay, now I see it. Okay, PTIR. Okay. All right. Oh, this is gorgeous. Love it. Absolutely gorgeous. Love the price point. Very few stocks or ETFs are trading into the $20 price range. So I absolutely love when I see this this thing. Beautiful congestion all onto the daily. Superpower trend developed. It's digesting for the last 4 days. The price action is digesting not only the prior highs, not only this minor resistance. Look at this minor resistance. How cute is this? It's exactly, let me extend it so you guys can see it and can see why this pivot impacted not only this price action that pointed in lower, but this one right here and this one, we get a congestion. So we really are repeating the same type of congestion that we had here back in March 2026. So for this reason, you have to be very careful and take this. This could be more of a pinch type of trade from the swing trading standpoint, and it could go higher. So we could see 20 over 21.26, so over $20.26. We could see the price action start moving higher to 23, 25, 27, 29 to 30, and then higher 35. And it has a really nice stop in here. So the risk to reward ratio is phenomenal here. Phenomenal. So it could go like 5 to 6 hours like nothing once the price action confirms 21 bucks. 21 bucks is what it needs, or over $20 and let's say 29 cents or something like that. I would never get it at the exact price here, so I would give it a little bit of room. I would do probably $20.50. This is a really good one. The volume is declining a little bit, so that means that there is a lot of congestion and money shifting, someplace else, but still very strong, very, very nice. I love this chart. From the weekly standpoint, the reason why it's stalling is because it's also into the 50 SMA. So you have confluence resistance from the daily, you have the 200, from the weekly, you have the 50. And you also have a prior pivot high from 2025 here, from February 2025. However, the monthly chart, super strong. So watch this and see how it closes into the month of April, because if in September you take April's high out, it will continue higher towards 30 and 40 bucks. This is a really nice setup in this stock. Michael Ship. All right. So sideways, very, very sideways. It popped a little bit on earnings and then it pulled back down. I like the fact that it pulled back to the 50 SMA. It's still a relatively wide range if you look at the resistance highs, if you look at the support lows here. So it's still, trading into the chop, but it could release a little bit higher. I like the weekly. If I would be trading or if I would be having the stock on my watch list, I would be watching next week's price action, and I will let the candle close on Friday. That's tomorrow. And I would want to see on Monday the price action take out the high. So it would be a weekly buy setup off of the 10 EMA, and not only that, but digesting through this whole entire resistance. And if the price trades over, I don't know what the high is, $16.93, so $17 is going to be the trigger here. So if it takes out the $17, it will start moving higher. So that is, and that's a beautiful trigger right here. The risk to reward ratio is going to be approximately 1 hour into this prior high. And let's see if it has some room to continue higher and where to. $19. So first off, you're going to shoot for a target of about $18.50, $19, and then it has a lot of room to explode higher into the $22. But that's a little bit, like a couple of months. So this is looking very good as well. So very, very nice pick. NOK, the next one. Let's check out NOK. All right, we're going to start far out because this one has been wild within the last few months. And I was watching this, I had a level here that I was watching for a breakout. Very robust April, but I'm sorry, August. But if you look at the chart here, it had the high in June, and then it really pulled back. And I mean, like, this is quite a pullback, like from this swing high to swing low, like 50%. This is insane. So it pulled back a lot. And it may be setting up from the monthly. Monthly looks pretty good, and it looks into it looks like it wants to go into the open. The 50 SMA revisit here is always a nice, it already short. So this produced a short squeeze into the 10 EMA, but the question is, you still have two resistance bands right here, the 21 SMA and the 10 EMA. And the price definitely needs to close this week above the 10 EMA. If it does, then it could go back down. Or if it closes a little bit above and next week we take out this week's high, we could potentially push into the 21 SMA, which is the next test. And if the price action is going to get, there are a lot of ifs here with NOK. So it's kind of like, if you have it like for long term, or you're, you're taking it long term, the 50 SMA was the buy zone, and this would be like, kind of like the first target and the second target into the 21 SMA. But it probably would start continuing higher if it closes strong above the 21 SMA, and it's going to continue higher. It had earnings. So on earnings, I like the fact that it rotated. It went a little bit lower, right? But it found support and it found buyers. So this is actually pretty good. From the daily standpoint, excuse me, still hovering around the 200 SMA. So it's not ready yet to start moving higher. I like the constant volume here. So the volume is pretty good. That's actually a plus for NOK. But it really needs the participation from the weekly in order to start going. And it still has some technical difficulties from the indicator standpoint. RNG. Okay, this is ring. I am an RNG. So this is, I bought it at $59. I have a huge target on it. This could produce a massive short squeeze with a target close to $100. So yes, I have it. I'm in it. And so are my stock swing trader members. All right. Any other picks? Any other picks, you guys? Any other ticker symbols you're watching? Open. All right, let's check open. You guys are not watching semiconductors. They're on fire, and they have setups that are like literally firing today. All right, so open. This is one that is like doing nothing, and it's not going to do anything for a really long time. It's just junky, garbagey, it's not gonna do anything. So open probably over $5.15. It's gonna improve. Look at the volume. Volume is literally dead. Nobody wants to trade this. Weekly, it's back to the 200 SMA. At like I said, this $5.15, it's kind of like a maybe. It's something that I would run away from. So it's not something that I would trade. And then from the daily standpoint, a lot of volatility throughout the day today. I don't know, maybe it had some news or something, because I see the volume spiked a little bit, but it's nowhere near to where it needs to be. So pretty junky. It's a hard pass. LPG. This is another good one. Pop over the 50 SMA. Michael, you have really great stocks, really great picks. So we have resistance here, which is coinciding, by the way, which it's, with the resistance that we have from the last earnings, right? So we had earnings here, then we pulled back, and then prior to earnings, we fell back to the 20 SMA. Post earnings, we kind of like based. I would say this is a strong watch for next week as well. So not this week, but for next week, because like we only have a day left and I don't know if it's going to break out. But this could potentially signal a huge breakout over $48 and change. This could potentially be like amazing. Like let's say tomorrow is going to start trading above these highs. Let's say 48 bucks. This is going to go. It's going to go. However, if you want a tighter entry, for example, for next week, wait until this candle wraps up tomorrow, until it closes, and then take it above the candle high, whatever the high is going to be. So right now the high is 46.64. Take it over 46.70. That would be the high going into tomorrow. But wait until tomorrow. Let the market close tomorrow, and then look at it for Monday. It's really nice. I love it. KE. All right. Sideways junk. Sorry about that. I love the price point in it. The volume sucks. The pattern sucks, but I like the location. However, it is trading in a pocket. Okay. It's trading in a pocket. It's trading between the 200 SMA, this support right here. So it's kind of wiggly for this price point. So you want to see a stock that is a little bit more pricier to have this kind of stop in it. So that's why I'm saying very volatile. Once you see, some pinches to the downside and then trying to hold. And then today, earnings, obviously earnings produces that. But this is the weekly. So the monthly junky. So it's literally contained within super wide range. Oops, sorry about that. What did I do? Okay, let's go back to KE. All right, so it's trading in a super wide range. Here's the resistance, and the support is all the way here. Take a look at the support. So super wide support, super wide resistance. And when you look at the price action, look at where the price action is right now. So I'm going to draw this line right here. Okay, so you just understand the momentum of the stock, Isaac. So this is resistance, this is support, and the price action's in the middle. So basically, this is a 50-50% chance of continuing higher or pulling back lower. So it doesn't have you don't have really great confidence that the price will go up or will go down. It's somewhere in the middle. And 50% confidence into or bias into a trade is really bad. Okay, so you want to make sure that you either test the high, or if you want, because I've noticed that every single time it kind of came into the support, it got bought, wait until it pulls back to around the support level, buy that support, put your stop below the lowest pivot that you have on the chart, and then let it move a little bit higher, but be quick on the profits midway, because you have some points of resistance here and into the highs. So I would skip this for now. There are so many other stocks, plus the volume kind of sucks in this one, and it's very thin, very thin. And by the way, you have this 200 SMA here that has been forming this lid right on price, and it's really pushing the price lower. All right, the next one, I hope this helps. SCSC. All right, this is a really nice buy setup here. This is off of the 50 SMA, nice doji in yesterday's trading session, and today excuse me, we actually triggered above. Let's say, what was the high? 52.26. Okay, close enough. 52.27. That was the trigger for higher. You're still trading against the 10 EMA and the 21 SMA. Look at the 21 SMA here. I want you to take a close look at it. So this was in a power trend. So if I were to buy this, I wouldn't do it because it's ahead of earnings, and I would actually watch earnings before I get in. But what I would do is if you're having this long term, okay, so short term out of discussion, so I wouldn't take it. But if you're long term into an investment account, into an IRA or whatever, you could, and if you're in here, okay, or if you want to get in before earnings, because if you're long term, if your time horizon is 2 years, 5 years, 10 years, then you are not really concerned about earnings. Especially that past earnings, I see that it had a really good reaction. Let me take a look. Okay, so in February, it didn't really have a good reaction, but it had a good reaction here in May. This is what I would do for my long-term account. I would buy it here because it's a really good setup. It's on the 50 SMA, but I would buy it like quarter size, like something like a scale in type of situation. And I would definitely add post earnings if the price gets over the 21 SMA. That's my game plan for that. If I have time for one more, I think I do OOMA. Okay. This is a good one as well. Volume is just around the corner. It's on the 26th. The price pulled back to the 50 SMA. See, let go of the 20 SMA, just like the other stock, the SCSC. But here it did it as well, and then it went a little bit higher. It's definitely in a trend. So this is actually good because it's respecting the trend. I would pay very close attention. Like if you want to get in as as a swing trade, I wouldn't do it right now because earnings is just around the corner. So what's that? Couple of weeks. I don't think it really has a lot of time in a couple of weeks, considering that it chopped around here for quite a while. But if you want, like, for example, this is a setup. So this is, let's say, a technical buy over 21, 22. Contingent, we don't have earnings this close, okay? But this is the buy over 21, 22. If you're long-term, this would be a buy area here. So if the price throughout the day today is going to go here, even though very shallow price action, very low volumes, so the money is going right now is shifting. It's into semiconductors that are, kind of like moving super cool right now. And that's the void of volume. That's what it means. But this would be a buy over here over 21, 22. Again, it would be kind of like a scale in. And that's it. This is a very interesting inside candle here on very low volume. So usually the biggest moves come from these very small, narrow candles. So something is going to happen with it. It's either going to punch higher tomorrow or next week, or it's gonna sit around here around, thanks so much, David, around this area of support into the, let's say, 1950 or so. And this is also a minor support zone. Look at this beautiful, these highs are definitely impacting the pullback and the rotation. So this would be in sync. This is what happened last time when it was here. Okay, so we dove a little bit into this minor support from resistance and boom, it went higher. So it is, you could pretty much have a strong possibility of continuation higher here. So this is pretty good. Yeah. All right. So I pretty much have about 2 minutes left. If you have any ticker symbols left, I have time for one more. Look at Micron. Beautiful buy setup here. This is where the money's shifting. Micron, AMD. This is where the money is going. AMD has a really nice weekly setup. Okay. All right. So my time is almost up. I have like a minute and something left, but I will invite you guys to an event that I'm hosting next week. This is an open house. We do an annual open house for day trading futures. I swing trade stocks and I swing trade stocks and invest in stocks, and I day trade for income futures. And I'm going to let you in on my method on how I trade and what I trade. And I usually trade within the first hour. I trade the power hour. So if you want a first front row seat into my technique and how I day trade and how I look at the market, please go ahead and sign up here. It is free. Okay. 3 days, absolutely free. You're going to be trading with me, and just click the button below here and you have it in the chat box as well. And you can join me next week. All right. So I think, David, my time is up. I'm going to go to the other computer for sound.
All right. Thanks, Anka.
Thanks, David.
All right. All right. Yeah, be sure to hit that link from Anka and check out her open house next week.
Thanks so much, David.
All right. Thanks, Anka. Okay, so just in case anyone missed this earlier, I am recording each of the sessions individually, and those will be available. Also, I am live streaming to YouTube, so the entire unedited event is being archived instantly for you to review at any time. The Timing Research website, I'm having some technical issues today, but hopefully that will be fixed and back to normal soon. Um, every every Timing Research event and show and everything is permanently archived to the Timing Research site, but also permanently archived to YouTube as well. So you can review at any time. So, all right, Chris Sayer of BigTrends.com is up next. Chris, I see your chart. Looks good.
Thank you. How are you, sir?
I'm I I've
I
had
get it. Hey, it's been that kind of day for me too. But hey,
better,
we're here
yeah.
together. And as I joked with the guys here
Yeah.
at the office, these are first world problems.
Yes. Fortunately, Zoom is working correctly, so we can
Yeah.
do that at least
Well,
for
thank
today.
you for having us. So you can see
Yeah.
my NASDAQ 100 QQQ chart here and everything on Thinkorswim.
Yes, looks good.
Excellent.
So I'm going to start my recording again, and then you can start your session. So I am recording again now.
Good afternoon, everyone. This is Chris Sayer. I work at BigTrends.com. If you're not familiar with Big Trends, it was started by Price Headley in November of 1999. Fun fact for you, I was actually one of Price's clients shortly after he launched Big Trends. I'm 57 years old, been trading and investing for almost 40 years. Started when I was 18 years old with some money that my grandmother Sayer gave to me when I graduated high school. She took me to the brokerage firm because there was no online activity back then. And I've been trading and investing ever since. Another fun fact for you, David Cosmitter, our host today, also used to work here at Big Trend. So we have a great relationship with David, his team, our team. So on behalf of Price and everybody here, David, thank you to you and your team for having us today.
Yeah, thanks for being here.
Great, great. Folks, please throw some names into the chat box here. Love to go over what's on your mind today. I've got a list from the Thinkorswim platform pulled over here on the left. You can see it says weeklies. I've got it sorted by market cap. Currently, I'm on the NASDAQ 100 QQQ. And the reason that I have thrown that up there today, as you can see right up here, that little arrow on today's open was a buy signal using our %R method. And that stands for percent range. Now, you'll notice that we're getting this upward movement in the NASDAQ 100. Called a nice move starting back here on April 10th all the way through June 11th. So called a nice move there using %R. So this top indicator at the bottom is %R, percent range. And this nice rainbow of colors at the bottom is ADX, which is this grayish line here, light lavender line. The red line is the DMI minus, and the green line is the DMI plus. The yellow line is the 25 threshold. This is an 18 threshold, and that's a 40. And those things are all important to me. It's one of my favorite indicators to use is ADX, DMI plus and minus. We use %R here at Big Trends on a lot of things. So you can see you get multiple confirmations when you marry multiple indicators. Hello, Isaac. Thank you for throwing in a couple symbols. Let's start right there with ARW. Not familiar with that one. Arrow Electronics. To me, Isaac, it is in a little bit of a no person's land right now. Maybe setting up for a short to the downside. Looks like they just had earnings about a week ago. Estimates were 445, came in at 545. It looks like the market reacted positively at first, but something maybe happened after. Nope, they were running up into the earnings, and then after earnings, it's dropped. So I'm not seeing anything there. Called a nice long move there with %R way back here. April 10th, again to about June 11th, and then missed a short signal on it here, July 8th. Through July 22nd. So no real opinion right now. SPY, if you all are not familiar with that, it's one of the most highly traded, most liquid securities in the market each and every day. It tracks the S&P 500 index. Our percent R system gave a long signal at the open on August 5th. So we are bullish on the markets right now. You can see the green DMI down here getting well above the 25 threshold. You see ADX is climbing. It too is now nudging against the 25 threshold at 24.9373. You've got a DMI minus dropping. So those are all good things to the upside when you use that indicator. What else we have? SBLK, SBLK, SBLK. What do we got here? Star Bulk Carriers. Looks like it came off a long signal here on August 6th, said get out. It's dropped since then, so we're kind of chopping. We had some earnings in there. When did it have earnings? It had earnings on August 5th. The DMI plus and minus are in a good relationship to stay bullish. So we have mixed information here with percent R and the ADX, DMI minus, plus and minus. So with those indicators here at the bottom, I would say hold the stock. We don't have a bullish scenario or a short scenario with percent R just yet. The indicators here on the upper part of the chart, this blue line is a 34 EMA, and these are daily charts. You can see the day right there, D for daily. So the blue line is a 34 EMA, and the orange line is a 21 EMA, exponential moving average. You may recognize those numbers. Those numbers are Fibonacci numbers. I like the fibs myself when I'm using the exponential moving averages. What do we got here? Bosch Healthcare. Looks like it popped on earnings. Earnings came out July 29th. Estimate was 96. They printed $1.26. We were short based off percent R here. Got stopped out for a loss up there after that earnings announcement. And we would typically not hold names. We would typically not hold names through an earnings announcement or enter a new position, long or short, right before earnings. But with the DMI plus and minus, we've got some positive action here on the stock. On that one. What else we got? Love you all participating, given the names there. Again, it makes the time to go by quickly for all of us. I know you're sharing a portion of your day with us, and we are grateful to do that. All right, somebody's throwing in BMY. Full disclosure, I own BMY. Okay, full disclosure, BMY. So I'm going to be biased because I own it. As you can see, I've gotten in 3 different times: the purple, the yellow, and the blue. That's my typical move. And so I have what I call my 3-unit system, and I'm in at all 3 levels. And you can see where I got in on each level on the daily chart. So about break even on my 3rd ad here, up a little on the 2nd, definitely up on the 1st. So definitely like BMY here. So Michael, thank you for those names. Appreciate that. So I'm bullish BMY. It's a full position. Now, if you were curious to know when I would exit this position, as you can see, this orange line, as I told you all, is the 21 EMA, exponential moving average. I will use two closes below the 21 EMA to exit the 3rd ad and the 2nd ad. Okay. Now, the first ad, this lavender purple line here, I will use the blue 34 EMA. All right. That's kind of how I do things. Now, this is more of my investment money, but I do the trading in my 401k account, but I am using a daily chart in and out. So it is deemed longer term money, but I'm using it like a trading account, if you will. So full disclosure, love BMY right in here, but you all need to do what's best for you and your financial situation. What else we got? Let's look at NVIDIA. Everybody seems to be in NVIDIA. Percent R went long on August 6th, so a week ago on that. As you can see down here at the bottom, the green DMI plus, directional movement index plus, is moving higher. The ADX lavender line is moving higher. It's above the 18, and you see the red DMI minus dropping. So I would say if you're long NVIDIA right here, hang on. I like using trailing stops like I just showed you with BMY. That's why I use the exponential moving and averages. And as I told you, I use those on Fibonacci numbers 21 and 34 to give myself some room, okay? You can use 8, you can use 13. If you really want to stay a longer time, you can use 55. It's all about what your comfort zone is there. But I have found over time 21 and 34 work for me. 21 is about equal to 1 month of trading action, right? About 20 days of action in a typical month. 34 just outside of that. So in case we get somebody liquidating a position, we give ourselves a little bit of a wiggle room there. How about Alphabet? Let's take a look at Alphabet. Really nothing happening with Alphabet with our 2 indicators. As you can see, it's below both EMAs there. So no real action on Alphabet. Microsoft's been real strong. Got a buy signal after the earnings announcement here using %R. You can see that it gave the same signal on my first layer of ADX DMI there. And the very next day, it followed through with a second layer add there with the yellow candle. So bullish Microsoft on that. How about Amazon? Amazon is coming off a long signal. It would be a losing long signal, said to get in here, has turned against us, even though the ADX DMI plus and minuses are still positive. Michael says, don't want to hog the suggestions, but if no one else suggests, how about Auto, American Express, and Quad? Hey, Michael, throw all you want in there until other people jump in. Otherwise, I'm just going to go down this weekly's list. So, all right, we've got Isaac back. All right, Michael, I'll get to your other names. Let's hit Isaac since Isaac jumped in once again. Cirrus Logic here. Look at that. Short signal. Been on for a while. Let me zoom this out a little bit. So that short signal for %R actually went on June 24th. Still on, riding it down. And you can see that we've got movement here in about the middle of June as well with the DMIs crossing. You've got ADX, and ADX can even climb on a down move. ADX is just a trend strength indicator, okay? So don't confuse ADX rising that it has to be a bullish move. As you can clearly see here with Cirrus Logic, ADX, this gray purplish lavender line can climb as a stock moves down, as Cirrus has. So right now, short, and if I were shorted, I would use this 21 EMA and 2 closes above it to exit the position. That's what I would do, Isaac. If you're short it, if you're long it, I wouldn't be long it here. And if it was initially a trade for you, this is something I've learned in my 39 years of trading and investing. If you enter a position, and I'm not speaking just to Isaac, I'm educating the team out here based off of my almost 4 decades of experience. If you enter a position, long or short, stock, ETF, futures, Forex, whatever, and your idea is that it's going to be a trade, and then that trade goes against you, don't draw a line underneath that T and turn it into an investment and try to justify it. Follow your system. If your system says this is not working out right here, my trade is not working out right here, close it down. Close it down. Because the mental anguish that you'll go through of watching something that you initially entered as a trade turn into an investment and bleed against you, it's painful. Done it. I'm speaking from experience, okay? So if you could take anything away from me today, if you're in a trade, treat it like a trade. If you're in an investment, treat it like an investment. Those are different mindsets, in my opinion. Those are different mindsets, in my opinion, okay? So, all right, let's go back to Michael. Michael wants to hit Alto. Let's look at it. Short signal %R on August 11th there. And as you can see, DMI minus has popped up above 25. DMI plus is dropping. ADX is trying to turn it up a little bit. And we can clearly see that we are below both the 21 and the 34, and the 21 crossed up here about July 24th. So it doesn't look like there's any positive momentum there. in Alto Ingredients right now. What does this thing do here? Let's see. Produces, distributes, and markets specialty alcohols, renewable fuel, and essential ingredients in the United States. Interesting. Never heard of that name. Thank you for bringing that to our attention today, Michael. Appreciate that. What else has Michael got? Michael's got American Express. All right, American Express, kind of chopping, nowhere land, really. You see the DMI minuses and pluses kind of crisscrossing. You see percent R here between the 20 and 80 threshold. So really not looking for any direction. We've got the EMAs, the 21 and 34 getting close together. So it looks like it's kind of building a little base action in here, looking for a move. It looks like it maybe gapped down here on earnings. What day was that? July 24th. What time those earnings come out? Let's see here. Yeah, on the 24th. So a little move on earnings. It's rallied since, but it looks like we're doing a little base building. You see all this consolidation back over here the first part of July. So no real opinion on AXP right now, either direction. Quad. It's what I try to avoid on the golf course for interview golfers out there. Do not like the quad on the scorecard. What do we got here? Came off a long signal using percent R. Gave a long signal on that breakout there on August 3rd, shut it down back on August 7th, reversed, went against us. But it is positive with a very strong ADX. You got the DMI plus that was high, but you can see DMI plus has come down, but it is trying to turn back up. It is trying to turn back up. Okay. Guy is asking about Apple. Full disclosure in Apple, I am long Apple. Okay. Almost taking a loss on Apple here. If it hits 299.03, I will be out of Apple. That is my pain point. I already have the order working in my brokerage account. So if it hits 299.03, I'm out. Okay. I'll be out on Apple. Apple's turning down. We don't have the 21 below the 34 yet. We had a long signal percent R go April 10th, get closed out on August 3rd. Okay. We got some nice moves here, as you can see, with ADX, DMI plus and minus up in here. That's why you see where I added that first layer. But I'm down almost 10% on Apple, and that's my pain point. If I get down 10% on the first layer, I'm out, regardless of what I think about Apple. I have an Apple Watch on. I have an Apple phone here on my desk. I have an iPad at home that I use every day. So I'm an Apple person through and through. But I follow the system and the indicators, and it's telling me if I get to 299.03, I'm out. Okay. So I hope that helps, Guy. Waiting to see where we go from here. What else we got, folks? How about Taiwan Semi? It's starting to build a little momentum here. Coming off a short signal. Short signal was shut down on August 5th. You see the 21 EMA trying to get above the 34 EMA. You see the DMI plus climbing above the 25 threshold down here. You see DMI minus diving. You see ADX down here at the bottom starting to flatten out and turn up a little bit. And you see percent R starting to race up. We get real excited when percent R gets above 80. That green line represents 80. So we're not there yet, but it is building some positive momentum in Taiwan. Guy, is okay a ticker symbol, or are you saying okay about my analysis of Apple? Let's see if we got an okay here. Okay. Oh, he's saying thank you. You're quite welcome. All right, what else we got? Broadcom. Again, I'm just going down the weeklies list from Thinkorswim based off market cap. Please do not hesitate to throw names in like our other participants have. Love when you all are interactive. Great question, Michael. I'll get to that here in a few minutes. So I'm not allowed to promote big trends today, but I do have something for all of you attendees here in a little bit. My compliments, and the compliments of Price Headley and our team here at Big Trends. So stay with me, Michael, to the end of my session here, almost at 2:30, so about another 10 minutes. But here on Broadcom, we've got a percent R buy signal on the 10th of August. You do see DMI plus moving higher, but now it's dipped back below 25, and the DMI minus is trying to rise, and ADX is actually falling. So Broadcom's here kind of in a basing pattern. We do have a rising 21-day EMA there and a rising 34. So it's building some strength. You see a big gap over here back in June. Don't know how you all feel about gap situations like that. We got a little small gap here from the 3rd to the 4th there on Broadcom. You're welcome. How about Meta? Meta's been all over the board. I mean, look at that chart. These are daily charts, of course, over a 6-month period. So about, half a year, of course. Bounced off earnings. Earnings came out down here on the 29th of July, bounced up, and now it's kind of base building, kind of in nowhere's land there on Meta. Tesla. Anybody out there still trading Tesla? Anybody trading Tesla? Or has everybody moved on to SpaceX now? You can see that percent R called a short here on July 21st. Stopped out. I understand, Michael. I appreciate your honesty. Short signal here on Tesla based off percent R on July 21st. Closed it out on the 11th. So 2 days ago. So what was that, Tuesday? Closed that out 2 days ago. You see nice big moves here. ADX is starting to roll over, showing that it picked up the down trend strength here, but now it's starting to base and rally a little bit. So that's why you see ADX rolling over. Isaac is back with 2 more names. I love the participation from Michael and Isaac. Guy, jump back in with something else. That way we have the trio of participants today. What do we got? PIPR. Flat there, Isaac, on PIPR. Guy, I'll get to that here in just a second, asking what indicators did I use. So really nothing happening here on PIPR. We do have a rising percent R signal. Again, we get interested if it gets above 80, but we do have the negative DMI down here above the ADX and above the plus. So that indicates some weakness there. I wouldn't touch it. Piper Sandler there. On that one, and ECVT, Edward, Charlie, Victor, Tom. Clear short signal here, percent R after earnings on August 7th. You can see we've got the 21 EMA well below the 34, and it's actually been, let me zoom back out. You can see that we got a cross up here back around June 4th on these EMAs. But we started a short signal with percent R there on June 1st, got stopped out on July 17th, and as I said, through another one just recently on August 7th. So we would be short ECVT right now, would be our opinion. We would not buy it or go long. All right, Guy, let me hit these for you. If others have been with me since the beginning, please hang tight. All right, Guy, so I'm on the Thinkorswim platform, Charles Schwab, Thinkorswim platform. The blue line here on the upper part of the chart is a 34 EMA, exponential moving average. The orange line is a 21-day EMA, exponential moving average. The top indicator at the bottom is percent R, which stands for percent range, okay? And the indicators at the bottom, the red line is DMI minus, directional movement index negative. The green line is directional movement index positive. This grayish lavender line that you see rising here on this particular security is the ADX, average directional index. And then I just have 3 different thresholds using the combination of those 3 indicators. I've got an 18, I've got a 25, and I've got a 40, okay? And these are on daily charts. Up here with percent R, as you can see there in the window, I'm using a 20 and an 80, all right? And a 30 bar setting, okay? All right. What else we got, folks? I really appreciate you all participating. Let's see what we got here. Here's a name that's I've been in and out of. This is Lily. This is Lily. You're welcome, Guy. Thank you for your question. So this is Lily, Eli Lilly. It's been a big mover. You can see it's still riding above the 34 EMA. It dipped here. This is where I got stopped out on my first ad when I had my position in Lilly. Looking to get back in on Lilly, but not quite there yet. I feel like we're basing, you see all this choppy action here over the last several weeks. How about Walmart? All right, well, we'll go to AMD first from Guy. Guy's got AMD there before we go to Walmart. Advanced Micro, in nowhere's land. We've got the 21 and the 34 EMAs just kind of wrapping around each other like a rope. We had a short signal given by percent art on July 30th, closed it out on August 5th. And then you'll notice down here the DMIs are wrapping around each other, right around that 25 yellow threshold. But ADX is kind of listless and it's dropping. And then the shadowing you see throughout. This is a setup that I had Copilot create for me. Copilot, the AI package offered through Microsoft. Copilot had it work with me on creating some things here on Thinkorswim, and it's just showing me some potential trend decay when these shadowing boxes show up down here on the ADX, DMI plus and minus indicators. All right. Doesn't mean a sell signal. It's just alerting me that, hey, there's some things going on here, not super strong. You may want to be aware to take action. Okay. If you all are not using AI, I would encourage you to play with it. Is it the free version, the free Copilot version? It's not stellar. We use Claude quite a bit here at Big Trends for various different things. But get familiar with it. Try things out. You'll have to develop a relationship, as crazy as that sounds. It has to learn you and the way you think and your cadence, if you will. But it's been something I've embraced over the last, I don't know, 4 or 5 months. So big down today. And AMD, no, big downtrend today. No, I'm not seeing that. I'm seeing AMD's actually up today, 1.5%. So, but what do we got with Walmart? We were going to look at Walmart here. Walmart trying to build out of this drop down. See, we've got the 21 still below the 34, but the price is above the 34. We've got percent R starting to move up. It teased with that 80 threshold. We've got the DMI plus, this green, and the DMI minus red. They're separating from each other. So that indicates strength to the upside. And we've got an ADX that's turning and starting to climb. As you can see, it was riding the downtrend, and then it started chopping and dropping. So we may have some base building here in Walmart and some move higher. Oh, look at the 2-minute. That's not my world, man. I'm a 65-minute. I'm a 65-minute daily, weekly, monthly kind of guy. But I appreciate that. Ali is asking about Micron. Almost missed that. My apologies. Micron up 6% today. Look at that move. All right, so a lot of noise in here, right? You see a bunch of arrows. You see the short on, you see the short off, short on, short off. So just a lot of choppiness and noise. But we do have down here at the bottom, you can see with the day's nice 6% move, we've got the DMI plus crossing over the DMI minus. We have a definite rising percent R signal. ADX is still dropping and below 18. I would need to see some follow through here. We've got the 21 EMA below the 34, even though the price is above the 34. So my guess is it may continue to rally a little bit, but you've got some resistance over here to the left and do some base building before it moves out even further. All right, what else we got, folks? How about Exxon? Energy's been kind of strong. Oh, you're quite welcome, Guy. My pleasure. I'm glad to be here. Thank you all for attending. I know there's a million other things you could do. And on behalf of David and at his team and myself and Price Headley, our founder and CEO here at Big Trends, we are so glad, so grateful. Looks like my time is about up. I've got to share something with you guys. Where are we? We are here. To thank you for attending today's event, I am going to do something special for you guys. And Michael, this is for you. Michael, you can be one of the 55. And thank you for your nice comment. If you're one of the first 55 traders to act, then you can get access to a very exclusive coaching series. Again, Price Headley is our founder and CEO. Boot Camp Bundle, 10 sessions of video training. Percent range, percent R, we talked about it today. Acceleration bands, that's Price's proprietary indicator. Commodity Channel Index, CCI, DMI, and ADX. You saw me talking about that today. There's an indicator called DMI difference. Efficiency ratio, percent above moving average, momentum divergence, the MACD indicator, market timing indicators, and then the very 10th session is where Price puts it all together for you. You'll get a dedicated email address to our analyst team for any questions, unlimited access to the sessions from any device, high definition video, and you get access to all the slides for every session so you can download it, print it out. So the boot camp bundle, again, 10 sessions, total package value $995. $295 special offer? No, Mr. David Cosminder said no selling today. And as I said, for 25 traders, if you apply the promo code bundle, you're going to get all 10 sessions for free today. That's right, all 10 sessions for free. $1,000 value, $995 value, 55 of you. You get access. You'll get a Big Trends account. You'll get unlimited lifetime access to all of those indicators, okay? This is what the checkout cart's going to look like. You're going to see $295 here. You're going to see a blue hyperlink that says have a promo code. You simply click that and you type in the word bundle and you click apply and it's going to say free. You will have to put in a credit card, okay? You will have to put in a credit card. Click to complete my purchase. Terms and conditions in there, but this is yours free for sharing your time with us today. Speaking of time, I'm over time. Don't want to make Dave mad. Dave and I do some stuff together from time to time. My apologies, Dave.
All right. All right. Thanks, Chris.
Thank you.
Great. Yeah, that's a great offer. So click on that and yeah, check out that offer from Big Trends. And yeah, okay. All right. Thank you, Chris. And Dave Landry is up next. Dave, are you there?
Hey, Dave, I am.
All right.
Can you hear me okay?
Let's see. Okay. Yeah, okay, sounds good. All right. Yeah, enter some symbols for Dave Landry now. So I am and you're ready to start, right?
Yeah, I'm ready to go.
Okay. I am starting my recording again now.
Okay, hello everyone. Thanks for joining us. Thank you, Dave Cosminder, for having me back once again. While we're waiting on symbols, we'll take a look at the P's, S&P 500. S&P's kind of melted up recently. That just had the feel of a short recovery, kind of panic buying. And then we began chopping around a little bit. Now, today's looking pretty good. We're trying to break out, but unfortunately, we're coming back in a little. And it always amazes me when a market just takes off and then just starts chopping around. It becomes a bit of a shoulder shrug all of a sudden. But I'm not going to argue with a market that's making all-time highs. So if we can close up here, especially if we take out this recent high decisively, then I'm not going to argue with that. But I am a little concerned about the drifting action. Semiconductors, yeah, we're just talking about some semis. So far, have just pulled back, but they did get back above their 50 simple moving average. So that's a positive. We're back above, but it still looks like a bit of a top remains in place here. So I would avoid that area for now. Biotech's looking pretty good today, notwithstanding. You can see we recently took out the recent high in here, but as usual, follow through will be key. And one thing that I'm seeing quite a bit of is a lot of these areas make new highs, take out the prior highs, and then come right back in. So that's been a bit of a bummer. But biotech, one of the stronger areas out there. I have a list that I track, and this is not actually traded. My trading service, I actually do take the trades. The Landry 100 is just hypothetical, so to speak, but these are put in here in real time. And if you take a look at the industries, you can see most of the hot stocks right now are in biotech. A lot of these are at or near brand new highs. So we could see some opportunities here fairly soon. A couple of them breaking down, though. You saw that. So that's one thing that I've been seeing lately is it's been a little mixed out there. Some areas improve, and then they begin to come right back in. Okay, any stocks you guys want me to take a look at? Let's take a bigger picture view of the overall market while we're waiting on stocks. And Dave, let me know if you see something coming in. I guess I'm in the right chat on this, but let me see if I can get this new share in here. So we take a look once again at the, all right, good. We'll get to that in just 1 second. In fact, we can do that before we get the share going. Okay, we'll do that. CRS, I think is trending nicely. Let's take a look at that. Okay, okay, this stock is, I'm no longer, it was trending nicely, so I was wrong on that. It had a pullback, it tried to take off, then it came back in. So now it's kind of all over the place. I prefer stocks that trade. Let me just show you something really quick. DINO was in my Landry list recently. Now, I didn't take this trade, but it's a little bit more indicative of what I like to see. Notice that it had a nice persistent up move and then a fairly orderly pullback. And then so far it's rallying out of that pullback. Also, the refiners have been doing really well as of late. I think that's MG 1, 2, 3. Yeah, okay. You see the refiners are banging down new highs today. So getting back to the CRS, you can see that it was taken off, but then it came back in. I think this was in the Landry 100 not that long ago, but it's since been taken out based on this weakness. So I would leave this alone for now. And you have fallen tops in the works here. So there's nothing for me to do there. It's a little all over the place. So as far as my methodology is concerned, there's nothing for me to get excited about there. Keep them coming. Let me just show you something bigger picture-wise with the S&P 500. So I have a really simple system, and we'll put up the P's. And it's called the TFM 10% system. And if we put the zones in here, one thing that's pretty amazing is we never left the green zone, which is the don't worry, be happy zone. Even though the market felt a little bearish, even though the NASDAQ was, let's take a look at that real quick. And I'll explain these zones in just 1 second. Really simple stuff. But the NASDAQ was down in this light pink zone. Okay, this is don't worry, be happy as long as you're in the green. Okay, this is worry. And then down here is be afraid, be very afraid. So this is just 100% of the 50-week closing high. So we made a brand new closing high here. And the NASDAQ, as you know, is yet to make new closing highs. And this is 5% away from that 50-week closing high. And this is 10% away from that 50-week closing high. Now, the system, you sell when the market drops below the 50-week moving average. This is a weekly chart, remember. And also closes below the 50-week simple moving average. Now, the 10% line is slightly above the 10, I'm sorry. Yeah, the 10% line is slightly above the 50-week moving average. So it would just have to close below the below 10%. So if the market dropped from where it is now, 10% to 77,003, right around 7,000 round numbers, then you would want to exit the market based on this system. Now, every now and then you do get a whipsaw, like back here was a whipsaw. It sold off fairly hard, but then it came back. And that happens, as Greg Morris once said, whipsaws are frustrating, bear markets are devastating. You can survive frustration. Now, what's interesting about this, and nothing's perfect, obviously, and you will get whipsawed, as I just showed you every now and then. But if we add in the, and I call it, borrowing a line from Ian McActivey, if we add in the diaper change indicator, yeah, let's see, percent of close, let's see if this is it here. Okay, that's not it. Oh, here we go. And keep the stock picks coming. So we put in a histogram and look down here. And this is what I call the diaper change, okay? So anything above 10% you would have lost. And if you take a look at some of the bear markets back in history, especially like 2009, okay? So S&P 500 lost over 50% of its value. Remember, this hot pink zone is 10%, and the exit would have been right there, okay? Now, you would have lost a little bit of money, obviously, but you would have avoided this huge slide that came after that. And same thing happened in 2000. Your sell would have been right here, and then you had this huge slide. Now, again, you will get occasional whipsaw like 2015, 16, really choppy markets. There was a whipsaw or two back then, but it got you back in fairly quickly. And it doesn't trade that often. You only get a signal every few years, but I think it's worth paying attention to. Super, super, super simple system. My YouTube channel is youtube.com/Dave Landry. And if you subscribe to that channel, you'll see that I often talk about the Landry 100. I'm sorry, the Landry 100, yes. And then also the TFM 10% system. So lots of conversations on that. If you're interested in that, check that out there. But this is a simple little system. This gives me a 30,000 foot view. Even though I get a little bearish on the short term, as long as we're in this don't worry, be happy zone, as a general statement, the market is doing okay. Okay, any more stocks you guys want to take a look at? Be happy to do that now. Let's take a look at all this, the 13 S&P sectors. And while that's loading, let me pull up something else. AMZ, Amazon. All right, let's take a look at that. Okay. Now, one thing about Amazon, the big, thick company, obviously, it's kind of wide and loose and all over the place. And so it's hard for a trend guy like me to go in and trade something like that. And again, let's just go back to that Dino just really quick. And you can see that Dino, nice persistent uptrend, nice little pullback to the 30 EMA. That's a pattern I call a Landry-like pullback, okay? As opposed to Amazon, which looks a little bit like electrocardiogram. So Amazon melted up recently. Looks like that was on earnings, but then it failed to follow through from that. So that kind of smells of short covering. I mean, you never know for sure, but the fact that we've come right back in is of concern. Up or down, it still looks okay at the moment, but I wouldn't trade something like this. And the other thing to pay attention to is the fact that we did make all-time highs. I think that's all-time highs. Yeah, all-time highs, okay? And we took out this prior peak, but it's since come right back in. So that's a little bit of a concern. So I wouldn't do anything with Amazon at the moment. I would leave that alone. Let's see what's rallying today. So here's some Landry. These are what I call the Landry 100 stocks here. And we can see the ZTG. One of the things that I talk about quite often is surprises tend to happen in a direction of a trend, tend being a key word in that sentence. But if we take a look at some of the stocks in here, keep in mind, every one of these stocks was put in at brand new highs. So the refineries were looking pretty good back at, let's say, on the 20th. Let's see what day that is. Right there. So even though it's in the middle of a trend, now personally, I would wait for a pullback like this if I were going to trade it. But as far as this momentum list is concerned, because we have 100 stocks, we just go ahead and buy, so to speak, stocks that are making 52-week highs. And that's the only qualification to make the list. I do look at historical volatility, and I tend to put the more volatile stocks in that are trending before the less volatile ones, because we're looking to capture a big longer-term move. And the biggest one we have right now is SYRE, was put in March, okay? And I just did a webinar, Dave Landry's Week in Charts. It'll be up tomorrow on YouTube and on my website, DaveLandry.com. And we talked about the Landry 100 quite a bit. Now, this one's been in since March, so about 5 months almost. And there's a lot that came out recently that were only in there for a few weeks and sometimes a week or two. And that's kind of the ride your winners, cut your losses short mantra. So by managing this momentum list, and this is something I'd encourage you to do on your own. It's pretty simple to do. It does take a little time, but it's fairly simple to do. You get a feel for the ebb and flow and where the money's flowing. into different sectors. And right now, biotech has the biggest piece of the pie. I think there's about 23 biotechs out of the 100 stocks that are in this list. But anyway, we had some, up until very recently, we had some huge winners, like over 1,000% winners that were in here for like a year and a half or so. So even though I'm kind of slotted as a swing trader, in my own personal trades, we get in for a swing trade and we'll hold on to a piece as long as possible once the initial profit target is hit. And every now and then we'll ride out a stock for a year or two. And that's one of the things, same sort of mentality goes into this Landry 100. As long as it's doing fairly well, we leave it alone. You can see this was put in March. So here's March back here. It was probably on that day right there. Okay, that was added to the list. Now, this is kind of a breakout type of strategy, or it's not even a strategy, it's just relative strength. If you were to do this on your own, you would need to have a fairly sizable basket of stocks, because more often than not, breakouts fail. Breakouts are a tough way to trade unless a market is just blowing and going and breaking out itself. You get in a lot of trouble trading breakouts. So what I like to do with this is get a big fat list of 100 stocks. So you can stay in the ones that are working, and then you can get rid of the ones that are not. Okay, any more stocks? I'm not seeing a whole lot of setups myself. I'm actually seeing more shorts than I am longs at this juncture. Now, keep in mind, I'm a pullback player, and let's take a look at the P's real quick. So if you're looking at the P's, so as a pullback player, the market really hasn't pulled back from this little last breakout. So what I'm looking to do is a market to thrust and then pull back. And I'm looking to get in. I'm not trying to catch that falling knife as it drops, but I'm looking to catch the leg out of that pullback. And that's pretty much the entire methodology in and of itself. And I hate to beat the dead horse on Dino, but there hasn't been a lot to look at lately. But you can see that, again, nice persistent trend, and then it pulls back very orderly to that 30 EMA. And so far, it's rallied out of that. Okay, any more? Quiet bunch today. Okay. All right, let's see what's moving. And this is the other thing too. You can come in here and look at the percent change and say, okay, well, we've got this company. It's a Chinese company that's moving. What is this? It's a refiner. Okay, so we know refineries are doing well. Software, this is considered software. RNG, which is Ring Central. I don't know if I'd lump that in software, but that's what they have it as. Oil and gas refining, once again, you can see not too far from all-time highs. There's that Dino again. And then software infrastructure. Now, software hasn't looked fantastic lately, but I am starting to see some on an individual basis. And that's one advantage of running a momentum list like this, is you start to see things emerge. Like back here when software was chopping around, I was starting to see a few stocks make the list. And you can see software has improved quite a bit. It still has to get past this prior little peak in here, and it's still a little wide and loose. But based on what I'm seeing in the Landry 100, it looks like there are some software stocks that are beginning to set up. Take a look at biotech again. See, biotech, bit of a bummer. It's coming back in after just breaking out. So that's a little bit of concern. Still in an uptrend. I wouldn't rush out and short it unless you're doing an intraday trade on something like this. But that's a little bit of a concern. Some of these areas that are kind of boring that were doing well, like health services, were in these great uptrends, but then it's kind of a Janet Jackson type of situation. What have you done for me lately? And they've chopped sideways for the last month or two. So that's a little bit of a concern. Defense is all over the place. It's just shy of its all-time highs, but it's kind of all over the place. So you want to pick your spots really careful if you're going to trade a sector like that. Transports have kind of been rolling over today, notwithstanding. I wouldn't get too excited just yet, but you can see one of the things that I like to look at first and foremost is a net price change. So right now we're about 88 basis the AYT. You go back all the way to June and we were about at 88. So today's actions is improving, but obviously you want to see some follow through to the upside of something like that. Major drugs have been all over the place. They recently stalled their prior high. So this is a reoccurring pattern I'm seeing lately, is sectors take off, but then they come back in and chop around. So that's a bit of a bummer. bonds have been a bit of a concern too. Glad they're rallying a little bit today, although they're already off their best levels. And let me show you something here. See these moving averages, the 10 simple, 20 exponential, and 30 exponential. Those are what I call my bow tie moving averages. That's another way to help keep you on the right side of the market and to see what's happening in the market and where the trends are. So I'll just throw them on the spiders because that comes up automatically, but we'll take a look at bonds too here in 1 second. So we take a look at the bow tie proper order. So when the 10 is greater than 20 and 20 is greater than 30, 10 simple, 20 exponential, 30 exponential, I call that uptrend proper order. And you can see that it's green when that occurs and it's red when it's just the opposite, downtrend proper order. 10 is less than 20, 20 is less than 30. Now I have a bow tie strategy and I'll show you a stock real quick based on that. And then I want to come back to using it to keep you on the right side of the market. So here's a stock that recently made a bow tie to the downside. And the bow tie strategy, you're looking for the moving averages to cross over and spread out again. This to go from green to red. Okay, so that signifies a trend change. And then you're looking to play the first pullback. So this pullback right here. So you sell would have been right here. And then we got short this one on a gap. And with these transitional patterns, these emerging trend patterns, you want to trade them off all-time highs. And I went into a little bit more detail on trading these a little while ago on the chart show. So keep an eye out for that on my website and on YouTube. Now, let's just go back to the P's real quick. And this works in all time frames. Again, though, as I preach, you want to look at the charts too, because you had green down here, but notice that the market wasn't making new highs. It kept bumping up against 7,000. So always look at the chart when you're using any kind of indicator. I like to call an indicator an illustrator because it doesn't indicate anything. People say, oh, I got this indicator. No, you don't. That'll tell you where the market will be. And I've seen some spam lately. Some AI system says they can predict tomorrow's price to the penny. If I could do that, you'd never see my fat butt again, believe me. But anyway, so you can see, even though it was green here, notice that the market was not making brand new highs. So you don't want to be bullish just on this, but it does help to tell you that, oh, aha, look right here, it turns red. So that's looking kind of ugly there. And you could use this on a weekly basis if you wanted to do some longer term market timing along with that TFM 10% system. And you can see we were mostly green for most of 2024, 2025, and 2026. So in general, the market's been headed higher. We did have this little spill back here, but that turned out to be a whipsaw. But if you go way back in time, you can see something as simple as this proper order, okay? Again, 10 greater than 20, 20 greater than 30, 10 simple, 20 exponential, 30 exponential. It can really help to keep you on the right side of the market. And then I remember, even though you could argue that these signals in here were whipsaws, 2015 and 2016 was 2 ugly years when it comes to the market. The market was all over the place. And that would have been a good time to be out of the market. But if you go back to some of the major bear markets like 2008, you can see you turn red way up here at around 1450 or so. And then the market imploded and lost half of its value from there. Again, you will get some whipsaws, but this could really help to keep you on the right side of the market. Something really, really simple. Notice you were green coming into 2000 for a long, long time, very long time, right? And then you got your crossover up here, right around 1400 or so. And then the market lost about half its value from there. So just a simple little thing to pay attention to. With the overall market to help keep you on the right side of the market, that and a TFM 10% system. Now, this is something I've just started doing recently, and it's kind of cool that stock charts let you do this. Let's see if we could do like a maybe 3 months and see. So these are the major S&P groups. And then what I have here is Landry Light. Now, a while back, we only had like one of these sectors in the black, and now you have a few of them, or in the green, I should say. in the green. So utility's not doing so hot. You can see lots of Landry light to the downside. Highs are less than the moving average. Okay. Healthcare, we just looked at a second ago. Even though it's lost some steam, you can see that for the most part it's green. So that's doing okay. The financials have been doing really well. So they've gone 49 days without touching the 30 exponential moving average. So that's obviously a decent trend there. But anyway, I just wanted to show you some simple little things like Landry light and bow tie proper order to help to keep you on the right side of the market. If you take a look at the energies, for instance, you can see that they have a little bit of upside Landry light. The great thing about Landry light is it's going to show you a trend change a little bit quicker than the moving averages with the bow ties. Now, the bow ties are great to keep you from going in and out of a market too much. MYRG, oops. Got fat finger that one. Let's see. Yes, this looks like a good short, okay? Short or long. Now, the only problem here is the volume's a little low, okay? So I would pass on the short side based on the volume, although based on the price of the stock, it's probably liquid enough to short. But you can see that we just talked about the bow tie. So the bow tie was here and the sell setup would have been right there, okay? This would have been a pattern I call a first thrust or a micro first thrust here. Your bow tie sell would have been right around 400. Really, really simple. Okay. You want the moving averages to go from uptrend proper order, 10 greater than 20, 20 greater than 30. Again, simple, exponential. The downtrend, 10 less than 20 and 20 less than 30. And then you're looking for your first pullback. So your first pullback would have been right there after the bow tie. You had a more aggressive signal a little earlier back here. The bow tie is a little bit more confirmed, so to speak, type of signal. And again, you're just looking for the trend to change with the bow tie after all-time highs, just like this, okay? And then you're looking for a pullback. So I wouldn't short this particular stock. It has chopped around sideways in here, but if I had to decide whether I wanted to go long or short, I would say this looks like a potential short below 320. Anything below 320. You do have some support down here around 275 or so. So that would be one of your targets if you were trying to find out how far down you think it could go. But there's a lot of other stocks out there that are in trouble that might be worth it on the short side. Now, keep in mind, if the market continues to improve, and then right now we're banging out brand new highs, so we're not too far from them. So that's obviously a good thing. Okay, anything else? So my website is davelandry.com. Oh, there it is. And if you go to davelandry.com / a good way to get to know me is go to newsletter. And the current newsletter is going to be at this link. And then the older ones are on the website. But you can see, go to this link and you can read my newsletter. And you could also, like, here's a Substack article I wrote not too long ago. You can check that out. I have a really good, in my humble opinion, Substack area. So check that out. I have a lot of content there, YouTube, and then, of course, on my website. But you go to davelandry.com / newsletter to check that out. We have a minute or two left. I'll be happy to, my link is dead. Link is dead to what? Michael, to everyone, your link is dead. Your screen sharing. Okay. Okay, looks like I'm out of time. I'm going to go ahead and turn it back over to Dave Cosmitter. Thank all you guys and girls for attending. I appreciate you taking time out of your busy schedule to be here. You can reach me at dave@davelandry.com.
Oh, there's Fausto. All right. Thanks, Dave.
Thank
Yeah.
you.
For some reason, just going to davelandry.com is not working. But if you put in the
With the
www,
HTTP. Okay, that's good to know. Yeah, it's
might
I
be
get
a
that. Yeah, on one of my other browsers, I get that, but that's good to know. I'll find out what's happening there.
DNS
It's
setup
probably has something
issue
to
or
do with
something.
CloudShare or whatever, Cloudflare.
Um, okay, cool.
All right, thank you so much.
All right. And Fausto, are you there?
Yeah, I'm here. How you doing? How's it going, David?
All right, we're all we're all having tech issues today.
Well, hopefully you don't have a tech with
So hopefully that's not affecting you, but my site is down and Jake had some tech issues and we just found an issue with Dave's site and so
All right.
it's one of those days, but
I know we had that.
we're getting through it.
No problem. We had that problem late yesterday. I don't know what it is, but we were down yesterday. For the first time ever. You know, I hope
yeah.
it was just a disaster. So I don't know. Something's going on now. Here, I don't feel too bad now. I'm hearing more and more people doing it. So
it's summer, so
that's a good thing.
Yeah.
All right then.
All right. Okay, I see your screen, and are you ready to start?
Yeah, we're ready to start. Say about 30
All right.
minutes for all these wonderful people.
Yeah, and I'm starting my recording again now.
All right. All right, everybody. Welcome. My name is Fausto Puglisi from Cybertrade University, president here and founder for over 35 years. We're going to talk about some stocks that we traded and what's moving on in today's markets. For some of you who don't know who I am, I'm one of the original day traders. Been doing this for over 35 years. I'm based here in New York, and I was trained by some of the best traders in the world. And I'm going to teach you something that's called order flow. It's what we mainly show people in the market. Not looking to change anyone's style or anything else, but you know what? We just try to focus on what's called the right side of the chart. And the right side is seeing where the orders are and everything else. Now, I'm just going to hop over here really quick, and I want to share my trading floor. So as of right now, here you can see our floor. Let me get my crayons. Actually, this might help too. So guys go follow along. Here we go. All right, you got my little pointer right there. Okay, so what you're looking at right here is I'm going to invite all of you to come to my trading floor for one whole week. And basically what we're doing is we're looking at stocks that are moving. We're seeing stocks that are moving in the market. We're giving some alerts. This is Josh, one of the instructors at Cybertrade University. He's talking about ScanDisk. There's a new buyer out there, order for $15.50. So, you know, right now they're going to be broadcasting audio just in about another minute. You're going to hear the audio, but I want to just show you that what we're doing, we're trading traders. We're using direct access brokers. Like here's Mumu, one of our partners that we do a lot of education for. And you can see the traders chatting with each other. So what they're looking at is a bunch of stocks. And I just want to let you know what I have right now. Did anyone hear about this stock, INHD? I don't know if anyone saw it earlier. INHD, anyone here? So INHD, yeah. So INHD came out of nowhere. It started this morning right around $7. And you could see how the thing just basically just took off. Now, I own the position. Actually, you know what? Before I give away any more, no. I got out. Okay, I got out. It's getting halted to the downside. So I was doing pretty well, actually. What did I make on that trade? Yeah, only 500. I just wrote it down for a little bit, but I just got out of it. I sold it. Okay, so the stock right now is halted. How do we know? Anybody know what halted means? Basically, you see the stock just basically stopped. Those are the quotes. So if the stock goes down too fast at one time, what's going to end up happening is they put what's called the circuit breakers. They halt the stock. So the stock was going very, very fast. I was able to sell it before they actually went down. You know, it got halted. You don't want to be stuck on a stock that got halted on the downside. You could see right here, this was the last print. And now on NASDAQ, looks like prints are at $10. So if you didn't get out when I did, now you're looking about another $2 lower. But overall, it was a nice little mover. It ran from $9 and ran to 15 in a matter of, what was the time frame on that? Less than 30 minutes. Not bad. That's day trading at its best. All right. So anyway, I'm out of that position. Now let me teach you guys a little bit more about trading. Okay. So there's a couple of stocks that we've been trading in the market that have been doing really, really well. I don't know if anyone here has been following me on YouTube or Instagram or TikTok. So what I like to do is I like to go to my YouTube channel, and let me bring this up for you. Going to go to YouTube and click right here, go to my channel. So if everybody, if you can, here's our YouTube channel you can go to. And what I'd like you to do is I want to show you a very good trade that we did today. Actually, the swing trade that we did on SpaceX. So right here where it says shorts, everybody see it right there? Click on shorts, and I mean, you can see here on our website, on our channel, we got 4,400 videos we've done over the years. So the last one was this one right here, 2 million share buyer. Now, what I want you to do is I want you to listen very carefully to this video, okay? And if I have to, I'll play it twice, because what I'm about to show you here is what we're going to see why and how you could have got into SpaceX. Listen carefully.
Did you guys see what happened with SpaceX today? Right now, as we speak, there's a 1.
Hold on. I got to do it again. Ready? Hold on.
Did you guys see what happened with SpaceX today? Right now, as we speak, there's a 1.6 to 2 million share buyers sitting between the $100 and $105 at a support level. Now, is this the bottom? What do you think? These are not retail traders. These are institutions stepping in right now. This is exactly why we follow the order. The big money leaves its footprint. And if you know where to look for, you could spot them too before they happen. So stop guessing and start following those institutions.
So what you can see right there is looking at SpaceX, and I'm going to bring up the long-term chart here. So when I posted that video, actually, I'm sorry, this is the ETF that we also trade. There's SpaceX there. Okay. So you can see SpaceX right here. When you watch that video, we were talking about this big support levels right here. Now, I don't know if anyone here could answer this question. It's a very simple question. How do stocks go up and go down in the market, everybody? Can everybody answer that question? What drives a stock up and down? Michael, Ralph, Douglas, anybody, anyone, just so I know you guys are following along. Mike, you're right. Guy, you're right. Well, Ali, not really. It's not institutions. It's not institutions. It's not pressure. Arf, you're right. It's buyers and sellers, guys. That's all it is. Buyer. Could everyone just write that down? Buyers and sellers. So I'm just going to teach you basic trading 101. You're looking at a stock, SpaceX, when it went public at 150, went all the way up in 3 days to around 200. And then after that, it went all the way back down to 100 right there. See that right there? So could you imagine owning the stock on the 7th or even the 6th, right at 105? Because guess what? It went to 150. All right. Why did it bounce and stop at 100? This is the $1 million question. I want to bring SpaceX here for you guys to watch. This is called level 4. All right. Now, this is what we teach you at Cyber Trade University. Now, this is not the Fausto method, whatever. This is how Wall Street market makers trade. So if you look right here, this is 9:30. Okay. This is all pre-market. And this is when the market opens up. You see that number right there? That number is that big iceberg order. So even though I made that video several days ago, that same order at 105 and 100 is still there. That is called program trading. Okay. Those are all the high frequencies, boogeymans that you guys thinking about that you probably never knew you could see, but you can. right? So when you're sitting there and you're looking at the stock and say, well, how did you know it was going to bounce, Fausto, at 100? I didn't know. I'm just following the orders. That's where I know Wall Street is. And how do I know that? Because I'm here on Wall Street. This is where I live. This is what I do all day. Okay. The traders, they live in my town. You're not going to beat these people. I tell everyone this, but you could join them. By joining them is just using the same tools that we use as Wall Street market makers. Now, the next question is, now that we found it was going up, now the next question is, how do we know where to get out? Well, do you see the next biggest seller out here? You see this orange line? That line indicates there must be a lot of shares out there. If you follow that line all the way down here, you got 560,000 shares out there. Let me, I love doing this sometimes to remind people what that means. So 1.7 million shares at $100 is $170 million. You're telling me you're smarter than that big buyer at 100? Okay. Now, 560,000 times 150 is 84 million. So it's $84 million trying to get sold at 150. Okay. Now, how would we have known to get out at 150? Let me just show you here on the chart. All right, this is the daily chart. And let's just do it right here. Let me draw a trend line. Let's look at 150. Look at 150. See where the high was? 149.60. You notice another hit 150? Okay. You don't think they know that he was out there? So if you didn't get out at 150 or even got out at 148 or 147, oh, but it's SpaceX, it's going to go up. Okay, great. You could always buy it back cheaper because look what happened. It ran all the way down to 140, right? $140 it dropped down. So why give away a 50% profit when you could, now you're down to 40%, but you still made money on it. But the thing is, it's all about having a game plan. So, our short selling, covering, whatever, who cares? I don't know. I don't think you really care either. Okay. I don't know if somebody's short at these numbers, whatever it is. All you know is there's a big block order out there to buy and sell. Okay. Now, let me just ask everyone a very simple question. Did I lose anybody yet? Did I confuse anyone? Just give me a yes or no. Yes, you're confused. No, you're getting it. Because trading, that's good. Everyone, Guy, you following along? Right. So listen, give me a stock, any stock. Anyone here looking at a stock trading? Give me a stock that you want to look at. We're going to have some fun. Give me a stock. Nate, it's got to have good volume though. Nate, maybe. Let me see. Nate doesn't look terrible. Let me type it in. NAT. Palantir, NVIDIA. Those are all pretty good ones. Well, you see those. All right, hold on. We got to load up the data on that. Let me just X out of some of these that I'm not watching anymore. Okay, here's Nate. So you could see Nate. Let's look at the chart really quick. So you could see Nate over here that you have a really tough time getting past 170. Okay, does everybody see that? And not only that, but you could also see here on the bottom chart, right there. So right around there, 675. It never went to $7, but it's having a really tough time. When it hit here back on this day, it went right back down to 550, 750. Okay. Now here's the orders. See that orange, yellow line? The darker the line, the more shares there are out there. The lighter the line, where you get black and light blue, the less shares. Look at all the big orders where they're hovering. 676, 675, 670. All the orders are already there. So this morning, when it ran from 6:30, it literally took less than 5 minutes to get there. 30 minutes. After that, you think I want to sit here for several hours hovering at the highs? I know he's there, the seller there. Now, can the stock go higher? Absolutely. Under one or two, actually two things need to happen. Number one, that someone has to buy from him. Or number two, all those people that are out there decide to cancel the order, because that could happen. People could change their mind. You change your mind. I heard people actually go in front of the, get married at the podium, and they walk out and say, you know what? I'm thinking twice. Forget it. Sorry. All bets are off. I'm like, wait a minute. We're at the wedding. We're getting married. Yeah, I changed my mind. I was in love with you for 5-6 years, but you know what? Something happened 5 minutes ago, and I'm not in love with you. I want to get married. And I'm using that metaphor to explain to you here that some people will look at me and say, Fausto, but I thought you were a big fan of the stock. Now you're telling me you short it? What changed? The orders. That's what changed. And that's what you have to focus on when it comes to trading. Let me go check out another couple of stocks. Ali says Palantir and NVIDIA. Do I have NVIDIA up here? I thought I had it. Let's get that one. Sorry about that. Let's go Palantir. Palantir was a good one. So as it's loading up, let's bring a Palantir over here. PLTR. Okay, so Palantir has been having a really nice run. When I draw a trend line, it looks like there's some resistance levels right around here, right? Looks like some resistance in the past. Maybe up here around 90, right? All right, so let's look at the orders. Hold on. Got to do a quick update. Here we go. 368,000 share seller out there at 180. No wonder why it's not getting past 180. You got a 368,000 share seller out there. I'm just getting more data. Go back for the end of the day, see what we have. Trying to get the rest. There you go. All right. So you could see that this order has been out there for a while. That big order right there, 368,000. Ali, let me ask you something. Where are you getting your information from, Ali? What do you trust more? A mathematician who invented an indicator, or the 368,000 share seller out there? Because I don't know about you. Indicator can't spot that. Can anyone get this data? Only subscribers. Arif, listen, everybody here is going to be able to get it. Now, if you want to get it, I only got about another 10 minutes. Okay. But I want to give you guys a week trial. So if everybody can go to ctu.co/free, put that link in there. And I'm going to do another program and teach you how to do this. So let me just go to that page. CTU code free. Why is it not coming up? Oh, that's why. I forgot it.
You're missing a W. Hit the link and that reposted.
I thought I was gonna get in trouble too. Oh, there you go. All right, so basically we're gonna have a week trial, 1 week free trial. Just sign up. That's all you need to do. All right. But we'll get that up and running. But let me go over a couple of more trades for you guys here. Another one brought up. What was the other one you guys brought up? What was it? That was a good one. Oh, NVIDIA, right? NVIDIA. That one has good orders. NVDA. Let's see what's happening with NVIDIA. Bring up NVIDIA here. NVDA. All right. So NVIDIA had a really, really, really big support levels right around 190. And right now we're trading right here at 125. I could say that there is a lot of resistance levels here at 130. Okay. Ish. All right. Well, there's only way to confirm it. You got to see the orders out there. So here's NVIDIA. Are we still getting more data? Yeah. 6 hours. Right now, it only gives me the last hour. So I have to kind of like add, got to give it some more data. So you can see here at 630, 985,000, 700,000 at 235, 600,000. I mean, look at all the orders out there. Huge amount of orders. Let's go back a little bit further. Just want to get some pre-market action here. So when I move this over here on the right, now you could see basically where the support and resistance levels are. All right. Let me move this a little bit further up. Because right now we're at 125. There we go. So the more we zoom out, now you can see some of the smaller orders. You got 167,000 at 127, 190 at 128. It breaks 128 is definitely going to test 130, 230. If you could break to 228. I mean, definitely could hit that right there. But that order at 230, my God, you can't get better of a resistance levels than 230 with that big order of 974,000 shares. All right. Does anyone have another stock you want to check out? Anybody else? Let's go check out Tesla, by the way. Tesla's been doing phenomenal today. Phenomenal. Okay. So if you've been following us on Instagram and TikTok, we've been talking about Tesla for a while. Tesla hit a high here. Actually, this is the ETF. There we go. So Tesla took a big hit, went from 440 all the way down to 300. Now, 300 was a big support levels. Not that it's going, you could see it going up, but if you draw a trend line, you could see back here in June, July, August, big supports. Not only that, but if you go back all the way to 2022, look at the resistance. Resistance. Then we have resistance again. Then we had resistance. Then we had resistance again. Then remember, once we're above it, it becomes a support. Now, what number is that? 300? Here's level 4, and here's 300. See the order out there? 88,000, 310, 315, 320, 325. But now we're getting orders that get taken out. So let me, I mean, this stock going from 336 down to 300, it's too late, right? So now we got to think, is it too late for us to jump in here? Well, let me zoom out here. Let's go see some orders. So we had a big order out here at 340. And now our next biggest order was 342. Wasn't like the big ones, 80,000s, but it's pretty big. This order getting executed was pretty substantial right here. If I move over, let me see how many shares that is. A little bit more. There we go. 51,000. You see it in red? 50,600 shares. And then it went close. Then it went to 342 to 21,000, and now it's backing off. All right. I had another one over here. I want to do Coinbase. Actually, I want to do what are they trading in our room right now? They're trading FIG, FIG. Let me see what that looks like. You see it right here. They're looking at the stock FIG right here. FIG had a good move today, 24 to 26, and it's still pushing higher. So that one looks pretty good. Let's check out that one. So FIG, you could see a good run. Look at that beautiful run on that FIG. Unbelievable. From 230, it's just been rocketing. It's up almost $2. Now, is it ever too late? Well, you got about 35 minutes until it is. So anything could still move. So we're going to do this, finish up with this one as the last one. We're going to type in FIG. See where the orders are. You see there's an order out here at 27 and 28. He actually had more shares, but looks like he canceled it. See how it went from like orange to yellow? He probably had more shares than that. Let me see if I can get that back, that data. Sometimes I like to see what he actually had, but he definitely had an order and he canceled it. $80,000. It was 80,000 shares. He pulled it. That's a good sign. That's a good sign. It probably can go up. I think that guy probably had second thoughts. He's been out there for a long time, it looks like. Long time. All right, traders. So before we go, let me post up that link one more time. Where is it? Here we go. So if you like what you saw and you want to learn a little bit more about order flow, you want to know how these market makers go out there, put block orders out there, come and join us. Just sign up free of charge. You know, our goal is, you know, to educate traders. Listen, there's a big failure rate in this industry. And when, you know what, there's nothing better than knowing how to play the game than losing money, because losing is obviously not fun. All right. Anyone have any questions before I pass over the mic back to David?
I got one for you. It's Norman.
What's up, Norman?
First, I want to say, you know, you knew order flow and it was a trickle. So anybody that's interested in order flow, you got it. But what's your favorite? I'm going to be showing them something about copper. What from a commodity standpoint, what is your favorite? Is it still Freeport? I mean, when somebody wants to get into copper, maybe you can bring up the Freeport chart.
You know what? I don't trade futures.
Oh, no, not futures. I'm talking about stocks that involve copper.
Well, is it what's a stock symbol in copper?
Well, no, I'm not looking about copper. But Freeport McMoRan used to be a stock that's a mining stock.
Okay.
Anyway, I thought maybe you were on top of the copper because you know, with all the military.
Well, with all the military going on, we've been watching stocks like oil stocks, or you have a couple of ETFs that are out there that we would trade. But you know what? There's nothing going on with the war. The war really has an effect that, you know, other than some of the military stocks that were moving a little bit, but that party has gone and sailed. There's so much other stocks out there, Norman, that they've been doing better, like stocks like FIG, like stocks like Oracle that took a very big hit. A lot of the tech stocks are, you know, a lot of these memory stocks and like HP are doing really well. Dell has done well, has made a big comeback. I mean,
so
really
computer stocks.
Yeah.
I mean, I knew you'd be on top of it, so I was just wondering what you're thinking about it, because I do think that, I mean, the war game, the war play is over, and I know a lot of people are still talking to me about it. And I thought since I had you, I'd ask about it because I'm not into the stock game too much.
Yeah, no problem. Well, you're in the psychology part of it, which is awesome. So you guys are definitely for a great treat, because I learned a hell of a lot from you, Norman, having you on. So that's probably the best thing. But
well, good to see you.
Good to see you too. And guys, thanks for listening in. Feel free to register, and everyone here. David, you're running a great show. Thanks for having me again, and look forward for the next one. Have a great day, everybody.
All right. Thanks, Fausto. And I'm going to post his link again for everyone. Check that out. And next up is Norman Hallett.
And there he is. So good to see him. You know, he's been He looks great.
Yeah.
It looks like the market's been good to him.
Yeah.
Which is good. How are you, David?
I am. We're dealing with some tech issues today, but
Huh.
otherwise,
Well, hopefully
um,
I can give you some solution.
but yeah, we're otherwise it's been a good day. So, uh, um,
Beautiful.
so let's see. You should be okay. I see your chart now,
Okay,
and
you got my
our
chart. I got the chart up. We have enough people here that at least some of you may be interested in the commodity market. You're looking at the euro dollar, which I was trading today because I'm going to Italy next week, and I wanted to see how much the bank was ripping me off when it came to conversion. But I did trade it today, and what I want to do today is to I'm kind of an old school guy. I trade what I see in these candle charts, and whether you're a stock trader or a commodity trader, I'm going to show you how I add up the edges um, in order to decide which direction I want to go and which and how strong I want to go. I think that position sizing is probably a lost art, and I think those people who are not cognizant of it or don't take advantage of position sizing is probably losing a lot of money, or they may be overexposing. So if you've got any commodity charts out there, maybe the S&P index, you want to know my opinion of what's going on, I can give you the long term, and then I'll take a look at possibly the short term chart to give you an idea of how I go about my thinking process. Of course, when I look at it, all that I'm going to say in 3 or 4 minutes probably happens in my mind in about 3 or 4 seconds, but I've been doing it for a while. I want to slow it down in my mind and give you an idea of what I believe are at least my version of a responsible way to be trading. So anybody do we have any wishes out there for a well, let's go right to the most popular, which this is the MES, which is of course the S&P index, and I'm going to remove this. Let's go to the daily chart, and just to give you a general concept, whenever I start my trading day, I start out by looking at the daily charts of the markets that I'm going to trade, and then I move to the shorter term charts. And the reason I do that is that I look to create or identify what I call an undertow. It is the longer term, the longer period charts that influence the shorter period charts. And the greatest influence in a general term is the daily. The 60 is important, and then you can get down to the nitty gritty with the 15 and so on and so forth. But I always look at least the daily chart, and then the 60 if I become real interested in what I see in the daily chart. And I think if you're looking here at the daily chart, you're looking in a market that just doesn't want to give up. I will show you one technique that I use that I think is probably one of the most accurate and simple techniques that one can use, and that is wondering how long how far a particular breakout or breakdown will go. In this case, let's take a look at this accumulation. First, this is the ES chart. Of course, it's the micro contract, but again, it's the S&P index. And if you look at this accumulation from this point around here to this point, where we're going higher and lower in the same price range, when you get the breakout like this, and today was a very important day, I think, because tomorrow would likely be a follow-through day from the reports that we had, the CPI and the PPI reports in the last couple of days. But what I do is I look at this horizontal distance, and I take when we had paper charts in the olden days, we took a protractor and or compass, I'm sorry, and put the needle here at the end of the accumulation, and we put the pencil here in the beginning, and then we rotated we kept the pin where it is, and we rotated it up, and that gives you an idea of where this breakout could wind up going. If this was a breakdown, I would be taking my if it had broken down instead of up, I'd be wondering how far can this go, and if I took this distance here and made it vertical here, I would be looking at something that would make sense, because you'd have a bottom here that would be checking, so you'd be looking at certain things. But that's a pretty good idea of what's going on. Now, do I think it's going higher? If it breaks out, that would be the potential that I would see. We have a accumulation here, which often happens against this is the 8-bar exponential moving average. I believe it's the golden mean. We should have a number of names for it. I mean, some people would argue with me that it's the 9 EMA. I like the 8. It's a little bit tighter. I also use the 34 EMA as what I call a backstop. I won't be explaining much about it today, other than to tell you what it is, because somebody's going to ask me, what is the white line? But this is a short accumulation, and I would be looking for a movement, a quick movement here over the next couple of sessions, just because we had our breakout. Where could this go? Take this horizontal, make it vertical. So we've got somewhere in this 7,900 area. And of course, that makes sense. It's a round number, which human beings seem to like, and so on. So that is, want to kind of give you that trick while I had you. But look, this is a chart that that doesn't look like it wants to quit anytime soon. And this is really the importance of trying to tell your brain a story, because your brain is telling you how could it go on. We have to have a correction, and certainly there are corrective actions when you get a movement like this. You have this kind of you have an accumulation. Sometimes the accumulation is a sideways movement. Sometimes you have a little bit deeper correction to a Fibonacci retracement number. It looks like it barely would reach that the first Fibonacci number here, but I don't even think it did that. But so you're always looking for pulses in the market that give a particular rhythm. You can see a rhythm here in the market. You can see a rhythm here, even though it's a little bit less identifiable. You have a rhythm here, a rhythm here, a rhythm here, a rhythm here, and you know, many times I look at these rhythms to decide where I am. You know, when you're in a movement like this, and let's say of course, when you wake up or when you turn on your computer, the breakout has already happened usually, and you're saying, "Hell, should I get in or should I wait for a correction?" That's where I like to look at rhythms. And you know, when I see a rhythm like this, and then I see a rhythm coming in here, I measure this, and you can see just by eyeballing it, you've got about the same distance here. So this breakout here would be a buy point, because it matches the rhythms that I'm looking at. There's a number of other reasons to believe it's a good spot to get in. I always love this formation. It's one of my favorite. It's actually one of the basis of our loaded gun simple trading plan, which is looking for a doji or a spinner followed by a breakout candle over recent highs, of which you have here. You have another one here. This is a beautiful loaded gun signal. The best kind are the ones that go through this 8 from one side to another. And look at where this particular symbol led. Just a beautiful kind of thing. Anyway, that's you know, there's no reason to doubt the S&P index right now. This is the daily. Let's look quickly at what's going on. Of course, there isn't much value except for to show you how I may look at markets as they flow and what they look like. But for tomorrow's trading, you'll have a whole new chart as the night trading. This is the 5-minute. This is the 5-minute candle chart. I like the 5-minute because it gives me a little bit more time to anticipate a setup. It gives me more time to place my order. The 1 minute and 2 minute, if you're a day trader, The 2 minute is useful. The 1 minute I always stray people from. Here's that formation again that I talked about before. A spinner, a small body of indecision, followed by another movement through the 8. Beautiful. Look at where this leads. Now you always ask yourself where, how far can this go? Should this have shaken me out? Now I do want to talk about. Fausto was kind enough to mention that my ballywig, my emphasis with traders, especially when I coach them one-on-one, is yes, the technical part and so on. Where here's that symbol again on the on the south side. I think you can see how important that is. But the mental and emotional game. This kind of movement can knock somebody out of a trade, which I just want to mention two things. When I'm in a trade, and I mean, once you've passed this area right here, you start asking yourself how far can this go? I'm always looking for, my basic rule is I want to see 2 closes below the 8-bar exponential moving average. And somebody, now this could scare people. A professional trader isn't scared by this kind of movement because they know that a close is the most important part of a bar, of a candle. The Japanese really didn't think much of the wicks, so it's important to let a candle close, in my opinion. And you can see that we had no closes below the 8. Here's one close below, two consecutive closes below. I would have been out here if I didn't, here there are several other reasons to get out. This is that formation that I talked about in reverse through the 8. That would have been another reason to get out. But so the idea of this is where I find most traders are weak. And that is, where do I get out? You're afraid of staying in this kind of move right here. This counter move right here would have had most trailers bailing out of this and missing the rest of this move. And really, I find that traders jump out of windows not because they lose, but because they left a lot of money on the table that they could have had. So you've got to let a market flow when it's flowing. Here's another. This doesn't look like much when you're reviewing it, but this kind of movement right here through the 8 without a close, this kind of would get a lot of people out of here, right here, and miss the rest of the move. So the mental and emotional part is I believe, is the missing key to most traders losing. It's really why most traders fail to win over time. They just they really have they have an issue with revenge trading, lack of patience, etc. And I might as well flash this at you right here, right behind this this icon here. We've got a new product that is it's called the Disciplined Trader. It's called Tisha, which is the Disciplined Trader AI Companion, and it's always resident here whenever I need it. This right here. So while I'm trading, when I come to a situation where I'm starting to feel nervous or I'm starting to I'm uneasy because I've waited now an hour without a trade and I'm starting to make up trades in my head. I know I shouldn't do it, but I've seen myself in the past do it. I bring up this is Tisha AI. This is your, you've got Alexa, you've got, I know it's gonna ask me what I want now. You've got Siri, now you've got Tisha. This is an AI companion. What you do is you click on this speak button and you, and you speak something like, I just had a big trade. I'm feeling overconfident. Help me out, calm me down. And then you click send and wait a few seconds, probably 15, 20 seconds, and Tisha will come up with a voice. You speak to it, it speaks at you, and it'll come to you with a 1 or 2 minute calming session, either a set of affirmations that it asks you to repeat, the voice asks you to repeat, and or I love a meditation. So when I ask Tisha, I may say, I just had a big trade. I'm feeling overconfident. Calm me down. Give me a meditation to calm me down. And it'll give you a 1 or 2 minute meditation to calm you down and get you back into focus. Because the problem with traders is at what I call at the moment that the trading plan tells you to do something, but your emotion tells you to do something else. And if you can't win that decision, if your trading plan doesn't win that decision, you're not going to get very far in trading. So here's an aid. It's like having a caddy at the when you're a golfer. Golfers are constantly, even I think all golfers will always give their caddy the kind of credit that they deserve, because during the really tough shots, they'll consult with their caddy. I mean, they're professionals. They know Tiger Woods knows how to hit the ball. But the problem is that when you're in a stressful situation and the ball is in the rough, and I know you've done it before, but you have thoughts, you go to your caddy. Well, this is your caddy when it comes to trading. You just tell it what you want, what you're feeling, and it will calm you down and over time it will get to know you. It'll get to know. I ask it actually to call me by name when it gives me a meditation. So you can play with it. You can be specific with it. But once you tell it what to do, you can either type it in and press send, or you can speak to it and it will respond to you. But this is the most advanced tool on the market for mental and emotional. I mean, listen, it's okay to journal, but that's after the fact. It's not at the moment of decision. Now you have an aid at the moment of decision. And once you're done with your meditation, you just reduce it. It's there for you for the next situation that may come up. So let's take a look at, I want to show you the copper chart. I don't see anybody really, we probably have mostly stock people here today. So I don't see a lot of action when it comes to commodity chart. But I do want to show you something, and I was hoping that that Fausto had a copper chart for you. Let's look at the copper. I think I can show it to you here. Yeah, this is a daily chart. Now I want to. This is listen. That big lottery ticket, $1 billion. I'm always looking for a chart that could really take me home for the year. You're looking at a chart right now. This is the daily copper chart that I believe could take you home for the year. This could, wherever you are in your, whatever you've struggled with or whatever you've lost this year, if you happen to be a losing day trader, you can get it back and more if I'm right about this. And I'll show you why. I'm not going to call this generational, or generational money they talk about, or no, but there's something here I want to show you. Let me just show it to you. I'm just drawing this line, and you can see how important this particular resistance is over the last year. This happened back in February. The original high. You've had 2, 3 tests. The most recent one was last week. I'm going to draw another line. Let's see if I can draw it quickly for you. Let's use the ray. I'm just going to. It's not perfect, but that's fairly perfect. So what you're looking here is this triangle type formation, a flag type formation. Or I guess they call it a pennant, depending on what country you're from. But you're looking at a gigantic flag pennant type formation. Okay. Now, you kind of want these things to come to a little bit more of a point. So I'm looking over them, I'm following this formation, and I'd like to see it accumulate a little bit further to the right. And this is a bullish formation. Now, if I'm looking for stories, and I think that Fausto is correct, right? I was asking him about the situation with the war. Believes that the war play is over, and I believe that we're probably not going to be bombing anybody with intensity soon. But I do know that we've run out of a lot of munitions, and I do know that that we're going to be producing them, and I know that Ukraine has just asked us for 5% of our missiles. So I'm looking for a story just so so that keeps me on top of this chart. I'm going to act based on what I see in the chart, but it makes sense to me to see a possible breakout here. Okay, maybe I'm telling myself a story, but there's a reason to look at this chart, and there's a reason to believe that although this is a big formation, and others would argue with me, I know that that Sunny, who is a terrific technician, she always has an issue with, not always, but the last time that we've presented together has an issue with my definition of a head and shoulders top or bottom. We always have our little nuances, but we know what we're looking at in our interpretation, and we know what a breakout and breakdown means in our interpretation. So I'm really glad you had Sunny on. Those Sunny bands, they're terrific. If you didn't see that, you may want to look at the I'm sure she was showing her Sunny bands. You may want to look at the replay of this, but of this event. But this kind of a formation, if we break out, and the thing about resistances like this is that you can't, if you keep knocking on the door, you keep on knocking the door at 800 gold and 1500 gold, you're going to eventually one of those is going to break out. And because now all the professionals are shorting at this level because they're looking at this, there's got to be some sort of a top here that has a reasonable has a reason for it. In other words, I remember back in the when copper was trading not at $6, but at $1.50, they told you if it went over $1.60, you can melt down your pennies. You're better off melting your pennies. It was worth more than a penny. And that level held for years and years till it broke out. There's something going on with supply or demand or something that keeps this at this level. But when it breaks, and it will break sometime in our lifetime, I think it may be very shortly. And if it does, you're going to see the possibility of a real movement higher, and not just any movement. We could see a movement from what we're looking at, $6 or close to $7, $6.80 a pound to $10 or $12. The kind of move that you saw in gold and silver recently. The metals are capable of that. And copper is capable of that because it's affinity to war and so on and so forth. So this, I didn't want to go away without showing you what I'm looking at in a very grand sense. Now, of course, I'm not just buying for the heck of it. I'm waiting for something in the shorter term to let me know it's going to happen. But I'm also looking for runs like this during the period of time of accumulation. You can see how normally the movements down are more exciting than the movements up. And I think that one of the things that I look for are the move. Here's a long movement down that was encapsulated just in a much shorter move up. So when you see that kind of reversal, I think you're seeing a sense of what I may be looking at. I wanted to give you that link to, and again, once I think I'm overthinking and I want to focus again on the chart, I just go back to the Tisha AI, and I say, hey, I'm getting overconfident. Give me focus. So if you go to Tisha-AI.com, if you can throw that in there, Tisha-AI.com, you're going to come to this page, and you'll be able to. And we're talking about $67 a month. This is at the founders type rate. So for $67 and a guarantee, I think you're going to love this because you don't have to admit your mental and emotional issues to anybody anymore. You can just admit it to Tisha, who's got a beautiful voice, because it's the voice of my wife, who has been helping traders with the mental and emotional issue for years, for over 30 years alongside me. Well, since 2000, in the disciplined trader effort that we've made. I used to run, I ran one of the largest option trading rooms in the world back in the 80s, and I used to bring Tisha in to help with traders with calming them down in meditations when certain reports were coming out. In any event, we are the best at it, and what we did was we literally uploaded all of her work into the AI component, so that you're just not getting a response from ChatGPT. You're getting the help and the result of calming thousands of traders over time, and the way that it works to get you in focus, literally within minutes, because none of the sessions that Tisha delivers is going to be longer than 2 or 3 minutes, because you want to get back to your market. So TishaAI.com, Tisha-AI.com, you can see it right here. Just give it a try. $67 a month. You can cancel anytime. It's got the guarantee. I wanted to give that to you. And again, when you're done, again, it's a voice. You ask it what you want, responds with a nice meditation, or even an EFT session. We'll get into that, but we teach you about that also. All right, we're getting close to, we've got about 6 minutes. I don't see, I guess we have, hey, Harry. You meditating, Harry? I guess you're
No, I'm here.
Yeah, what do you do for the mental and emotional part of your trading? I know that you're a pretty focused guy. I'm into the mental and emotional part, and the importance of it. And I've just come out with this Tisha AI that I think was going to revolutionize it. It actually helps you at the moment that you have to decide, where your trading plan tells you to do something, but your emotions are saying, hey, maybe I should wait just a little bit longer, or maybe I shouldn't do it. I just lost a few trades. At that moment, I call it the moment. And when that moment happens, how you make it happen. So that's
Norman, it's all about preparation, focus, and discipline. And I'm doing this many, many years. And when I see something and I want to do it, boom, I'm aggressive. You have to be aggressive, but you have to play with stops. You cannot be a trader if you don't use stops, period. And it's not there.
Well, why is it that most traders, no matter what it is, I've never met a trading plan purveyor who has where the majority of their people are winning because they can't follow what they're being asked to follow.
Well, let's put it this way, Norm. I have people in my room 10, 15, even 25 years. So if there's been with me that long, they got to be successful. If they're losers, they wouldn't be here that long.
No, listen, I understand that, and I this is a tool. Somebody asked me to demonstrate this, so let me demonstrate it real fast for you. If I say, let's say I've been waiting for a trade, and I'm starting to make up trades in my head. I'm going to and I'm feeling like I'm pushing it. So I'm going to click on. You may not be able to hear this. This is why I don't demonstrate it here. You may not be able to hear it because the volume won't come through the computer. But let me show you how it works. I'm going to click on speak. Boy, I'm feeling very anxious right now. I'm losing my patience. Can you calm me down and help me be patient? Now, I just clicked on stop, and you can see here where the coach is responding. Right now, it is, you can see what I said right here. Boy, I'm feeling very anxious right now. I'm going to turn up my volume here just in case you can hear some of it, just to demonstrate it for you. This is the first time I'm using it today, so it can take 30 seconds to respond. But what will happen is that it will respond with either giving me affirmations to calm me down, or it'll give me a meditation of 1 or 2 minutes that'll ask me to just calm myself and so on. But it's something really here at the moment of action. So let's wait till she responds here. Should be any second.
In the meantime, Norman, if you're disciplined and focused and you listen to what I say, I tell them what to buy. I tell them where the targets are. I tell them where the stops are, and just do what I tell you, and you'll make money in 75% of the time.
Yeah, I mean, listen. Hang on 1 second. Here we go.
To calm yourself and bring back patience. Follow along and repeat the phrases out loud or silently as we move through the tapping points. Take one slow breath in.
Sounds like Sunny.
Out. Side of the hand.
Okay, it's giving you an EFT session, which is something that we explain what it is, but you can see that it's responding with something to calm people down at the moment of decision. I mean, even in trading rooms, I've noticed, and I've been in many trading rooms, you tell people to do something and they don't do it. They're carrying the baggage. They won't last very long for sure, but here is a tool that they can use right then and there that can get them to do the right thing at the right time. I mean, you can tell people to journal, but that's at the end of the day, and you're reviewing and you make statements that you'll be better tomorrow, but it doesn't happen. This is why most traders are losing. You know that 85, 90, 95% of traders lose, Harry. Why do you think they lose?
Because they're undisciplined, unprepared, and they have no focus. One or all of those three.
That's right, and that all goes under the mental. That's all goes under trading discipline. So I'm really glad somebody with the same kind of experience that I have in the decades agree with me. I mean, listen, it gets frustrating to show people how to add up the edges. Listen, there's a lot of ways to promote the market. Fausto was just before us. He talked about volume. He looks at where the volume is, where the players are making their big plays. I look at formations. You look at other things. But there are a lot of different ways to be successful in the market. But unless you can control yourself to do the thing, nothing is going to happen. So in any event, David was kind enough to put the link in there. I just love being Harry's warm-up act because I think we got it in the right order. So, Harry, take it away, my friend.
Okay, we'll do. Well, first of all, let me share some stuff. David, you let me know when I can take over.
Oh, okay. Thanks, Norman.
You're welcome.
And yeah, Harry, you should be able to share now and get set up, and you get to close out the day for us. So, thank you for being here.
Right, I think you already see you should be seeing the front page of my site. Is that correct?
Yes. Yeah, I see it.
Okay. Well, that's me, Harry Boxer, and this is me, Harry Boxer. A little less formal. Folks, my service has been around since 2001, and we just had a 25th anniversary. And as I said, I have hundreds of people with me every day, sometimes more than that are very seasoned traders. People stay with me because they make money. I'm a big believer in pattern recognition. 1 5-minute charts for day trades and longer time frames for swing trades. We do both day and swing trades in our room. I've been doing this a long time. I wrote a book called Profitable Day in Swing Trading, and in layman's terms, because I think some books out there are so complicated, people get confused pretty quickly. And they also say that a couple months in my room is like 2 years in a training class. And also, I'm available to everybody on an hourly basis, of course at a charge, but one-on-one if you ever had a problem. So what I want to do today is get started, because this is a analyze your chart session. And before I do that, I want to bring up my charts. Let me find out where that is. Hang on a second. Where is it? Trying to find the share, David. I don't see it in front of me.
Might help if
Oh, there it is. I think I found it.
Sorry, I just turned it off for you. Sometimes it's easier if you just turn it off and then reshare from scratch.
Okay, you should be seeing my charts.
It's loading, and yeah, I see it now.
Okay, folks, do me a favor. Put up your symbols in the chat. Be glad to analyze your trade for you and give you a complete detail. We'll start off with Isaac wants to know about Sanmina. And you can see on a daily basis, it's one of those electronic components, tech stocks that had a big move. In the last few years, obviously went from the mid-40s to almost 300. And then this little head and shoulder appeared. It broke down. And guess what's happening now? An inverse head and shoulders. So what this needs to do, Isaac, is get it back up here. There's price and moving average resistance right about 222. Once you see that, I'm looking at 250, 270, and maybe back up to 290. Right now, it's in a better configuration. I don't like when the stock moves up and the volume is low and the technicals are flat. So it's not giving me a lot of credence, a lot of hope that this is the best stock to pick. If you're in it, though, you want to be aware of where the trend is and what it looks like. Also, keep aware that there's a massive declining tops line that it just took out slightly. Doesn't mean it's broken out yet. Technically, I would say it hasn't. Until I see this over 222 at volume, which breaks out above price and moving average, and then I get to your targets, you got to be really careful with this one that it doesn't roll over. That's my take. Okay. We have some more questions on PVH from Sam. That's Phillips Van Houston, the shirt manufacturer. Yep. Interesting, a long-term chart, big multi-month base with the double top there, 100. When it reached there, it obviously plunged with a lot of the other stocks when the market did, and now it has a double bottom there, 69.70. So you draw your lines off both, you know where your resistance and support is. Subsequently, it moved up into the 90 range from 70 or 69. Nice move, and now it's pulled back to the moving average. I'm not crazy about the technicals on this either. There's so many better looking charts out there for me. But for now, I would have to say, draw your line right here. And do not let it go below that. See that red line, the 50-day? That's at 80. I would stop under 80, and I know you're close. But if it breaks here, it can come down to the low to mid 70s again. This is not one of my favorite charts. Is it terrible? No. But like I said, if you're in it, you have a problem. If you're not and you're looking to go into it, support is right there. You can take a shot with a tight stop. But Ricardo, he wants to know about Lunar. Because he's a lunatic, right? All right, so the stock, fantastic chart, one of those aerospace stocks that had a great year. In the long term, 1, 2, 3, 4, 5-way Elliott wave move, finally peaking out all the way up here at the 46.7 range. Plunged, and I mean plunged, from 46 to 11. Now, everybody likes some of these stocks. I like other ones better. But if you're looking at the pattern on this, it's a multiple 1, 2, 3, 4, 5-wave Elliott wave decline. Usually after a 5th wave, an Elliott wave, and a reversal, it's a good buy. I do like the fact that only one day in the last 2 weeks has the stock even been down. And in particular today, if they're coming down to the moving average, a beautiful engulfing reversal for it. Let's take a look at a 1 minute time frame. Look at the day this one had. Spike City and closing well. I would have to say there's a little bit of resistance overhead at the declining 50-day moving average, just about 1888. You get through that, you're looking at 23.4. So this one looks pretty good to me. Notice the volume increasing and unbalanced volume doing well. I like the look of this overall. I would stick with that one. On ES, utility, EverSource. Obviously, it may be an energy supplier to the data centers, I think. You have a long-term channel that looks like this. With a break in between here that spiked down in April of 25, like most stocks. At this point, it's had a pretty strong move, and it's moved into the resistance zone. And in order for this to get going anywhere, you got to take out, I believe, 77. Correct, 76, 6.5. Your next target would be 80. This is not a big mover or a big beta. Underlying technicals look just okay. Again, it's a quality type utility, I believe. But there's a ton, I mean a ton, of resistance right there. Let's go back, way back there. Here's your weekly. So if it gets through here, you may see 80, 82, and then you might see 88, 90. But for now, it's stuck underneath resistance, and you need to monitor that closely. And with all these lows in here, You can't afford to let this thing go under there. Stop is under 66. And lastly, RTY. This is the correct, really, this is an ETF for Riot. Well, I'm not sure what this is exactly, but let me tell you this. Terrible day today. Brutal. All-time lows. It looks like one of those stocks that could do a reverse split. You better be careful. This is really brutal. I wouldn't be get close to the stock until it breaks out over about 1040. Once you do that, then you look at a 1080, 11 and a quarter, 11 and a half, etc. But this has got to reverse. It's really, really poor, a very poor chart. And for George Fee, URNN. Uranium miners ETF. Well, after a massive, again, Elliott wave, that's 5 waves. 1, 2, 3, 4, 5. When you see a 5th wave blow out like that with volume to the top of a channel, always sell it. Always sell it. You never know how far they're going to take it, but you never know how far down it can correct. And look at this. Now we're in a very distinct down channel, aren't we? It didn't move above the 50, which I think is positive. Volume is just okay, and the technicals are not wowing me. If it does make a move, it could move into the mid-60s. But for now, it's going to have to take out 50, 56, and 58. There's a zone between 56 here and 58 that has to be taken out for this thing to turn around. I want stocks in uptrends, not downtrends. I don't bottom pick. I wait for them to break out. This one hasn't broken out yet. And as a matter of fact, today's turn down may indicate it's already reached resistance. You're going to do some retesting. So be careful with that one. Got it, George? Now, do I like gold and silver? I've hated them all year, but I'm starting to think they're in new uptrends. Of course, take a look. This has a massive 1, 2, 3, 4, 5, 1, 2, 3, 5 wave long-term move. And so the GDX go from 34 to 117.18. Big move. It broke. It snapped back to resistance. It created what we call a kiss back. Started a new downtrend. All of the golds and silvers look like this. But last week, something happened. And there's a breakaway gap here, a big one, which took it out above the declining tops line, lateral price resistance, and your 50. Had a 2-day stall and broke out again. It's a little extended short term. And I told all my people, I want gold and silver to give me a little entry opportunity by pulling back down for me, some sort of consolidation flag retest, and maybe even having to fill that first gap. So let's look to see if maybe we can get this down around 80, 84, 85 down here for an entry. And then the target is $100. Okay, so you want to spy that? Yes, I got it. Well, look, the spy is, look, I've been doing this, folks, for 60 years since I'm a teenager. And I can tell you that when I see a pattern like this and everybody's bearish, I'm bullish. The reason I was bullish, simply this: until a stock breaks down or an index breaks down, you're looking at a big bullish consolidation coil. You had a huge move up. The market had a chance to break. They couldn't do it. And now they're broken out and formed a little pennant. And today, that pennant broke out. So for me, I think we're going to 8,000, 8,250, something like that. We'll see. Could be a head fake and they can drop them tomorrow. But as long as the trend is up, the trend is your friend. And there's the channel top. And there's your channel bottom. I'm looking for at least, let's call it 70, around 7,900, give or take 20 points. Then if it accelerates or blows out, 82, 82.50. Now that equates obviously to 790. and 822. You got that? That's for Ricardo. Ricardo, you guys, you and anybody else who sees my work should at least come into my room for free for 2 weeks. No credit card. Just sign up and enjoy the ride. Okay, ASYS. Now, this is also a perfect, guys, you can't ignore Elliott wave. I mean, it's a 1, 2, 3, 4, 5-way move. And what did it do up here? It formed some spiky hidden shoulder type rounding top. Here's a breakdown. Here's a snapback that failed. Here's a further breakdown. What would I do with this stock? Nothing. If you're long this stock, you should have been out of it with a stop loss when it broke here. Now, you could have waited for the trend line to break. But you can see that's broken, and this is a bear wedge. I'm not saying with all the tech stocks, software stocks, semiconductor stocks firming up that this can't go higher. But look at the underlying technicals. The unbalanced volume has been steadily lower. It's being sold. I wouldn't touch this with a 10-foot pole until I see 19 with volume. 19 with volume gets me 23, 24 and above. Until then, another stock that after 5 waves up, from the top, broke down, and now has a bear wedge. Not pretty. I'm going to do it for George again, the SLV for silver. Now it's the same thing or similar to gold. When I saw this, what I would call multi-week blow-off, that saw SLV alone go from 44 to 109.83, basically nearly tripling, and then had this big reversal bar followed by a gap down and a plunge. I told everybody in my room, short the first bounce. So we shorted the bounce there and it rolled over. This is a 1, 2, 3, 4, and this is a 1, 2, 3, 4, 5. So this is the fifth of a fifth, and that's why I was bullish or turning bullish on SLV, but I wanted to see it break out. It did that exactly this week. Where can it go? Well, first of all, you got lateral price resistance, you got a gap, and you got a declining top line, all coming in at 63.4. That's where I think it can go, but it may have to back off first and form some sort of flag. If it holds 57, then you got a shot at a trade to 63.4. If it breaks through that, then you got a trade up to 70. For now, it's a promising turnaround, and so is AGQ, the other ETF for silver that I follow. AGQ is ProShares and SLV is iShares, but they're the same thing. So let's go to the small caps. They're having a good time right now. Look at this chart. Yes, it's a 1, 2, 3, 4, and an Elliott wave, fifth wave, but it doesn't look done yet. For me, the juxtaposition of all these lines up here, around 318 to 22, is where I think this could be headed, depending on the market, of course. But I love the fact that it's been 6 weeks in a coil, held support, popped out of the little pennant, and today made a new high. Didn't hold it, but this one looks great. I think the small caps are headed higher. Anybody else with a question on any or a symbol? Throw them out there, folks. Sienna for Isaac again. First of all, Sienna's a monster. It's one of those old tech stocks. Sienna's switches and networks and stuff like that. Back in 25 a year and 4 or 5 months ago, this is 50. They ran this sucker to 637, 11-fold or more. So it finally came down, got a little cheaper. It did break out yesterday. Watch this. I believe that was earnings, right? Volume's picking up a little bit. This looks okay, but it's got a ton of resistance right here. So my target on it, short term, would be around 490.95. That means 50 points. So if it takes out today's high at 462, you may have like 30, 35 points on it. I also like the fact that it's a very distinct inverse head and shoulders. Reverse. Check out the hourly. Left shoulder, head, right shoulder, breakout, retest. Yeah, I think this goes to at least 487. That looks pretty good. With a stop under 424. Simple as that, folks. Here's your hourly chart downtrend in Sienna, but the inverse head and shoulders is broken out. And it did it with some volume. Not overly impressive, but I like the look of this. Yeah, Paul, I use this is the Elliott wave. I use the standard Fibonacci measure moves and various other charts, but I don't like. I'm a big believer in keep it simple. Okay, I'm a big believer in price action. I look for technicals to confirm or not confirm a price trend. When the technicals are doing well and the stock's going up, that's fine. When they're not, I have a problem. Okay, Paul, please review FN and AZ. Will do. So in Fabrinet, obviously a beautiful rising channel, which also broke. Take a look at these peaks. There's your resistance and target. About 640. In other words, it can go 70 points more from here, but it's not a powerful move. It looks like it price moves. Underlying technicals and volume just are great. What I would think about, first of all, there's a test and a retest, and there's a gap right there. So you don't want it to drop from 570 to 510. It's 60 points. What do you do with something like that? You drill down to an hourly chart, and that's what you come up with. Then draw your trend lines. Take a look at what the current price action is telling you. This here represents a multi-hour flag and a bull flag. For me, it might be a 1, 2, 3, 4, 5, but it doesn't look like it volume-wise or technically. Again, the target is 635.40 up here. And I would say stop at a 548.50. 548.50 gets me out. It's vulnerable back down to 500, 510 if it cracks the moving average and the short-term trend line. Support in there, resistance there, target up there. And let's look at AZ. Oh, that's interesting. A to Z custom made to mates. Interesting. I don't think I've ever heard of this stock. Here's your daily chart. It's a nice base pattern. Look at all the resistance up here. There's your support. It's in a trading range between 5 and 880. Today's action is stellar. Very nice action. One more look at the hourly. Note this declining top line broken. Note the run up to 8.75. Resistance is about 875.80, and it's had a long run already. I would be careful in this one, Paul, because from 523 to 830, it's like 60% in about a month. And this is not that kind of stock. I don't think it's got a big beta. Well, maybe it does because of the swings. But I'd be really careful up here at 8.75 where there's a double, triple top. Now, on a daily chart, should he get through, and you got a shot at 11. Yeah, even 11.75. So I like this in general. Excuse me. And today was a good day for it. Let's see if we can get through resistance, though. SALQF. It's none of my systems, probably foreign, right? Can't give you anything, sorry. Oh, there it is. No, that's a good one, but it's a cheapie. Very cheap. 25 cents to $1.30. I'd say that's a pretty good percentage move. The all-time high, 365. When you're in a stock like that, just pay attention to the bottoms. Each bottom represents a stopping point, potentially. If you want to put a tight stop, it's right there at about 94 cents. This also could be a little left shoulder, head right shoulder. You got to be careful. Might be forming a topping pattern, but it doesn't feel like it. It's always a tough call with these penny stocks. XE. Energy's had a big reversal. Here's your hourly chart. Always go to hourly to give you a different perspective. You can see where resistance is. It's had a nice recovery, 1360 at 24. It may have some more life left. As long as the channel is intact, you might see it wrap up for some more. Target, I would say 27. Got that? 27 target. Ricardo wants to know about Uber. Well, let's see something. So Uber had that nice run, got up to 100. And then it came down hard into the 60s. Making lower lows here, here, and here. Never like when I see that. Doesn't mean it's over. What I want to see, though, if you see Uber over Uber 80, then my target would be 88. There's resistance there. Again, not a great looking chart, but it could be a base. It's forming some nice action in here. Should it break 80, you might see a really good squeeze or short run that takes it to the 88 area. Anybody else with a question on any chart, any symbol, please throw it up there. Now let me start with Isaac Ever first. Isaac's the same thing. We had a triple bottom, exploded, imploded. When I say imploded, it came right down to test the breakout point, fill that gap. From there, 17.5 to 28. But what's up here? Heavy duty resistance. Looks like a 1-2 at 3-4. Provided it holds this angle that I'm drawing down. And takes out 28. You can look for 32, 33. In long term, the target's 50. But this is a nice overall pattern, a little choppy in here. Better than most of them that you showed me. Let's check out the ETF for sugar. See, the first thing I do, folks, I draw lines across the bottoms and tops, see where resistance is. Guess where we're at? We're at a resistance. Was this in a big downtrend? 15 to 9 is big enough. Now, this is in no man's land, meaning it's just above the declining top line, but it's also below the lateral price resistance. That was a big selling climax right there. I do like the fact that this took out this wedge It popped. But right now, it's critical level for it. It targets are 1145 and 1265. Promising? Yeah, but it hasn't really broken out yet. For Cardo again, NUE, the big NUE is the big steel company. Beautiful chart. My good friend has a ton of this in his retirement plan. It's gone from a low of under 100 to 275. That's an all-time high, I believe. Yep, by far. So 1, 2, 3, 4, 5. Pull back, nominal rehab. This, I wouldn't say dangerous, but I would say vulnerable. I think the extension target could be 300. I would take profits up there. Let's not forget it went from 100 to 300 if that's the case. And it did it in a little over a year for a steel company. Think about it. The earnings are good. This is a great company, well managed. But I like this chart. Why not? Nice little pennant. It's going higher. 300 might be a place to peel back a little. Costco. Everybody knows that one. Costco made a nominal new high, I believe, on the earnings report. They came right down. The long-term trend line is impeccable. Here's a weekly. If you look at this, best retail company in the world beyond everybody, including Walmart. Anyway, here's a stock that went from 40 to 1,000 something in, it took 10 years. Bottom line is, though, it hasn't gotten nowhere for the last year and a half. It's been consolidating. It's a huge run. If this ever breaks out above here, and we're looking at 1,200 and maybe 1,400. The stock to stick with, apparently. And the Qs. Well, same thing here. We can adjust this that way. And there's your actual trend. Right now, my target's 788. 55 points from here. First, obviously, we have to take out 748. That's target number one. Why? Well, it's the all-time high. If we do that, we're probably in a blow-up stage. And we can quickly move up towards 788. That's my target, George, for QQQ. And it looks like we're done. I don't see any other questions, and it's past a half hour here that was given. Anybody have any late questions? No other symbols, aside from Ricardo and George. You two guys belong in my room. All right, folks, that's it. This is HB Harry Boxer from thetechtrader.com. Please join me for free, along with all my members, by just signing up. If you go to join for free up here by my website, click on that, and you'll see a page where you can sign up, put all your information in, and come join the party. By the way, FYI, nobody works harder than me. I'm up at 3:34 in the morning. I'm on my site for 2-3 hours before the market opens, going over tons of charts, picking out my focus list. I publish a focus list every day. I also put out probably 3 to 5 trades, sometimes in the morning, sometimes none. But by the end of the time the day's over, you'll usually have 8 to 10 picks, and the vast majority of them work very well. Here's an example of the stock that worked best for us today. It's called FGI. Nobody ever heard of this, neither did I. But check this out. In the morning we came in, it exploded. We put a buy on it right there. It pulled back. I told people to add. It then ran up from 6 to 9 and change, pulled back to 7, and went nonstop to 20 nearly. 1993. 5 waves up. I told everybody to sell their positions. Everybody. You can see where it is now. That's the kind of work we do at detecttrader.com. So please come join me there. Let's have some fun and make some money. For now, this is Harry Boxer wishing you well. Thanks for joining me. I'll talk to you guys soon. And look forward to seeing you in my trading room. Bye now.
All right. Thanks, Harry.
You're welcome.
Thank you for closing out the day for us again here. We had some tech issues today, so there's not as many people here as normal. But otherwise, we had a good day here.
Excellent. All right. Well, thank you, David. I'll see you soon. Bye,
All right.
everybody.
Thanks, Harry. Yeah, so we had 11 sessions today, and the whole event was live streamed to YouTube. So you can review the entire unedited day at any time, and then I am working on processing the recordings, and I will post those to the Timing Research YouTube. The Timing Research website itself is still down. Hopefully that will be fixed soon. Yeah, I've been been publishing these events on Timing Research for 12 years now, and of course there's occasional disruptions, but nothing like this. So this is a first, and it just happened to fall on an event day. So anyway, that's how it goes. But oh, thank you, George. Yeah, so let me just tell you, the next big thing that we're really excited about is our annual Fibonacci and Elliott Wave event. And that will be September 8th, 9th, and 10th this year. And yeah, that's always a special event. It's always a very exciting topic, and everyone loves that. And we have a good. I have about half of the schedule filled out so far. Some of the top Fibonacci and Elliott Wave people are scheduled, and I'll be releasing more info about that soon. But so that's about 26 days away. So yeah, look, be sure to mark your calendars for that. Also, okay, my normal calendar link, of course, is not working because of the site being down, but let me get the other link. This one should work. Okay. All right, if you hit that, you can actually add Ricardo asks where to learn more about the Elliott Wave and Fibonacci event. Yeah, I'll be releasing more info soon. If you want to bookmark, well, like I said, the site's down. So if you just stay subscribed to Timing Research. Well, here, let me give you such a hassle. Like I said, over a decade of doing this and never had a disruption this long. So, but if you are not sure if you're subscribed to the main Timing Research newsletter, you can subscribe on the Timing Research Substack, or again, hit that calendar link or subscribe to Timing Research on YouTube. Or you can also just email me at any time at news@TimingResearch.com. And yeah, like I said, I will be releasing more info about the Elliott Wave event soon. Actually, I do already have the Zoom room set up, I think. Hold on. Yeah. Okay. Yeah, so normally I have all my links very carefully organized, but they all go through the Timing Research site. But yeah, if you hit that link, you can register for the Fibonacci and Elliott Wave event to make sure that you get all the updates. And yeah, like I said, it's almost a month away, so I don't have everything finalized yet, but I do have, like I said, about half the schedule filled, and so some of the top Fibonacci and Elliott Wave people will be on that. And like I said, we've done that for several years now, and it's always really fun. It's a great topic, and it's very interesting to see all the different perspectives on that one one strategy or one type of analysis. And sometimes I have I have someone on to play the devil's advocate side and talk about why they um sometimes don't like Fibonacci, or and then also this year I haven't worked this out for sure, but I would like a couple people on, and like I said, I'm trying to work this out, but so like GAN analysis, for example, is not directly Fibonacci related, but is often used with Fibonacci. So I might have one or two people on to talk about that, or possibly some other strategies that are good things to go with Fibonacci, but not directly related. So I'm trying to work that out right now. But like I said, just stay on board with the newsletter, and I'll be releasing more info soon. So, all right, that's it for today. Oh, I can also tell you, if you enjoyed today's event, our next AYT event will be on sorry, hold on a second. On October 8th. So about I think we're going to go back to doing these every other month, alternating with the synergy traders, the big 3-day events. So yeah, so one in October and then sometime in December. So I was trying to do these every month, but it's just too much. But I also, if you're new to Timing Research, every Monday for the last 12 years, I've hosted a panel discussion also on Timing Research. And several of, well, almost everyone from today is on the panel discussion regularly. So that's Monday at 4 p.m. Eastern time. And when the site is working, you can just go to TimingResearch.com and get into the room immediately every Monday. So, like I said, so yeah, hopefully the website will start working again within the next few hours, and we'll have the normal archive for today, and then of course the archive will be on YouTube as well. So, all right, I think that's it. Any other questions or anything? Like I said, if you have any questions or feedback or anything, you can simply email me at news@TimingResearch.com. And all right, that's it for today's AYT event. Thanks, everyone.